Good morning. We welcome you all to our today's seminar on income tax, GST and customs shaping India's future. We are pleased to have with us today Sri R. Srinivasan Naik, Chief Commissioner of CGST and Central Excise, Kolkata Zone, Central Board of Indirect Taxes and Customs, Department of Revenue, Ministry of Finance, Government of India. I request the dignitaries of the opening session to please be on the dais. Mr. Vivek Jalan, Chairperson, National Fiscal Affairs and Taxation Committee, the Bengal Chamber of Commerce and Industry and Partner, Tax Connect Advisory Services LLP, and our guest of honor of today, Mr. Srinivasan Naik, Chief Commissioner of CGST. I request Mr. Jalan to please deliver the welcome address and take the session forward.
Thank you, Sharbani, and good morning, Honorable Shri R. Srinivas Naik, sir, Honorable Principal Chief Commissioner, CGST and Central Excise, Kolkata, CBIC, Department of Revenue, Ministry of Finance, Government of India. On stage, Shri Shishir Sinha, Senior Journalist and Associate Editor, Hindustan Business Line. Mr. Mayur Agarwal, Chairman, Eastern Region Council of Chartered Accountants, in absentia. Ladies and gentlemen, welcome to this seminar on income tax, GST, and customs shaping India's future, organized by the National Fiscal Affairs and Taxation Committee of the Bengal Chamber of Commerce in India and Industry. We name our seminar as Income Tax, GST and Customs Shaping India's Future because as we all know that 75% approximately of the government of India's revenue or receipts that comes from these three revenue streams, income tax, GST and customs. If you see the budget of 2026, you'll see in the budgeted estimates around 36 lakh crores is the government of India's entire collection, and out of that around 27 lakh crores is from income tax, GST and customs. So we all over here, as we meet, I think this annual seminar, now this is the 4th or 5th edition of this annual seminar over here. So we all are actually trying to shape India's future. From the National Fiscal Affairs and Taxation Committee of Bengal Chamber of Commerce and Industry, it is our endeavor to increase the trade or business to government engagements so that we can facilitate this. Friends, we thank Honorable Chief Commissioner, sir, for attending this seminar. Just as he takes charge in GST, he has addressed us as Principal Chief Commissioner of Customs. We also thank Honorable Commissioner of SGST, Shri Khalid Azaz Anwar, in absentia, who would be taking the valedictory session. He has also just again taken charge as the Honorable SGST Commissioner in West Bengal. We thank Mr. Sinha, Mr. Mayur Agarwal and others. We have a list of dignitaries from industry as well as the consulting space, where we will all discuss intricate issues in GST, customs and income tax during the day. We also thank all of you from the trade and industry space in the eastern part of the country for attending this seminar and for your enthusiastic participation. We would seek that this full day seminar be as engaging as possible so that we can take more and more issues and recommendations of trade before the government. Over the last many years, generally, and the last 2 years specifically, the National Fiscal Affairs and Taxation Committee of Bengal Chamber has tried to engage very closely with the government at all levels, the center government, the state government, not only in West Bengal, but other state governments in India also. We are now taking every year a delegation of our committee to the Commissioner SGST. It's an annual event now. We are taking a delegation before the Honorable Principal Chief Commissioner CGST also. Sir, during this year, we would seek your time also to bring a delegation from our committee to you to discuss on the issues in GST. We are engaging very closely with the Customs Authority also with the Income Tax Authority. In fact, Honorable PCCIT ma'am also had squarely accepted our invitation from the CBDT also, but they are regularly, as you all know, the new Income Tax Act is also in effect from 1st April 2026. They are continuously organizing. Last week we attended their seminar on Prarambh, and again today also they have a seminar on Prarambh. I think most of our committee members who are there and other trade members, you have got invites from the Bengal Chamber to attend that income tax seminar on Prarambh. We are regularly engaging with the government at the Kartavya Bhavan, with the CBDT, CBIC, and also with the state governments, as we said. We have achieved major successes, friends, in the policy advocacy space in GST, customs, and income tax. To cite down a few, I had represented before this or the August gathering last, I think in July or August, when we had this kind of our annual seminar, that we from Bengal Chamber had represented before the Honorable Finance Minister and the CBIC on rationalizing of the customs duty on purchase of capital goods for manufacturing of lithium ion batteries for EVs and battery storage. And that policy, recommendation of ours saw light of day in the budget of 2025. We are happy that to announce that just 3-4 days back again, the Ministry of Renewable Energy, through whom we went to the Ministry of Finance for this rationalization of customs duty rate, they have again approached us as they see us as partners in this policy space. They now want to consolidate, they are seeking to advocate on the consolidation of the customs duty exemption, that 2002 notification for lithium ion battery manufacturing, the capital goods which are required in mobiles as well as in the EV manufacturing and the battery storage space. So we would recommend on that also. Way back, just as the Honorable Finance Minister on 13th of February 2025 had placed the Income Tax 2025 bill, we from the Bengal Chamber had recommended on the deletion of this clause, the erstwhile clause 263(1)(9). What that clause was, you will not get it in the current Income Tax Act 2025. That clause could be squarely read in a way to be interpreted that had you filed your income tax return delayed by even 1 day, you would not get the income tax refund. Now, if you see the current Income Tax Act 2025, 263(1)(a)(9), that clause is not there. That has been deleted from the Income Tax Act 2025 on the recommendation of from our chamber as well as other chambers also. In November 2024, I think many of you would have attended a webinar just as invoice management facility system had seen dawn. We had a webinar with the GST network, the ADC, who were pivotal in implementing this invoice management system. And we had recommended in that webinar that this restriction of not allowing the credit note to be pending, that is actually will create a lot of operational hardships. And in November 2025, you would have all seen that now in the invoice management system, the credit note can also be kept pending for 1 month, and it gives a consequential operational relief to all taxpayers. On 30th of March 2026, that saw the enactment of the Finance Act 2026, and with that, the deletion of section 13(8)(b) of IGST Act. Few of our members, they had approached us. They were providing certain services of intermediaries to foreign clients, and they were charging 18% GST, and which was making them uncompetitive globally. So we had recommended, we had followed up with the CBIC and the GST Council, and on 30th of March 2026, that clause 13(8)(b) of IGST Act, that is deleted, and now the intermediaries, their services would not attract 18% GST, it would be considered as export. In September 2025, we saw GST 2.0, right, being unveiled by the Honorable Finance Minister of India, and in that many of our recommendations were accepted. I also thank the Grievance Redressal Committee in West Bengal, sir, chaired by the Honorable Principal Chief Commissioner and the CCT, for taking our recommendations. So there we had recommended that there was a confusion in the GST rate of drones. So the drones with a camera, integrated camera, that was 18%, a drone without an integrated camera, that was 5%. So this created lots of dispute between the authorities and the taxpayers, and we recommended that there should be one rate, and in GST 2.0, now all drones, they would be taxed at 5% only. In fact, few drones supplied to the Indian Army, that would also be exempt. Last year, when we had this annual seminar, I had also represented before this August gathering that we are representing before the GST Council to bring clarity whether a GST commercial credit note issued for post-sale discount, whether that can be considered as a service rendered by the recipient of the credit note, and now by issuance of this circular 251, even that has been clarified. Friends, there are many other recommendations which we have made from the Bengal Chamber, and it is a work in progress. Therefore, during the day, we would request all of you to also come out with more recommendations. Last year again, in this meet, I remember one of our members had also recommended and requested the CBIC to come out again with a settlement of disputes scheme in service tax and central excise. We had recommended before the CBIC, even in customs it was recommended by us. But again, friends, this much I can assure you, I was talking to Honorable Principal Chief Commissioner sir also, that all the recommendations which trade and industry are making, they are deliberated minutely at the CBIC Ministry of Finance level. Some see light of day, some see light of day after a point of time. Before the CBDT also, last year we were at the Kartavya Bhavan, and we had recommended on many of the issues in the new Income Tax Act. I would be taking you through all our recommendations in my deliberations later during the day. One of it, of course, is to bring out a master circular in the income tax, under the Income Tax Act 2025, clarifying which earlier circulars in Income Tax Act 1961, they continue to apply in Income Tax Act 2025 space. Many others are there which we'll discuss during the day. Friends, we in West Bengal also have a new political dispensation, as we all are aware. And from day one, as we have a new political dispensation from Bengal Chamber of Commerce and Industry, we have started representing before the state government, and also many of our secretariat and council members, they are in Delhi, and we are regularly representing on the expected new West Bengal industrial policy. In this space, our major recommendation to the state government is, as is the vision of the Honorable Finance Minister, to reduce this east and west divide. Friends, we all know in India the north and south divide, there is not so much of gap as is the divide between east and west. And Honorable Prime Minister himself had said that east now needs to also be a partner in national building if India has to grow at the 7 to 8% rate of GDP. In that, since this initial deliberation of mine also covers our recommendations for the new West Bengal industrial policy, I would take you through few of the representations which we have made. First, as it is in West Bengal, the GCC space is growing organically at 25% per annum without any policy support, so to say, or very little policy support. So we are recommending from the Bengal Chamber on this GCC space, because Bengal is a destination for, a normal destination for GCC. So in GCC and IT policy, if some headway can be made. We have represented on the development of infrastructure between Haldia and Calcutta. Sir, it is our view that in case Haldia in West Bengal can be made, so to say, a Gurugram of West Bengal, right? So, and to create an infrastructure so that between Calcutta and Haldia today it takes 3 hours, it gets reduced to 1 hour, and this infrastructure development happens, and consequently industry development happens. Haldia to be also developed further into a major chemical hub, a hyperscaler shop, improvement in the Haldia port, and to designate Haldia more as an industrial hub. On the ease of doing business, we have recommended on this industrial policy that the licenses that should be deemed to be approved, if not approved in 1 or 2 months, just like other states. So we know that most of the industries, they require more ease of doing business to set up shop in the state. So on that front also we have represented urban decongestion and infrastructure fast tracking, specifically Calcutta, which will be the engine of growth for West Bengal. Inland waterways development, Sundarbans development. Friends, from Bengal Chamber of Commerce and Industry, we are doing a lot of work in the Sundarbans in plantation of mangroves, which is a huge, a push for the government of India as far as the carbon credits space is concerned. So that also creates a lot of employment in that area. So there also we have recommended for Sundarbans development, and of course to the best extent possible for the new incentive scheme in our West Bengal industrial policy. So over the day, we would also seek your recommendations on these initiatives and these which we can put before the center and state governments on taxation as well as the industrial policy, and we would try our best from Bengal Chamber of Commerce and Industry, National Fiscal Affairs and Taxation Committee, that the voice of trade and industry in Bengal is taken to the government at all levels. With this, I thank you all again. I thank the dignitaries again for attending this seminar, and I wish you all an entire day of learning and active engagement. Thank you very much for attending again, and over to Sharbani.
Thank you. I now request our guest of honor today, Mr. Shri R. Srinivasan Naik, sir, Chief Commissioner of CGST and Central Excise Kolkata Zone, to please address us.
Sri Vivek Jalan, Chairperson National Fiscal Affairs and Taxation Committee, Bengal Chamber of Commerce, distinguished guests from the industry, trade, and ladies and gentlemen, good morning to all of you. So it's a privilege to be in the middle of this gathering to discuss shaping India's future through GST. You are aware, Bengal Chamber of Commerce is a very, very old institution representing industry and trade. It has played a significant role in providing a platform between the trade and the government. I compliment Bengal Chamber of Commerce and Industry for providing this platform and bringing all the industry leaders different professionals, manufacturers, importers, exporters to this platform. So I have been asked to discuss about challenges and expectations from taxpayers. You are aware that GST was implemented in 2017. So now we are going to celebrate the 9th year anniversary. And when it was to be implemented, we all wanted that GST to address the long-standing structural inefficiencies in indirect taxation. Those days it was central excise, service tax, and then from state side it was sale tax, and many other, more than a dozen, other taxes. So there were multiple taxes in central government and state government. Then cascading effect of different taxes, the fragmented type of complaints from the traders, and very, very painful barriers between different states through check nakas and all those things. So this has created a kind of increased transaction cost, and the trader has become very, very incompetitive among themselves and globally also. Now, after implementation of GST, the whole landscape has been changed. Today, the goods are moving much faster. The lines, the queues of transporters on the state borders is no more there. The logistic cost has come down. Supply chain has become very, very efficient. Tax compliance has become increasingly technology driven, which is in fact may not be convenient for the old generation people, for the younger generation people. So this is certainly very, very easy. Then the economy started becoming formal. So the taxpayer base has also increased. So those people who are in informal type of economy, not able to get the credits and not able to comply with the tax liabilities and all, so they have all come to the formal economy. Most importantly, the GST has provided one platform. So it has become one nation, one tax, and one market. So I hope you all agree with that. So I have seen people coming to us and telling that before implementation of GST, they used to have a number of warehouses across the country, because the tax rates, sale tax particularly, was different in different states. In some states it was 4%, in some other state it is 10%. So if they want to sell and compete with their other traders, so they have to make calculations. So which state it is going, and then how much is the central state tax and the local taxes, and also keep warehouses to keep their material so that so they could deliver at the earliest. As now it has become one nation one tax, so how much is the tax in Rajasthan and how much is the tax in Maharashtra. It is all one. So 50% is shared by central government and 50% is shared by state government. So this has this reform is not just a tax reform. It was also a economic transformation project. So it was such a massive tax structural reform. So not only in India, but worldwide, such a reform has never happened in such a magnitude. So when it was, the migration was taking place from central excise, service tax, sale tax, and many other taxes to GST, the number of registrants who were migrated was almost 65 lakhs. And instantly, about 12 lakh people had to take registration to come into the tax net. So when we started GST nationwide, it was about 77 or 80 lakh tax payers registered. And continuously you will see the economy is getting formalized, and more and more people are coming to the tax net, and they are they want to comply with the taxes. Tax base is increasing, tax collections are increasing. So that way, in this journey, GST has emerged as a very, very powerful enabler for the economy. It has improved transparency, reduced the cascading effect of taxation. Input tax credit across the value chain has encouraged efficiency and tax neutrality. Digital return filing and e-invoicing have improved compliance and reduced human interfaces. So unlike earlier days, the Inspector Raj, what we were discussing, the officers' presence in the factories and in your premises, all those things have gone. Most of the things you don't have to go to GST office or SGST office. When you compare with the earlier days, I think your visits would have come down by 90% at least. Unless you get a shoka notice where so you have to give a reply. Even those replies can also be given digitally, but some people prefer to go to the office to submit their replies and all. Otherwise, most of it is all digital now. It has created a GST ecosystem. It is largest digital ecosystem in the world. That way, if you see, GSTN, the network across the country, so many taxpayers. In fact, if you see the invoices, I was told every month 3 crores of invoices are generated, and similar number of e-way bills, and matching of all those invoices when the returns are filed. So such a ecosystem is possible with so this type of GSTN only. So worldwide, I don't think anywhere such a large system of reconciling is there. This digital architecture is not only helping the government in revenue collection, but also creating a trust and predictability in the tax system. So many of you may not be aware, this digital system is using artificial intelligence. A risk profiling is done. If any taxpayer is not regular, then we keep getting alerts from ARM, means analytics and risk management system is there. So if those people who are credible, they are subjected to less audits. So you are aware that, so periodically our offices are going to your premises for auditing and all. So the frequency is actually decided by our risk profiling. If somebody is not good, then he is subjected to more auditing and more scrutiny. So some people are audited, once in 2 years, once in 3 years. Some people are audited only once in 5 years. If you see our coverage in audit is only 20 to 25%, not more than that. So 75% of the people are actually not subjected to audit. So these 25% people are also, evaluated by risk management system. And then only, so the list is coming from Delhi. It is not that, so the Calcutta officers are deciding on their own. So it is not like that. So you would have heard in customs also risk management system is there. Only those people who are credible are facilitated. The people who keep doing the mistakes and keep receiving shoka notices and all, they are subjected to more of, examination, physical examination of their goods, and then, scrutiny and all such things. So the taxpayer who are trustworthy, compliant in all respects, so they are given, some value. So we have to respect them, because they, in spite of some people, some unscrupulous people who misuse the system and then do the fake invoicing, then fake ITC credits. So these type of things, in fact, create are creating threats for the people who are doing genuine business. So there is no level playing field in the business. So we have to acknowledge the role of the genuine industry and trade. And because of these people only, the GST is successful. The compliance is not merely complying, paying the taxes and, complying with the statutory obligations. It's also complying. It's also contribution to the national economy and development. At the same time, we have to recognize that the industry also have some challenges during the transition and evolution of GST. So there may be some delays. So there may be some technological glitches, issues related to inverted taxes, tax credits and all such things. Unless these things are pointed out, if feedback is given to the department, they will not be addressed. So Bengal Chamber of Commerce and Industry is taking up the cause of industry time to time. There are many issues, not only in this type of forums, otherwise also they are coming to us, and they are raising the issues. And we are, though after implementation of GST, not in a position to immediately give you any relief. You are aware that GST council is there as far as tax procedures and then policies and tax rates are concerned. Only council is taking the decision. We are only implementing the decisions taken by council. But wherever there is a issue, so we, on your behalf, also send it to CBAC, and CBAC takes it up with the council. So as we look ahead, the future of GST must focus on two important things. One is ease of doing business and trust-based compliance. So you are aware, 2-3 years back, even Prime Minister also acknowledged in different forums that India's ranking in ease of doing business has improved from 144 to 66. Though this rank is also not so good worldwide when you see, but there was a substantial improvement in our ranking. And these ranks are released by World Bank once in 2 years. And there are many things, which are taken into consideration when they give the ranking. One is when the industry is going to banks, so how much time they are taking, and the ease of taking the loans, acquisition of procurement of land, getting electricity connection, then payment of taxes, like that. There are several elements in that. So out of that, customs, I can proudly say that the customs and GST, the initiatives taken up has helped in the ease of doing business. So there are several digital initiatives being taken up, in both customs and GST. Internally also, in addition to GST and developments, we are also taking up, local initiatives for helping the trade. So in case of any difficulties and all, unless you give us the feedback, we will not be able to take up, and then, address those issues. So I have already discussed about trust-based compliance. I request all the industry and trade to ensure that, their tax returns are accurate and they don't make, mistakes. More mistakes they make, so more possibility is there of getting audited. So the similar thing is there in customs. So when it comes to industry, West Bengal historically has been a major center for industry, trade, intellectual leadership. It is serving, as a gateway for more than 10 states and 2 nations. Up to 60s, 70s, I think, Calcutta was on the top as far as industry is concerned. So I came from Chennai. I was in Chennai for 7.5 years. So I worked mostly in customs, but, for few months in GST also. What the difference I have seen there is that whatever schemes of, customs and GST, may it be direct port delivery, direct port entry, or AEO scheme, all are, where bonded warehouses, mover scheme, all those things are more utilized in Chennai than in Calcutta. So the Calcutta somehow trade is not coming forward. So these are the schemes, meant for the trade. So unless you come and utilize these benefits, so you will not be able to enjoy the fruits of it. So anybody has any difficulty in understanding about it, so they can come to our office. So we are organizing outreach programs through trade associations like Bengal Chamber of Commerce. You can also directly come to our office. So don't use these forums only for, addressing the grievances. Whenever there are grievances, about the delays or not attending by the officers or any other matter, so you have to come forward, send a mail. You don't have to come to office. So we have help center in every office, but, the footfall is very, very minimal. Very few people come. So last week, I attended one forum like this, mostly attended by chartered accountants. And there, people mostly raised issues related to Section 73, 74, getting SHOKA notices for, 5 years. And though their company was subjected to audit, scrutiny, all kind of things in those 5 years. And then there were complaints about, harassments and then other things also. So few gentlemen, so I told them that to come to office and then, give to us in writing. But surprisingly, they don't come forward. So don't use these forums for this. Our offices are always open. So you are requested to come to the office or send an email. And you don't have to worry about your identity. Identity will not be revealed. We have, many things like CP grams are there. CP grams is very popular. People are in fact, airing their grievances in that. It is being monitored, at the highest level, even PM also. Only the abstract goes there. Otherwise, our chairman also takes a very, frequent meeting on these grievances. So the grievances have to be, addressed within 15 days. Generally, our average is not 15 days. Our average is just 4 to 5 days only. We are addressing all the issues. So otherwise also, we have, other means, you can send a mail. So whoever is giving to us, it is being monitored. It is not that, if I don't address it, then, my boss is monitoring that. So I keep looking at, so all the, these help centers and all these places, how many people are coming, but very, very less. So we have, grievance meetings, jointly with SGST. It is a quarterly meeting. There also I was told, the attendance is very, very less. So number of points raised are very less. So next week we are keeping a meeting with Commissioner SGST of Sikkim. The last quarter there was no agenda point. Nobody has raised any agenda point. So next with the West Bengal government we are going to have a meeting in the first week of June. So if you have issues, please raise it. So I may not be in a position to immediately, address those issues. At least, I can, on your behalf, I can take it up with CBIC. So sometime it will be addressed and it will be addressed. There is no doubt about it. Because they generally see whether any regional, whether it is a regional difficulty, disparities are there. So they also see whether the same issue is there in other states. Then certainly they will address it. So it's not that, so they will simply ignore it. So I am confident that, through this type of continuous dialogue between government officers and industry, we can build a tax ecosystem that supports growth, innovation, and national development. Before I conclude, I once again compliment Bengal Chamber of Commerce and Industry for organizing this important discussion on customs, GST, and income tax. I thank all the members of trade for their contribution for this economic progress and continued partnership in strengthening our tax collections through GST framework. So once again, I thank you everyone for giving me this opportunity. Thank you.
Thank you, sir, for this enlightening address. Sir, you spoke on many points, and we do understand that the task of the government is not enviable, because you have to keep a balance between those people who are wanting to game the system and take them to task, and also the genuine taxpayers, that they should not be burdened. Their burdens should be eased. Sir, you spoke about the future of GST, two pillars of future of GST, ease of doing business and trust-based business, trust-based mechanisms. Also, the difference between Chennai and Kolkata, and you rightly said, sir, we have addressed this before our members many times. I understand the mover scheme in West Bengal, there are only 2 or 3. AEO EMI scheme, we are also going to take the next session on these schemes and try to create more of the visibility. Sir, before we take some questions, I also have one question, but 2 things I would tell you from our experience in the National Fiscal Affairs and Taxation Committee, and I didn't know about it. Yesterday I came to know about it, sir. First is, sir, one of our members of our committee, he told us yesterday that he had an issue on customs and GST. Actually, there was an issue in customs, went to GST department, and he was told that the file is with the Honorable Chief Commissioner. And he went to you, sir. Sir, you don't know it, but he told me that Honorable Chief Commissioner, sir, himself has taken the initiative of trying to locate the file And we all know what happens when Chief Commissioner sir locates the files, and he himself has taken that initiative, and now that machinery downstream also is working, and so I would say, amongst all the issues raised, this a huge round of applause for sir. Another thing is, sir, this Sunday itself, you had held this Sundays on Wheels. You would see on Bengal Chambers, social media platforms also we have tagged. The Chambers tax committee members, they were felicitated. Trade was felicitated as being one of the most important stakeholders. This is a far, traverse journey from the days maybe 15 years or 20 years back, where taxpayers did not want to go to the department in fear. And now government is felicitating trade. So having said that, sir, I have one question or point, and then, our trade members can also raise the questions if any. Sir, the first stage appellate authority and the advance ruling authority, sir. Of course, this is not maybe a local issue. This is more of an policy issue which will, of course, represent. Sir, most of the cases, I think out of 100, 95% or 90% of the cases, it is seen that, it is dispensed of or disposed of in favor of the revenue. So this mechanism, we would request, and in case we seek your views on how this can be addressed, so that there is a balance. We are not saying to, pass orders which are taxpayer centric, but to have a balance and to take into account the merits of the case, sir.
First, I want to comment on the remarks made by Mr. Vivek Jalan. Now, those days have gone that, the officers see the traders as evaders of duty. So with my experience in the department is that, 99% of the taxpayers want to comply. They want to pay the tax. Anyway, indirect tax is not coming from their pocket. First they pay it and they collect from the customers. It's an indirect tax, isn't it? So some point of time it may be going to, it may be, paid by me or paid by you. So for a trader, it is only collecting and paying. So they don't want to. What they want is only certainty, how much is the tax. It may be 5%, it may be 10%. So generally they are not very much worried about the tax rate also. Whatever tax is there, so they should know. They should not get a shoka notice or a demand, at a later date, suddenly, because at that point of time, he will not be able to collect it from his customer. It is actually supposed to go to the customer, not for the trader, isn't it? So there has to be certainty. So I at least feel that, after GST, you know that, how much is the tax rate. And since it is in the initial stages, there are some frequent changes, of course, as you see, a lot of hue and cry that, bread attracts something, bread with muska attracts, some duty. So all these things are, raised, and, some efforts were made to correct all these tax rates. Okay. So those days have gone, so we don't see you as, at the same time, the trade also, they should not see the officers as adversaries. Unfortunately, everybody, they always see the officer as if, so he will just, come and do something wrong for them, So it's not like that. If there is something wrong, so you have to point out, and, the inspector is not listening, you please take it up with an assistant commissioner. If the assistant commissioner is not in a position to help you, take it up with the higher authorities, and people will listen to you. It's not that. So he was mentioning some incident. One Mr. Sharma, he was a chartered accountant, and he came with his customer, and he went to custom house, and it was an issue related to IGST refund, where he has taken the refund, but he should not have actually taken it. So the customs cannot demand the, IGST taken by the exporter. So they had written a letter to GST in the month of March. When he went to customs, the officer, maybe he is not a good officer, so he said that, we have written a letter, so we have written there, you please go there. So it would have been better, had he given a copy that this is the letter we have given, so you go and, talk to GST what they are doing. So we found the letter. Anyway, so I informed Mr. Sharma also that, so here we'll see, what can be done. Okay. So the things are, not that opaque, like earlier days. Things are more or less transparent, but you should know where to go. Okay. In case of any difficulty, you can come to our office, you can talk to us, mail us, you can, call us. So we'll respond to your query. Okay. And coming to your appeal, now generally the allegations are that the officers are high-handed. They want to always decide, in the favor of the department. They don't consider the arguments put forward, by the tax payer. So they don't listen to them, and they want to just simply confirm, whatever Shoka noted, they want to confirm. So anyway, so once it is confirmed, since it is a Kashi judicial authority, but if the same person doing the same thing, repeatedly, you have every right to take it up with the senior officers. But a Kashi judicial order passed always goes to the appeal. Then there is appellate forum. Earlier, GST tribunal was not there, and Calcutta has already inaugurated the tribunal bench. And Calcutta, I was told, is the first bench to be inaugurated. The last Saturday, Mr. Vivek Jalan was also present in that function. So now all those cases pending before tribunal, so they will all be now heard. They've already started the hearing. So yesterday I met the member, so they have already started giving the hearing. Now coming to the advance ruling, this is also one mechanism which is not being very much used in Calcutta. I have seen, in Chennai it's much better. So wherever you have a doubt about a new, business you want to start, you don't know, there may be a difference, that, whether it is a 5% or 18%, you have a doubt. Just to file an application before advance authority. Advance authority, whatever ruling is given, it is binding on the department as well as the taxpayer. So thereafter, once they say that it is it's 18%, then you have to pay 18%. Okay. So I am myself and the Commissioner SGST are appellate authority in the advance ruling. So we keep getting about 3-4 cases in a month.
Right. There is no allegation, sir. I mean, it was just something, an observation, which of course every system can be improved. Yeah, any member, any person, yeah, at the back. We'll restrict it to 3 questions. So, yeah.
Good morning, sir. I am Priyanka and I am from Bamalorian Company Limited. It's a PSU under Ministry of Petroleum and Natural Gas. Sir, basically we have a request from you. Sir, we keep getting amnesty schemes for GST and other taxes. But sir, if we could have any amnesty scheme for the erstwhile taxes like excise, service tax, that would be of great benefit to us. Because sir, we have lot of pending cases. I mean, there are many companies which has lots of pending cases, and we would really like to settle those cases under the amnesty scheme. So sir, if anything could be done in that.
Yeah, you have already, he has already mentioned it, but if you alone take it up, it will not happen. So more people have to ask for it. That is how democracy works, So I request, Bengal Chamber of Commerce to take it up.
We'll take it up.
So if there are issues, people want to, settle the cases, nothing like that, so it's a welcome thing.
Yeah, and also, sir, they are old cases, and, I think government also wants to move on. We have represented last year. Will represent again on this, sir.
Thank you,
They
sir.
are also under Ministry of Petroleum and Natural Gas, so through your ministry also you can send a representation.
Okay, sir. Thank you, sir.
Yeah.
Hello. Yeah, it is regarding a hotel industry. A hotel industry, there are certain rooms they are selling below 7,500, and that was subject to a tax rate of GST rate of 12% or like that. But when the restaurant they serve food, they are charging 5%. But instead they exceed the tariff for maybe for a 1 day, but the GL category is below 7,500. And after that, they will be charging 18%. So what the GST officers and other places they do, because if they exceed for a 1 day, a New Year's Day or say the hotel industry are facing trouble, and they are exceed, they are charging. They told my client to make 18% on all the from the where they started the food bill instead of 5%. So how can we address this?
Theoretically, see, it's a transaction based. If you are charging 7,500 or less tax. More than that, it is more tax, isn't it? So it should be transaction based. So it cannot be once you exceed, then so you have to continue to pay it. Because the officers are always see, with a suspicion, no, that so wherever you are charging less than 7,500, they think that you are manipulating. Is actually the bills are there. So any Shoka notice is issued to you?
Shoka notice is issued to us in respect of 4 or 5 hotels, places, and my client has gone for...
no, that is wrong. He cannot ask for other transactions where the rate was less than 7,500 rupees.
I'll, sir, tell you, we had represented on this also, and to an extent, this has been, considered by the council. Sir, earlier, what happened, I think before 2024 it was rectified to an extent. Earlier, the issue was that if a hotel, if he sells the room, even for 1 day in a whole year, at more than 7,500, his restaurants had to pay tax at 18%. So now in 2024, I think from 1st April, they have changed it that, okay, in the last year, if you have sold any room more than 7,500, so from this year, you start paying more than that 18%. So that has brought certainty, but he's talking about the earlier periods when this law was there. That has created a hardship, sir. So we'll represent again. I think sir can, this is a policy decision actually.
Anyway, rates are all decided by GST Council, you are aware. Okay, so more the tax rates like this, genuine people have the difficulty because some people like to manipulate it, that is the problem.
Because they cannot sell the restaurant bill at 5% and they are not looking for credit on that.
Right.
They have not collected 18% from the clients.
That is what sir was saying. Okay. The problem is, sir, earlier if it is collected. But now if it is not collected, then one has to pay out of one's own pocket. So that is the issue. Yeah. Any other question? Anybody? So as sir was saying, we have many problems, but we don't raise it. Please raise your questions if you have any problem. Or sir will think that GST has no issues. Right. I'll, sir, end with just one thing which we'll raise before Honorable CCT also in the evening. Actually, there is again, this is a policy issue, sir, which might be you when you interact with the board and council. This is relating to registration, sir. Now, say EPC contractor, the rule in GST is section 22. It says you have to take a registration in every state from where you are providing your service. Now, say, sir, EPC contractor, his HO is in Mumbai, Maharashtra. He gets a contract from Indian Railway and he in West Bengal. He comes with all his supplies, does all the contract work, and all his engineers go away. So he does not need to take registration in West Bengal. But that AMC is also given to that EPC contractor. Now, for AMC also, engineers will come from Maharashtra, do the services and go back to Maharashtra. But they keep some small toolkits, etc. in West Bengal, which is not a permanent place of business. Now, this is a confusion that whether they need registration in Bengal just because they have a tool room, etc. So here this registration, whether to take or not to take, and if one has to take registration, then it becomes a huge compliance burden, sir.
Yeah, that is true. Point of supply rules are there. No?
Yeah, but they are all leading to that whether there is a permanent place of business. Now again there is an ambiguity. I might say I have a toolkit room, although my tools are there regularly, but it's not my permanent. The Indian Railway, they are only taking care. They have given me a small room where my tools are kept. But specifically the state government officers, it's not more with center. Generally state officers, they say, no, you have tool room over here, so you have a permanent place of business out here. So please take registration. Same thing came up with the e-commerce operators. So they were asking for virtual offices, etc. So this issue, this is a policy issue, of course. Whenever we'll also represent officially in case this can be taken up at the council level, sir.
True, these type of issues are there in the field level. Every state would like to have more revenues, and the officer wants to earn more for the state. So that is why so they are a bit greedy that so wherever there is a chance so they want to take the tax. So this needs to be clarified because so many states are there. Different states may be interpreting in a different way. So if you raise it, I think they will give the clarification.
That's it. We will send a representation on this. So, okay, one last question, because we are running out of time. So,
Yeah, hi sir. Myself Kunal Jain sir. So this is more relating to sir disclosure requirement. What happens these days? We get the income tax e-assessments. So we generally have a faceless assessments. So more of our data are being reported from customs, GSTs, and more of a sites, and is being shared with the income tax department. So generally, in case of imports, what we do, sir, we bring the imports, bring into our factory. So we generally files 2 bill of entries, sir. One is for warehousing, and then we get the cleared the goods, then we file the export bill of entries. So we file 2 bill of entries at the customs side. So whenever there is a reporting from the customs side to the GST tax department, they says that the importer, just like assessee, has bring goods twice times. So they generally calculate that same bill of entry couple of times. So they generally send us the report saying that you have imported X amount. Say suppose I have imported $100 and the report is as $200. So our reporting that's double, and every time we have to explain that this might be the double counting of the cases. So basis of the faceless assessment, we have been facing these issues for last couple of years. So there is a difference of almost double the amount. We being the largest, one of the major importers, so that values generally seems to be quite high. So these reporting portals are how to report it to the income tax department so that these discrepancies don't come with the assessees also, sir.
We have this arrangement of sharing the data.
Yes, sir.
So unfortunately, you are filing a warehouse bill of entry and ex-bond bill of entry. The goods are same.
Yeah,
Only the thing is once for filing, for sending the goods into warehouse, the ones to take out the goods from warehouse, so you have to file the documents. So it is showing twice.
Yes.
So we'll have to give we have to tell them that is only the way.
No, so we generally tell them, sir, this is this is our assumption, but most of the times they are also not able to share the data, that what data are flowing to them. So they are not able to share with us also. So they generally share the n number of data and say just get it reconciled. So being a small amount, we can do it away, but being a large importer, says it runs into billions of dollars. So that would create a very this tricky situation if in case he doesn't understand and add that amount. That would be a great risk, sir. So that reporting, sir, just to update and get it based file on export bill of entry itself.
No, I think GST is not picking up.
CBIC.
CBIC is not picking up
Customs.
this issue.
Customs is reporting to income tax.
From custom server,
It's
the
going-
data is sent to income tax.
So based
Income
on our,
tax is thinking that, so he has done so much of volume, whereas
Yeah.
he is only doing 50% actually.
yeah, so that has
So
been
it is
quite
a CBDT issue, I think.
more of a
Because
customs or
they are-
matlab reporting portal
No,
issue.
there is no issue from customs because they have to maintain the data, they are maintaining the data. So income tax is asking, so they are giving the data. So now, so you'll have to tell them that, it is being shown twice.
Yeah, that is fine. But just saying that if reporting can be improved, then that discrepancy
See,
will
what
get reduced,
happens
sir.
there that, if you delete, warehousing data, then, the deletion is not possible. First thing is that, every data has to be captured. How you interpret, that is more important. So when the goods are going into warehouse, how can you delete, unless the last unit of the imported goods is cleared, so it cannot be deleted. Okay, and then unless all the goods are cleared from, by ex-bonding and also, everything has to be recorded, it's only record.
I think this has to be done at the CBDT level, sir. When they are
have to do
issuing,
some kind of
हाँ,
filtering,
They have to do on the basis of invoice number.
So just suggestion, कि whenever matlab importer files an export of bill of entries, that report, that data should be shared with the income tax department to reconcile by the SSC.
He wants that the custom people to filter and give it to them so that income tax
Oh,
doesn't ask.
customs, yeah, we can always
That is a suggestion, sir, merely of a suggestion. That
I mean,
data
you
sharing
know the
is-
system, sir, so we can represent to both CBDT and CBIC on this. This is a unique issue actually. This has come for the first time.
the issue, sir, actually. That keeps on repeating every year.
Right, let us consider this. Sir may not have immediate because this is a fully technical issue. But as sir is right that bill of entries have to be reported twice. There was an issue in GST on this where GST department was asking for GST twice. So that has been resolved in schedule 3 that it would be considered as no supply. But this is a fully technical issue. We'll pick it up and represent. Right. So, thank you very much, sir, for taking out time from your busy schedule. We know you have just taken charge in GST also, so, you are taking up matters as they come, and you have clarified a lot of issues, and more important, sir, you have motivated us all to regularly raise our issues and recommendations before the department, and I'm sure the industry here across eastern region they are listening, and we would seek your support going ahead in future such seminars also. Thank you very much again.
Thank you, sir, for joining us today and for your insightful deliberations. Now we have a pleasant task to perform. I request the chairperson of the National Fiscal Affairs and Taxation Committee, Mr. Vivek Jalan, to please felicitate sir and present a memento on behalf of the chamber. Yes. Thank you. I request all the delegates to please be seated. We will proceed towards the next session. On the Institute of Chartered Accountants vision on the financial taxation in the financial year 26-27. I request the chairperson of EIRC of the Institute of Chartered Accountants of India, CA Mayur Agarwal, to please address us.
So, very good morning to each one of you. I've been asked to talk about the Institute of Chartered Accountants of India and our vision on the income tax, on the taxation basically 2026-27. So I'll start. I've been asked to talk for 10 minutes, so I'll distribute in two phases. First 5 minutes I'll be talking about the Institute of Chartered Accountants of India, and next 5 minutes I'll talk on the taxation aspect. Way back in 1949, the Institute of Chartered Accountants of India was set up by Act of Parliament even before India became republic. And for last 77 years, we have been working hand in hand with the government of India and other regulators as partners in nation building. In the words of former President of India, Sri APJ Abdul Kalam, who has mentioned that chartered accountants are partners in nation building. While we are partners in nation building, in last 8 decades, as the country has changed, as we are targeting to be the developed nation by 2047, the profession has also changed, and so has the Institute of Chartered Accountants of India. But one thing which has remained rock solid is our examination patterns, our disciplinary mechanism. In last 77 years, friends, every year institute conducts various examinations, foundation, inter, final, but never ever there has been lapses with respect to leakage of question paper and others. In fact, in a recent judgment, the Supreme Court of India has advised some professional body that if you want to learn to conduct examination, learn it from the Institute of Chartered Accountants of India. Currently, ICI is the world's largest accounting body, but we take pride not only in numbers, we take pride in the quality which we are adding to the industry and business of today's. We take pride in becoming the partners to the nation, partners to the industry and business. And chambers like this, BCCI, I would like to compliment Vivek ji and other members of the committee to bring in conferences like this where trade, commerce, industry and regulator come together, discuss, clarify things and take forward. These type of conferences are actually very, very important. On the taxation aspect, I'll come. But when I'm talking about the Institute of Chartered Accountants of India, while India is growing, we are taking lead in things across the world. ICI is not behind. There was a time that ICI was following the rules made by IFAC, International Financial Body. The developed nations, the accounting body of the developed nations were framing standards and ICI was following, but times have changed. In last 1 decade, there are a lot of things which ICAI, the Indian Chartered Accountants have initiated and the world is following now. I'll talk about 3-4 instances. Forensic accounting standard, ICAI is the only body in the world till now who has come up with the forensic accounting standards. And we are working with 5 accounting body of the world to implement it in their country. If we talk about UDIN, it is now more than 8 years that UDIN is a reality and is helping the businesses and industry at large. But then ICI was the first body to implement ICI across the world. Then other bodies in India and other professional bodies across the world have started implementing UDIN in their respective country. In 2020, ICI had come up with a AQMM concept, which is audit quality maturity model. So at times it is told that audit and firms maturity is subjective, but we have come up with a model where quality of audit can be judged in numerical terms. And now it has been made mandatory for the listed company in phased manner. Auditors of the listed company, it has been made mandated. Now gradually in phased manner, it will be de-escalated to other audits also. And again, ICI is the only body in the world to come up with AQMM. We are working with 7 accounting body of the world to implement it in their countries. Next is DCMM. Today's time, without technology, without use of AI, nothing will move ahead. And there comes the digital competency maturity model. So again, we have come up with a digital competency maturity model where a firm can assess their digital competency. Next thing which is now coming up, which we are targeting to launch on 1st July, is global competency maturity model. When the Prime Minister of the country calls that there should be a Indian Big Four firm, when the Prime Minister of country calls that there should be an Indian firms who should lead the accounting all over the world, it is very, very important, being the largest accounting body of the world, to come up with tools which helps the Indian firms to assess and judge how competent the Indian firm is. For that, we are coming up with global competence maturity model. I've been asked to talk about our vision on taxation. Though I am not a tax person, but ICI has been working regularly on each and every aspect. Today in the today's seminar, we are talking about income tax, we are talking about GST, we are talking about customs. For GST, when GST came in 2017, on 1st July 2017, GST was implemented. On that particular day, ICI had 500 faculties across the country who were taking sessions, doing awareness on GST, and this has been appraised by the none other than Prime Minister of the country. He has wrote thrice to ICI, congratulating and giving his gratitude for helping the government of India to implement GST across the country. Today also, ICI is doing the training of GST officials across the country pro bono. In fact, the traveling, staying cost of the faculties are also being borne by the country, by the Institute of Chartered Accountants of India. If we talk about the new Income Tax Act, since when the Honorable Finance Minister has announced in her budget speech that will be coming up with a new Income Tax Act, we have been submitting a representation, a detailed representation to the Finance Ministry, that what all, how the new act should look about, what all redundant provisions should go away from the new act. Then the draft of the bill came. We had done a nationwide consultation among our members, and then post the draft has come, we have submitted our representation to the ministry. Then the bill was sent to the select committee for their assessment, for their comments. The ICI were called thrice by the select committee to give our views on different aspects of the Income Tax Act. And today the act is reality. We have been again doing lot of campaign across the country to make members and fraternity at large aware about the new act. Honorable Commissioner Sir was mentioning during his speech that till 60s and 70s, Bengal was leading in the industrial development, and Bengal was a leading industrial hub. It is the time, I believe, that each and every one of us, be it industry, be it professionals, be it common citizen, be it regulator, we should come together. The other day, SGST Commissioner Sir, Khalid Sir was there in our program along with Nair Sir. Khalid Sir has made a call that let us all unite our efforts towards the development of the state of West Bengal. And I would also urge, let us all collaborate and reascertain that there will be a time that someone will come at this podium and talk that again Bengal is a leading industrial hub of the country. Once again, thank you for having me. Happy learning. Thanks a lot.
Thank you, Mr. Agarwal. I request Mr. Aditya Jain from UAL Industries and Mr. Sanjay Kabra from Kimji Hamsre, members from the National Fiscal Affairs and Taxation Committee, to please be on the dais and present mementos to Mr. Agarwal. Thank you. We will now proceed towards the next, our technical sessions. The first technical session is on GST and Income Tax Act. I request the chairperson of the National Fiscal Affairs and Taxation Committee to please be on the dais and take the session forward.
Okay. Good afternoon once again. So, you see, I have a presentation on the key issues across GST, customs, and income tax, and we will start at the go. So first of all, Honorable Chief Commissioner Sir, was also, stating, and from Bengal Chamber we had also attended the inauguration ceremony of the GST Appellate Tribunal Kolkata bench, right? You can see the pictures over there, and you see, as Mayur was saying, now, Kolkata, of course, will take, West Bengal may take some more time to regain its industrialization to the extent it was there. But here we are first, right? Kolkata bench of the GST 80 was the first bench to be formally of the GST 80 in India to be formally inaugurated by the Honorable President himself, Honorable Vice President, and two other members, technical member and one judicial member, honorable members, they were there. And already from 19th, right, it was inaugurated, I think, on the 16th Saturday, and 19th, the hearings have started at the Kolkata bench. The cause list was out on the 18th, right? So 19th and 20th cause lists are there. You can go to the GST portal also. More than 40 applications, they have already passed the initial scrutiny of the registrar, and they are ready to be heard. Friends, I think some of you may have attended the January 2026 program by the Bengal Chamber of Commerce, where we invited Honorable President GST 80 from Delhi, and he was there for the whole day on 17th of January, right? Also the GST network officials who were instrumental in building this technical capabilities of the GST 80 filing system, they were there. One thing is concerning, almost it is expected that 2 lakh appeals across India, that is expected to be filed before the GST 80 on day 1, right? And as of now, if you go to the GST 80 portal, around 8,000 appeals have been filed, right? So 1,92,000 appeals approximately is to be filed, and we have 40 days. One can understand the pressures on the portal and whether the portal would be able to handle that pressure or not. Of course, there are talks. There were some media articles I was seeing that this date may be extended. But friends, while of course we can, we can consider those media reports. However, let me tell you, you would all be knowing that the GST 80 can condone the delays of late filing only by 3 months. So on day 1, that is 1st July 2026, in case the appeals are not filed or not condoned, or this date does not get extended, then all the appeals which have arisen at least till 31st of December or thereafter, those appeals say which have arisen in March 2026 or earlier, they all may run the risk of getting time barred. And when we say, so this is the screenshot of the GST 80 portal, and you can see over there the cause list is there. This is Kolkata bench's cause list. I have circled 2 areas in red, if you can see on your screen. Now you see the name of the authorized representative is missing. And if you see the name of the parties, it is Atanu Mandal versus proprietor, right? Avni Oxford, etc. So friends, this brings us to my next topic. Even after these glitches, even after these errors, these appeals have been accepted, right? There are many glitches in the GST 80 portal. However, there is an order dated 20th of January 2026, which has been extended till 31st of December 2026. That all these issues, this minor technical glitches that will all be considered by the registrars, right? And the appeals would not be considered as defective due to these kind of technical glitches. So, now one chartered accountant, one of our, one of my friends, he came to me and told, see, my AR name is not coming, right? The authorized representative's name is not coming in the filing. What to do? Please file. Please file, and in the filing also attach a small one pager petition that these are the technical glitches and these are minor glitches, procedural, not substantive, and your honor might kindly be pleased to consider this appeal irrespective of this or notwithstanding these glitches. Respondent's name not appearing. You have seen respondent name, Atanu Mandal versus proprietor. So that should be what? Atanu Mandal versus Principal Commissioner, CGST, Deputy Commissioner, SGST, etc. Right? But it is coming proprietor because what has happened is the respondent's name has to be feeded in that appeal. So the petitioner might not have put the respondent name manually. It requires to be manually put in, and it has come blank. But still, it has been accepted, right? Even though the registrar's court, I think, has been set up only for 1 or 2 days, not much, right? But still, suo motu they have accepted, right? I have had multiple round of discussions, not only with Honorable Vice President here, across the country. All the, many of the Honorable Vice Presidents are there, members of GST are there. They are motivating all of us. Honorable President's order is also there. These technical glitches would not be, would not render your appeals invalid or even defective. So, please let us start filing. So many other issues are there. Registration, jurisdiction is coming null, right? So we tried to file in Andhra Pradesh, jurisdiction came null. So we made a amendment over there. In one of the cases, amendment was also not possible. So we drafted one pager and attached that petition, that jurisdiction, that is a technical issue, kindly considered and already, accepted also. Registration, OTP is coming to not the primary authorized representative, it is coming to the person who was first registered on the portal. The designation of the authorized signatory is coming separate. It is coming managing director, where actually it is head of tax or something. But what is an issue like pre-deposit, right? That is a substantive issues, right? Pre-deposit, the portal, like for example, specifically for e-way bill issues, right? E-way bill, generally we all know that just to get the vehicle released, we pay the 100 or 200% tax plus penalty, right? And thereafter we go for the appeal. But now when you are filing the appeal at the GST, it is asking you again for paying the pre-deposit, which you can edit manually, right? So please edit manually, attach another one pager petition on the pre-deposit attaching the challans earlier paid. It will be accepted. If required, one may have to go physically at the bench and, reflect the same on the Honorable Registrar also. All Honorable Registrars across the country I have visited, by and large, all the major benches, all registrars, they are very, very receptive. Registrars in Hyderabad, Mumbai BKC branch, Chennai, I think Delhi also, they have started courts also, registrars courts, just to take care of these effects. Again, simple issues one has to be careful about, like you have to merge all the documents, thereafter, attach the DSC. Authorized representative must be added, whether it is an advocate or a chartered accountant, etc., before filing the appeal. So again, the requisite form should be, there is a form, GST form 04 is there for the Wakalatnama earlier in SESTAT. Now this is a very technical and automated system. In fact, I also was not much aware. But friends, whatever you file, right, when you are arguing a case, right, for those of you who would be arguing, many of you would like to argue or at least represent along with your authorized representative, right? Mind that the bench member, right, the member himself would not be carrying a hard copy, right? He would also be here seeing all of these on the computer system only. It will be a end-to-end paperless system, right? So these some few issues you must be very careful about, right, which I'll take you through. But overall, what are the issues one must be careful about is these. Like when we used to give the exam, right, during our academic days, we used to always have a saying, you must appear as a student so as to make life simpler for the person who is checking your answer paper, right? So, to that extent, try to make life simpler for the honorable member, because mind that GST is not like, income tax. Income tax we file, even before the honorable ITAT, we file, 5 to 6 pages appeal, and balance we put it in the ground, notes. And that also we make it very simple because it is a by and large settled law. We know doctrine of merger. You don't have to tell any honorable member doctrine of merger, right? So there it is more, settled, but here we have to be careful because this space is very new. So what you must be careful about is, most important is the first, the last bullet point, first point, right? Many of times the taxpayers and even some of the councils in GST, when it comes to GST, they think it is service tax, and in service tax we used to file bulky paper books, right? Even in commissioner appeal stage we file bulky paper books, but here it is, while you might file your paper book accordingly, but there is a space where you have to put in the summary of the case. Please be very careful to put in the right summary, right? Because mind that, please imagine a situation where you are arguing, right? And first issue, Lordship, please turn to page number 397, and Lordship will scroll down, right? And go to page 397. Next issue, Lordship scroll down to page number 550, right? When you are flipping the pages, even then we always said in the SESTAT also, it is always good to give a summary, right, even though it is not mandatory. Here you have a space. So this summary part you have to be very careful, make a brief of your case, so that, because 16(2)(c), right, nothing much needs to be seen in a 16(2)(c) case. You have to just rely on Suncraft Energy, you have to argue whether the department has visited the supplier's place of business as per Suncraft Energy, and so on and so forth. Grounds of appeal, one has to be careful with. Prayer, one has to be careful with. Category of the case under dispute, whether it is, so already we have an order number 3, right, where the cases have been categorized in 3 categories, category 1, 2, 3, right? So please go through that, and I will not get into much nitty-gritties, right, of those categories, because otherwise this session may take the whole day itself. But be careful of the category, GST section number and rule number, put the statement of facts, and bookmarking, right? Bookmarking is very important. Please be careful about the bookmarking in your appeals when you are filing. Now this is what the order dated 20th of January 26 stated, that registry of each bank shall keep a lenient view during the scrutiny, right? So all of this, whatever relaxations are given, it is given due to this order dated 20th of January 2026, which is extended through instruction number 3388. So till 31st of December 2026, whatever appeals you file, the registry has been instructed to be lenient. However, if you see on my screen APL 05, point number 7, right? Now here one needs to be careful, right? Point number 7, when please attach the order in original, order in appeals, right? And all your submissions which you have given at the earlier stages. Now here you have to be careful, you have to give a certified order. One important thing also, right? Please do not replicate Income Tax Appellate Tribunal and CESTAT. This is a very, very different space, friends. It is just almost like a High Court writ filing, right? Even after you submit your part A of form number GST 8002A, please understand your appeal would not be considered as filed. Only after you get the part B, then only your appeal would be considered to be filed, although the date of filing would be considered as your original filing date of part A. So, as tax heads over here, as people working in the tax department, if your counsel or consultant is filing the appeals, please ensure to make a tracker कि भाई फाइल हो गया, ये सिर्फ मत बता देना, प्लीज मेंटेन अ ट्रैकर की पार्ट बी आया कि नहीं आया. That is the acknowledgement. If you don't get part B and your appeal is rejected, then you see it would be considered as rejected, right? So please ensure that you get the part B. Few of the issues which has come up, there are two orders which have already been passed by the Honorable Principal Bench. First is Sterling case, and second, point number 1 on your screen, Manobendra Ghoshal case, right? See, Manobendra Ghoshal, now this is again brings us to a very important point. Now, few technical issues, as I said, there are few important issues which one must remember. And whenever, your consultant who may be drafting the form, etc., he gives you, one of the issues is this place of supply. If even one issue, say you have an order in appeal where, or an order in original, where you have 10 issues, right? 1 versus 3B, 2A versus 3B, ITC issue, etc. But even one of the issue is a place of supply issue. The matter will lie at the principal bench in New Delhi. It will not lie before your state bench, right? But here in Manobendra Ghoshal, the taxpayer did a mistake, committed. So, although there was no place of supply issue, he ticked the place of supply issue in the form and the matter went to the principal bench. Although the principal bench was kind and pleased to remit the matter internally to the Delhi bench, it was a Delhi bench matter, but in future these relaxations might not be there. So, place of supply issue is one such issue which one must be careful about. Point number 2 and 3 I have discussed already. Now again this is an issue, point number 4, pre-deposit already paid. So let us understand by example. So you had an order in original where the demand was 10 crores or 1 crore say, right? So how much pre-deposit you paid at that time? 10 lakh, 10%, right? But your order in appeal, right? That reduced your demand to 20 lakh rupees, from 1 crore 20 lakh. So how much is the total pre-deposit which you need to pay at the GST 80 stage? 20% of 20 lakh, additional 10% more you have to pay, right? But your total pre-deposit should be how much? 20% of 20 lakh, 4 lakh, you have already paid how much? 10 lakh rupees. So you need not pay any further pre-deposit. In fact, you need to file for a refund of 6 lakh rupees, right, which you earlier paid. So this, although the system is not fully conversant, right, with these kind of technical issues, but this is money, right? Your company will not spare you to pay more pre-deposit, right? So these are substantive issues which one must be careful about. Again, even though system may not allow, please pay only 4 lakh rupees in my example and file for a refund separately. But in the appeal document, please file a 1-page petition that this is the issue with your original DRC and that this 4 lakh rupees I have already paid, and the same must be considered as a valid pre-deposit. And thereafter, you see, one may go to the registrar, not even required, you can send a mail to the registrar at whichever bench is there, and they would consider this. Now, this is point number 5. This is what I was saying, and this is our Tax Connects approach. You know, this is not written anywhere in the law. FDE approach. So, in various of my webinars, I have discussed this facts, data, evidence. Generally, taxpayers are very careful or very elaborate about the facts and data, right? Facts is very huge. Data is also sometimes very huge, right? But evidence is missing most of the time, friends, right? Any court would just kindly, excuse me for 10 seconds. Okay. Shorbani ke liye. CCT sir is calling. Kindly call him. Okay. So, date evidence, right? That is very, very important, right? So, if you have to, if you have a GST 2A versus 3B issue, most of the time what we do, huge, Suncraft Energy, Bharti Airtel, Supreme Court, we cite, even sometimes some of the taxpayers, they give the whole case. Now consider Bharti Airtel Supreme Court, 80-page case, Safari Retreats, 68, 70-page case, no need, right? By and large, every member would know these, landmark cases. But what you need is actually the invoice copy. The members would need to see the invoice copy where the supplier has supplied you and a circular 183 declaration, right? So, evidences is very important. Third party evidences are most important to take care of. Yesterday, I think one of our members, they wrote to the Bengal chamber that, sir, one of our suppliers, he did not pay the tax earlier. Now he has paid the tax through DRC 3. Now what to do? I am denied my credit. Please submit that DRC 3 along with the supplier's declaration with circular 183, 193. Even at the department stage, you can get a relief. But only if you write, no relief will be granted. The officer will hear you, even the bench member will hear you, but relief would be something which would preclude you. List of dates. Again, this is something very, very normal, which we do at the income tax appellate tribunal stage, right? Sestat stage, lesser, but GST 80 stage, it becomes important that if you have multiple dates, be careful, to submit the list of dates. Limitation period, section 73 versus 74. I didn't pick this up before Honorable Principal Commissioner, because we all know that the CGST officers, I think only 1% of the demands would invoke section 73. 99% of the time they invoke section 74. So 40% relief you can get only by arguing section 73 versus section 74, right? Because the time period for limitation, section 73 is 3 years and 74 is 5 years, right? Now, this is again very important for all the taxpayers who are in adjudication stage, right? Friends, if you want to effectively argue at the GST 80 stage, ensure you make up your case from the adjudication stage because of point number 8 on your screen. If you have not represented to the department or the commissioner appeal, you cannot submit additional evidences directly at the GST 80 stage, right? So, ensure whatever you want to submit, please submit at the adjudication or the first stage, right? If you go to the GST 80 and submit a new evidence, until unless you have reasonable cause, that may not be admitted. Affidavits and applications, now for everything in GST 80 there is a form. Condonation of delay, you have to submit with form number 1. Vakalatnama, you have to submit with form number 4. So, all these forms one must be careful with, and judicial precedents, circulars and AI, right? So many of the times at the first, even at the first stage, say circular 183, 193, if you do not get a declaration from your supplier, right, because of a 2A 3B mismatch, at the adjudication stage to bhuli jaye, we get no relief if circular 183 declaration is not there. Even at the first stage, you know, even when we challenge the circular itself, we are not granted relief many of the times. But GST at stage, you can even challenge the circular. There is a Supreme Court case in the case of Vatika Township, wherein it is held that circular is binding on the officer. It is not binding on the taxpayer. So even if you do not get a declaration from your supplier, even that can be challenged. And artificial intelligence, right, I think try to be careful. You might use artificial intelligence, but checking the hallucinations, that is your job, right. I think 5 or 6 matters I have seen myself, very, very senior counsels. The matter was also held by the income tax and sestat benches, and thereafter it has to be withdrawn because the case laws which were cited through artificial intelligence, they actually did not exist, right. So be careful about AI, at least now as it is in the primitive stages. Other matters which can be argued at the GST is duplication of proceedings, right? No, so I argued a matter at Hyderabad, right? It was a very, very big, builder over there. So he took around 25 crores of total input tax credit. 25 crore is his plate, right? On that 25 crores, he has got a show cause from the CGST, DGGI. He has got a show cause from SGST, and he has got a show cause from his own jurisdictional officer. So the tax side is saying, Vivek ji comes, 25 crores I have, and I have got a 75 crore rupees show cause, right? And none of them want to drop the show cause, right? So, and this is very, very common, right? So this, if it be so, right, at the GST 80 stage, even without pre-deposit, even if 2 of them, confirm the demand, or at the first stage also they confirm, then one has no option but to go to GST 80 without the pre-deposit only, if one does not want to go to the High Court, right? So these matters you can take up before the GST 80. Clubbing of notices, we all know, major issue, again which we need to dwell upon more. One show cause, one order for 5 years, right? Whereas each year has its own limitation period. How legal it is would be, settled going forward. Service of the notice. Now this, I have picked it up very, very, forcefully, I would say, before commissioners, our own SGST commissioner and various other commissioners. And in West Bengal, thousands of cases are there. What is the issue? Now, one of many I have, now recently I got from Durgapur, one of the EPC contractors. He got a contract, works contract, and his works contract was executed, but he wanted to keep his GST registration and he filed nil returns. So what did he do? He gave the job to a chartered accountant, right? At, of course, for filing nil 3B returns, how much will you pay? 2,000, 5,000 per month. Kuch nahi karna hai, bas nil return file kar do. Now CA will also do that only. He will just file nil return. He will not care about notices. वो क्यों करेगा 2,000 रुपया में, right? So ASMT 10 came ex parte, show cause came ex parte, order came ex parte. September 2025, when the department started the recovery, they got to know, arey debit ho gaya input tax credit ledger. So then they came to us and we immediately filed a appeal, right? But that appeal was, you know, sorrowfully time barred more than 1 year, because all of these stages ex parte was happening. My representation, and there is a Madras High Court judgment in the case of Jai Infotech. My representation is, and that of course your commissioner appeals cannot legally condone the delay more than 3 plus 1, 4 months, right? But the service of the notice, Honorable Madras High Court in the case of Jai Infotech, he said yes, if you put the notice on the portal, it is legal service under section 169. But is it effective service? I said, sir, aapka joint commissioner, every day he calls the taxpayers, right? Why not give a call? And this is precisely what Honorable Madras High Court had said. So my argument is that Lordship, service of the notice may be a legal service. It is not an effective service. When the Joint Commissioner can call up the taxpayer, when he debits his input tax credit ledger and executes a recovery, why not call him 1 year back and tell him, bhai dekh lo, ek aapka order pending hai, appeal to file kar do. And the taxpayer is ready to pay out of 1.5 crore rupees demand, he is ready to pay 5-10 lakh rupees, which is actually the supplier is not much in existing. But somehow, these, when the Honorable Finance Minister says that every matter which goes up to the Income Tax Appellate Tribunal, that actually is a defeat for the department. All of these simple procedural issues, which is created into a legal issue, our submission from chamber is that these should be taken care of even at the department level. And we have got Madras High Court, Jai Infotech, that consider that the service of the notice itself was not an effective service, and from that day your limitation starts. All of these can be taken up at the GST 80 stage itself also. Jurisdiction, natural justice, show cause aa gaya, order aa gaya, hearing hi nahi hua. Okay, this again is here. Will directly come. We have the architect before us, Shishir ji. He helped us take it to the government, covered this issue which we raised before the GST Council. Just spoken to Honorable Principal Chief Commissioner also. I think this is a major issue today. I think the biggest issue today in GST, non-granting of GST refund on input services, right? We are picking it up very, very forcefully with the GST Council. I think everybody from head to toe, everybody is aware of this issue, right? And we hope that this matter is resolved. So say in simple words, you do not get a refund. Now after GST 2.0, this has become more deep, right? Because पहले 18 था हमारा output supply और हमें 18 ही मिलता था input भी. So then there was no refund or very minuscule. अभी हमारा output आपने घटा के 18 से 5 कर दिया, for which I am very happy, right? But my input services, which is 30 to 40% of my cost, there my GST rate is still 18. So the inverted duty structure has deepened by 13%, which is any industry, I think that profitability would be around 10 to 13%. I remember I was in, when I was working in ITC, we used to be told by a head office that whatever business, हमें 13% कमा के दे दो. Please, earn 13%. Then your business is viable. And यहाँ पे 13% is the inverted duty, refund which is stuck up. Now again friends, if you have suggestions, we are also in the process of drafting and representing on GST 3.0, right, before the ministry and the council. Now, and this is a very interesting thing which has come to, I think a week or 2 weeks back. We all know under section 17(5)(b), ITC on life insurance and medical insurance, right? That is restricted. What about accident insurance? right? Now, even medical insurance is eligible, the ITC, if it is bound by a statute, right? But accident insurance is a different space, friends. Now, the question before me was whether input tax credit on accident insurance is eligible or not. In my view, accident insurance is neither life insurance nor medical insurance, and ITC is fully available. We in Tax Connect are taking the input tax credit. Also, we do a small input tax credit. Which again brings me to section 17.5G, whether it is personal consumption or not, right? Accident insurance, the department, whenever you are arguing a case, one has to understand the facets and you have to argue holistically. Department will say, bhai, personal consumption hai, 17.5G mein will debar it. But my submission is, agar accident insurance personal consumption hai, then AC in the office, that is not personal consumption. Employees are all taking the advantage of AC in the office, right? But personal consumption, to the extent it is a tool of the trade, right? To that extent, it is not restricted even under 17.5G. And therefore, in my view, this input tax credit on accident insurance, that is completely eligible. But what we are representing in GST 3.0 is why to have 17.5 and such a huge list of 17.5, right? And then we go on and fight for 5 years on safari retreats. And what conclusion we come to after 5 years? That plant and plant or machinery, they are different, but should be considered the same from 1st July 2017, right? But all of these disputes are not required, and in the current global headwind scenario, in our view, this 17.5 completely should be rationalized as a part of GST 3.0, whether it happens now or it takes some time. We'll go to first the input tax credit issues, then we'll come down. Now 16.2C, we all know that this is a perennial issue. Wherever there is a talk of GST, supplier ने GST पे नहीं किया गवर्नमेंट को, आपने GST पे कर दिया supplier को, department invokes 16.2C. Now there are the environment was being built up in the country where almost all the high courts, including Tripura High Court, Guwahati High Court and some other high courts, they were reading down 16.2C and 16.2A also in McLeod Russell, whether the supplier pays the tax to the government or not. But if you are a bona fide recipient, you are not hands in gloves with the supplier, then your input tax credit eligibility should not be put to risk, right? So many Instacart services, Bangalore High Court, the Karnataka High Court also held accordingly, but there is a speed breaker, right? Gujarat High Court. So you see, I urge Shishir ji, he would be taking the next session. Sir, kindly give us some, insights on this Maruti judgment on 16.2C, kya hoga? Now this is a new controversy brewing, right? Till now the controversy was assignment of leasehold. GST lagega ki nahi lagega, right? On when say I have taken a land on lease from our West Bengal Industrial Development Corporation, right? Panagarh mein I have got a land on lease. Now, if I don't want to use that land, so as to sell it off or assign it, if I assign it to you, whether GST is applicable or not, right? In my view, and it is pending before the Honorable Supreme Court, GST is not applicable. But as Honorable Principal Chief Commissioner said, Sir said also, if as a supplier I say GST is not applicable, then if in future Supreme Court holds that GST is applicable, then I don't have the bandwidth to bear 18% plus interest plus penalty. It comes up to 54% almost, right? So what I do as a matter of precaution, some of the companies, they are charging GST, right? Some of the companies who are not charging GST, they are taking a declaration. But now the controversy is ulta, right? The Honorable Gujarat Appellate Advance Authorized Triple AR. Now it has held in the case of this aggregatus energy solution that even you will not get the input tax credit on assignment of lease, right? Now this is something which I think if the Honorable Supreme Court holds that GST is liable on assignment of lease, then this controversy would be more brewing. And why do they say this? You see on the same 17.5D. Now 17.5D, it says you will not get input tax credit on goods or services which you use for construction of immovable property other than for own use. So they are saying, see, this is a service of assignment and you will construct your factory, and ITC you will not get on this because this is for construction of factory, right? In my view, you see, I will read out again 17.5D. Goods or services or both received by taxable person for, now this word for is very important, for construction of immovable property, right? Not in relation to construction of immovable property. Now this land which I am taking, it is not used for construction. It is not like cement or concrete which is used for construction of that property, unlike safari retreat judgment, right? It is used in relation to construction of immovable property. So in my view, this ITC should be available, but then again this is a controversy which may require to be settled in future. Similar things, ITC on both. Judgment also, my view also. Tax Connect's views is my views. Okay, now, yeah, judgment it says nahi milega. That is part of the judgment. Last is my view, Tax Connect's views. So Olam Electric Industries, that says nahi milega. The judgment itself says nahi milega. But again, if you go to this Tata Engineering locomotives, it says milega. But again, these Tata Engineering, because of paucity of time, I am not going through each and every sentence over here. This PPT will be shared with you. You can go through at your own pace. Now this Tata Engineering and locomotive, here it says squarely कि for should not be considered as in relation to. So it says milega, it will be eligible. But in Olam Electric, it says now for does not mean in. So it says squarely may not be applicable, right? But in my view, it is that the input tax credit should be completely eligible. So when you know, we are on this 17.5D, a question which comes is what about safari retreats? So in my view, I have argued the case in Hyderabad and Bangalore and many other places, own account, right? So if you are, again, there are positive judgments, and I have spoken to many people in the department also. So safari retreats to the extent of plant and machinery, right? So I am not getting into what was the safari retreat judgment. Safari Retreat's judgment, it talked about two things. If I am purchasing inputs and input services and I am using it for construction of a building, right, which I am renting out. So then Honorable Supreme Court in the case of Safari Retreats has held that this building which I am constructing for the purpose of renting out, that is plant or machinery. But to that extent amendment has been made. But what still remains is if I am constructing a building for the purpose of renting out on my, not on my own account, to that extent input tax credit is available. So in my view, and we have argued many cases at a positive, in many forums, and we've got positive orders, to that extent, right, input tax credit is available if you're constructing the building only for the purpose of renting out and not to use as a factory or for your own business, right. Again, there are many other issues. Due to paucity of time, we have to skip all of this. Okay. Which brings us to the saga of GST network advisories. We have very recently seen, you see, this could be a reality. October 2024, we all know the invoice management system is not mandatory as of now, but would be mandatory going forward, and very soon you can see hard locking of input tax credit in your GST R3B, right. So to that extent, please start preparing. So what is hard locking of GST R3B? In case the supplier files is one, comes in your invoice management system first, and thereafter if you accept it, then the credit flows to your GSTR 2B, and from there GSTR 3B, right. What do we do now? We can amend our GSTR 3B, right, although it shows some alert etc. if we amend it upwards. Going forward, what we understand very soon, this 3B cannot be edited. Whatever you want to edit, you have to edit in your invoice management system only. Whether to accept or reject or reduce the input tax credit, everything has to be done in invoice management system only. So to that extent, I think we should start preparing. The only issue is that your reconciliation, what you do 14th of the month, your it reflects in your 2B, but start doing 15 days reconciliation with IMS. Do not wait for month end. With IMS, I think as trade, we should start doing reconciliation every 15 days rather than waiting for the month end, because you have to also communicate to the supplier. If on 15th you communicate to the supplier, he has to file his 1A, then it comes back to you in your IMS, then you accept. You don't have that liberty as a, going forward. And just now Honorable Principal Commissioner Sir has said that, all these glitches, if we keep on doing these mistakes, there is more chance of scrutiny. Where very recently again we have seen GST network advisory versus GST law, right? So, I think most of you would have seen on YouTube, and so many issues are there. There was a GST network advisory very recently. It was there only for the month of March. Thereafter they changed the system that if you have an IGST liability, after setting it off with IGST ITC, you can set off the liability with C and S in any proportion you want. But that was not supported in my view, right? Of course, there can be other views on that, but in my view that was not supported by the substantive provisions and the sections 49(5)(c). But and from April it has been re-amended on the portal. It has been amended again. Now the question is, what about those taxpayers who had taken the benefit of this advisory, right, in March? For those taxpayers, in my view, you see, this advisory, although it was advisory and it was not a law, but still, in my view, going forward in adjudications or appeals, it should be, you see, it should be considered. How much time? Okay. So, which brings me to the issues in income tax, right? While we'll have a session on this Income Tax Act 2025, there are certain amendments. We just represented, you see, the confusion on TDS that has started from 1st April 2026 itself. So we all know now TDS has only one section, right? Section 393. And TCS has one section 394 in Income Tax Act 2025. So there was an amendment in this Finance Act itself. Now 194C, it becomes table number 1 of 393, clause number 6, sub clause number 1. 194J, it becomes table number 1, clause number 6, sub clause number 2, sub clause number 3, and somewhere in between they have sub clause number 2, right? So the question was manpower supply services, right? Whether you deduct TDS under erstwhile 194C, 6(1) or 6(3) under 194J, right? So they said you must deduct under works, that is 6(1), right? So for manpower supply services they have clarified. But our you see representation is different, and we have got this from many big companies that now that this there is only one section, right? Of course, we have to deduct the TDS under the respective heads at the rates, but specifically for year-end provisions. Now there is always a dispute with the department that on year-end provisions, whether you have deducted TDS or you have not deducted TDS. And when you deduct TDS, the issue is you have to report it party-wise. And when you report it party-wise, the other person gets the credit on his 26 AS. Now the issue is that it is a simple procedural recommendation that say post-sale discount. On 31st March, you as a company decide that I have to give a post-sale discount, right? And on that, you deduct some TDS. You can deduct also on the provision amount, right, for that discount. But you don't want to tell the recipient, your customer, that I will pay you this discount. Maybe in future, right, maybe you decide not to pay. Then what? The customer already knows. So our representation is now this 393 is there. Why to deduct these TDS in these subsections, right? Why not keep a deduction under section 393 and start allocating it in the various tables? So this is something which you see may see light of day. Honorable member CBDT, she has accepted that yes, this is a valid suggestion. Second amendment, and these are all amendments from 1st April 2026, even before as the Income Tax Act 2025 that has come into effect, right? You see, there is a section 536 2H. So transitional provisions, you have to only you see, if you want to know the transitional provisions, when I am transiting from old to new, what should be my stand? You have to see only one section, that is section 536. Now again in 536H, now there can be two scenarios. Now you see, one scenario would be under section 54 currently. You have a long-term capital gain, right, in financial year 25-26. You have taken the benefit of section 54 by putting the amount of the capital gain in a long-term capital gain account, right, with a commitment to use the money and construct a property in 3 years. Now in 3 years, if you do not construct that property, then in that year under 536(2)(h), you have to pay the tax under the section corresponding to section 54 of ITA 61, right. Now what about an imminent issue 43B? If you have not paid the, say for example, interest, which is allowable under 43B only on payment basis, then how to take a deduction in tax year 26-27? It is a little, confusing. Am I making sense, or am I able to explain? Say under 43B, you are disallowing certain expenditure, say for example interest to NBFC, because you have not paid it before filing of your return under 139 for the assessment year 26-27. So what do? If you pay it in December 25, then you take a deduction of this in the tax year 26-27, right? But you don't have a transitional provision for it. It has to be stated, right, in the transitional provision. So they have made the consequential amendment. These are the things, friends, these are the few issues which one needs to consider while implementing this act. So you don't have a transitional provisions. So this has been amended, right, in this 536(2)(h), that now in case of any violation or any other condition, you can take a deduction in Income Tax Act 2025. Now this is a issue which we have flagged. Let's hope this is resolved. Honorable Commissioner, Principal Commissioner sir was just now saying that in Bengal we do not take a benefit of many schemes, right? Like mover, he was saying, let us take an example and let us understand the impact in Income Tax Act 2025, right? Kindly understand this. I think many of us in some way or the other will be impacted, right? So in mover, right, or EPCG, I think EPCG is a better example. So what is the EPCG scheme under customs? That you can import capital goods without payment of duty, and if you fulfill your export obligations, then you would be eligible for that exemption, right? This is a scheme of, so first up, you do not pay the import duty. Do you recognize it in your profit and loss account as an income? EPCG benefit, what you have not paid the duty, do you recognize as a income in your profit and loss account? Right? No? Yes. At best, we all disclose it in our notes to accounts. But on the contrary, for ROTTEP scheme, ROTTEP, do you recognize it as an income? Either when the ROTTEP scripts are reflected on your ICE gate, or when you sell it off, or when you use it for the payment of duty, you actually reduce your customs duty to that effect, right? So ROTTEP you recognize, but EPCG you do not recognize. Why? Do you offer it for taxation? The EPCG benefit, do you offer it for taxation? I don't think anybody does, right? Why? Because this is not a real benefit. This is a notional benefit, right? And under Income Tax Act as held by the Honorable Supreme Court, various judgments are there. Notional benefits, until and unless it is specifically provided, is not taxable, right? So section 28 of the Income Tax Act 1961, it is there on the right of your screen. Section 28 3D, right? It is highlighted in yellow. What is taxable? Duty entitlement passbook scheme, DEPB, duty remission scheme under export and import policy, duty free replenishment certificate, duty remission scheme under export or import policy, right? So what is taxable is those where you actually get the benefit like ROTTEP, etc. Now come on the left of your screen, 26E. This is the current section 26E, 26, that actually is the earlier section 28. And we'll come to 28E, yeah, it's highlighted. Profits on sale of import license, cash assistance against export, duty drawback, now, or duty remission or any other export incentive, received or receivable. So from ROTTEP specific licenses benefits, they have amended it. Possibly the intent is not a policy change, but maybe going forward in assessments, it might be construed that all export incentives, that is taxable, and all these notional benefits, of course, that might come within the purview of taxation. So as and when we are going across various provisions, right, maybe the positions which you have taken in the past, that all needs to be reviewed with much more, deeply it has to be renewed. Another, this I think I have discussed it in the last year itself. It's not there in my PPT, so I'll just verbalize it. This we had picked up in February 2025 itself. There was an amendment in the Act under 536(2)J. Now, 536(2)J, that is the transitional provision, it says that any circular which is in 1961 Act, which is consistent with the provisions of the 2025 Act, that will continue to apply, right? Which also means any circular which is inconsistent with the provisions of the current Act, that would not apply, right? I don't have that 536(2)J here, so I am just verbalizing in simple terms. Friends, now let us take a simple example. I think all of you would be facing it in day-to-day business. Post-sale discount, right? A commercial credit note non-GST credit note which you issue for post-sale discount, whether it is liable under 194R or not, whether TDS is applicable under section 194R or not on a commercial credit note for post-sale discount. No, why? There is a circular 12 by 2022. And what does that circular say, 12 by 2022? It says that post-sale discount is a benefit or perquisite. However, to remove hardship for trade, no TDS under 194R would be deductible under for post-sale discount. Now come 2025, 194R becomes serial number 8 of table 1. That circular is inconsistent with the current serial number 8, right? And therefore, if you strictly apply 536(2)(j, then that circular is inconsistent with the provisions of the Act, and from 1st April you have to deduct TDS on post-sale discount, right? So we have represented this, and just to tell you, CBDT is in the process of issuing a master circular which possibly will list down all the circulars in the erstwhile Act which will continue to apply. There are many other issues. We'll just take few critical issues before we take one or two in customs, right? Because I think we have the next panel also here. Nudge campaigns. You would have heard so much about nudge campaigns, right? Very recently, many of the restaurants, they have got notices, and it was seen that there was wide tax evasion, and under nudge campaigns they have got the notices. So this is something which is brewing. Even the foreign assets and foreign income disclosure, just now Honorable Principal Commissioner has also, Chief Commissioner has said that department has got all the data, therefore we should be more careful with these nudge campaigns. Another critical issue which we are arguing before the Income Tax Appellate Tribunal, presently also in June, next hearing is there. Now this is a very common issue, 143(1), addition or adjustment under 143(1). What do we do generally under if we get an adjustment under 143(1), which is not to our liking? We file a 154, right? And that is what our client has done. He filed a 154, and that was a very simple issue. A mutual fund dividend which was exempt, that was considered as taxable. So he got a 143(1), he got it very simple. He filed 154. No action was taken on 154. Now he got a 143(3). And that 143(3), it was confirmed, filed CIT appeals, went to CIT appeals. CIT appeals confirmed 143(3), saying that the taxpayer has not appealed against 143(1). Therefore, it has admitted the adjustment under 143(1). Friends, we went to the ITAT, have already had one hearing where we represented on the doctrine of merger. The moment you have 143(3), 143(1) is considered to have merged with a higher assessment, right? There are so many case laws. But even that was considered, but it was not totally accepted. Therefore, we went to our alternate ground that Lordship kindly give us, dispose of this matter and grant us leave to pursue 143(1) and file an appeal against 143(1), which brings us to a very critical and very, very basic, suggestion that whenever you get a 143(1) adjustment, it is better to always go for a filing of appeal against the 143(1) order along with 154 rectification also. Again, this is again one important critical issue on audit reports, where the auditor, we have to be careful when audit reports are submitted also, that form 3 from 3CD. So you see, the auditor reflected this as a contingent liability and the department has added it back. So we are arguing this matter, but again, it becomes difficult, so we must be careful in all of this. Okay. So transfer pricing and international taxation, only one issue we'll discuss in our panel discussion. Customs, I would like to take you through two important critical issue which is going across India. One is there is a new scheme. Those of you who do not have an AEO license, right, as of now, I think this is the scheme for you. Those of you who are manufacturers, you can import the goods with a deferred customs duty payment just like GST. You don't have to pay on every bill of entry, right? You can pay it only once on the first of the next month, right? So we have already got this license for one of our clients in Navasheva port, and this is working fine. So any of you who are a manufacturer, you can take it. Is a very simple scheme, although there is some compliance for documentation, etc. But this is a pass, a pass by to AEO. If you do not want to get into that AEO compliances, etc., this is a very simple scheme which you can take the benefit of. And of course, for IGCR, IGCR exemption, those of you who have taken the IGCR exemption, very recently a client in Bangalore, they came to us that, sir, IGCR का जब हमने लिया था benefit, we submitted a bond, तो customs के लिए तो bond submit कर दिया, but IGST के लिए ही bond submit नहीं किया, right? And the officer was, after their life, and there were so many issues. So all of these issues, the procedural issues, those of you, in case you are facing these kind of, issues, I think it is best to represent before the higher officers, and I'm sure all these procedural issues, there are various case laws, this one is one, CESTAT Chennai, all these procedural issues, bond, IGST का submit किया कि नहीं किया, bond, bond is of lower value, right, and the import has been of higher value, all these procedural matters, I think rather than going to the CESTAT and all the higher forums, if you argue it well at the adjudication stage, then I think all of these simple procedural issues would be settled. So thank you very much, for this longish, for your patient hearing to this longish session, and any questions we can take up. Thank you very much.
We have our panel discussion on challenges and preparedness of GST payers in the financial year 26-27. So I request the moderator and the panelists to please be on the dais. Moderator Sri Shishir Sinha, Associate Editor, The Hindu Business Line. So I request you to please be on the dais, and he has traveled all the way from Delhi. Panelist Mr. Shomik Roy, India Indirect Tax Aid, Caterpillar India Engineering Solutions Private Limited. Mr. Hardik Shah, partner from Deloitte, and Mr. Bhupendra Agarwal, head taxation from Exide Industries Limited.
Hello.
I request sir to please take the session forward.
A very good afternoon. I know we all are going to be willing between you and lunch, but we will try to get as much food from this session. Of course, the mental food. I'm not talking about the food which you are going to consume. So that's the purpose of this session. And if I can remember correctly, when the first phase of GST was introduced on July 1, 2017, there were a lot of discussion that it's very complicated. GST is not so easy. And one line which we used to listen at that time, that it is not a practical GST. I'm still trying to understand that what is practical GST. Now we have GST 2.0 from September 22nd, 2025. The 4 rate structure has come down to 2. And of course, we have the 4 special rate also, and then we have the special rate of 40% for various scene goods. Still, people are saying that it is not practical GST. So, what exactly we mean by practical GST, and what kind of solution we are going to have for the practicality of that GST? So, we have with us 3 people, 2 from industry and 1 from the consultancy. And they are going to talk about the challenges and what are the possibilities when we are talking about GST 3.0. It's almost more than 8 months since the last GST Council meeting took place. And the GST Council regulation says that the GST Council should meet at least once in 3 months. So last GST Council, which took place on September 3rd, 2025, before that, there was a GST Council in Jaisalmer. That was in December 2024. So now we are seeing a gap of 8 to 9 months in every GST Council, which is against the rule of the GST Council regulation. Now let me start with you, Somik. We have seen GST 1, we have seen GST 2. What are the 2 big concerns at this moment from the industry point of view?
So I would say GST 2.0 was a welcome change, because for our kind of an industry, it was a good change, because then the output rate really reduced. And for any heavy manufacturing industry, it was, as you said, like inverted duty structure. That problem has gone for us, because now we have a situation where the input and the output we can nullify. And so I would say the major challenge what we see, and it can be discussed in the GST Council, is one of them is the SEZ refund issues. Like, as you will acknowledge that for an SEZ, the inbound is duty free and even the outbound is duty free. But there are few, inbound purchases which are subject to GST. And even for ISD mechanism, like this, there is a situation where accumulation of ITC is there. Not only for our kind of a company, but it is like across all the SEZ units. But we don't have a mechanism. So one of the mechanism what many companies resort to is to do a output billing with taxes and then claim a refund out of it, right? But then again, all of those things are getting litigated at different forums. So I feel there has to be a way out there, and it has to be discussed in the GST Council so that there is a refund mechanism for the SEZ units as well.
Okay. Hardik, I will come back to you after taking opinion from Bhupendra. So I'm having the same question for you. If I ask you what are the 2 big concerns at this moment after GST 2.0, and also I would like to share your opinion in the delay of holding the GST Council, how the industry see that and what kind of problem the industry face when there is a delay of this kind in holding the next GST Council meeting.
Yeah, before that, I think you raised one important issue. What is practical GST? So it interests me, and I would like to answer that. So council meeting, those things are, it may impact industry. It may not, depends on, the issues which the particular industry is facing. So, I mean, already, there's a lot of tension. So I would like to bring one incident, to the audience. What is practical GST? So there was one country which wanted to introduce GST or VAT, you can say. And the person, he said, we will tax everything. From agriculture to education to medical to everything we will be taxing. So he wants to tax even the agriculture. So as you know, the farmers were the first person to protest that how you can impose tax on us. We can't pay, VAT, or we can't do compliance with respect to GST. So he was like Shishir, very intelligent officer or a minister. He said, just 10 farmer or a leader should meet me. Either I get convinced or I will convince you. And we will decide whether to implement GST or not. So 10 people went to Shishir, the head who is going to impose GST on agriculture. He said, you can implement GST by 2 nails. वो कांटी बोलते हैं बंगाली में या हिंदी में कील बोलते हैं. With these 2 nails, you can implement GST. They were said, what you're saying, we don't need laptop, we don't need consultant, we don't need advisor. How it is possible? What to do? No, you take these two nails, take to your home, put one in this wall, another in that wall. Whatever you are selling, you charge 5% GST, keep adding the bills in this wall. Whatever you purchase, there will be a GST, you keep posting in this wall. Once the month ends, ये दीवार से सब निकालो, टोटल करो. ये दीवार से सब निकालो, टोटल करो. इसको इससे माइनस करो, नेट हमको पे करो, GST हो गया. They said, this is simple. So this is simple GST which can be implemented if Shishir kind of a person is the finance minister and we want to tax from vehicle to Hawaii Chappal at the same rate. So practically it is not possible, but there are countries like Singapore which are able to do that. So I was having a idlis in one of the five-star restaurant. The person said, how many GST rates you have? I said, I think 5 or 7. Vivek, how much? 5, right?
4 plus 4.
Now, no, number of rates.
Yeah.
1, then we had 5, then 12, 18, 28, then we have cess. So, 40 also. So he said, why so many rates? I said, if we have only one rate, I can't have at least in 5-star hotel. I need to have in roadside dhabas. So, as he said, industry got benefit with this GST 2.0 because like batteries in Exide were taxed at 28%. Services are taxed at 18%. So sometimes it was a challenge. Whether we are giving, is it a service or is it related to a goods, it should be taxed at 28 or 18. So we had some challenges with respect to 12% also. So now with 2.0, the rate have reduced. Initially we got some setback because dealers were not buying. They were anticipating that rate will reduce because of the GST reduction. But yes, ideally now the rates are lesser. So a lot of litigation which were on account of rates have reduced, but not fully eliminated because just to bring one important point, solar related products are still taxed at a lower rates, which is 5%, unlike other products which are at 18%. So we were awaiting the GST Council meeting that if they can, bring some clarity on, because we face a lot of issues in transit, wherein the trucks are seized, the penalties are imposed. Otherwise, 2.0 brought in some relief on account of reduction in the number of slabs.
Okay. So thank you very much for calling me as the finance minister. Of course, that's something which, of course, you have made very clear that I'm not going to be finance minister of this country, which is not possible for me. Why I raised the issue about the practicality, because when the GST was introduced, everybody was saying one nation, one tax, one market and one rate, which is certainly impossible in a country like India. When you talk about country like Singapore, it may be possible because the population of that country is a city country. They have a much lesser population even than if you take the population of the West Bengal. So the issue here is that whether we believe in the two rate structure. Now we have the 4 special rate, we have the 2 ordinary rate and 1 for the sin goods, which is a 40%. Hardik, my question to you that apart from the rate, one of the big concern is the categorization and the classification of goods and services. As a consultancy firm, what do you think, what is a suggestion for, what is a solution for this?
No, thanks. So basically, from a classification or a categorization standpoint, the government in GST 2.0 has made a very, very significant progress. Now, there are hardly 2 predominant rates and there are reduced and higher rates also. The sin goods are very, very limited. The goods which are chargeable to a lesser rate are also limited, and we are not talking about merchant export kind of a scenario. But otherwise, categorization per se is limited. The government has heard us. The classification related issues will substantially go down in a positive direction. Just the point that still there will be issues which will remain, like what Mr. Bhupendra said, regarding the fact that whether when there is a end-used based exemption or benefit which is being provided, let's say for the purpose of solar or defense, or any such similar categorization, right? Whether that product category fits into that particular aspect or not is what is likely to raise or create an issue into the GST era. But the point is, according to me per se, because of the geography and the dynamics of this particular country, we need 0, 5 and 28 bare minimum, depending on the use case of that particular product and the income dynamics of this country as well. So the government has made very, very extraordinary progress in terms of reducing, and that too within a 8-year time frame from bringing in the new legislation. The next stage, as Vivekji was saying, GST 3.0, right? The next immediate stage could be to bring it to an even rate of around, let's say, 3 and 18 kind of a scenario. So as to have a very, very less number of rates, the litigation in and around the fact that whether this is classifiable under X or Y will certainly reduce significantly. The other tangent to this is the input tax credit. Now, whether the input tax rate is eligible or not is the biggest question till this point of time. To your earlier question, right, but the concerns, right, when I did a calculation or a math from an overall standpoint of the government's collection prior to GST 2.0 and post GST 2.0, right, 5% goods which were earlier categorized in the prior to GST 2.0 were aggregating to around 13%, 13% of the overall kitty. But after the 12 got eliminated and 98 or 99% of the 12 has got reinstated into 5, right, the kitty from 13 has gone to 30, 30, 13 to 30. Now this has resulted into a scenario that credit accumulation has become a very, very genuine issue in all the cases where there is a 5% rate. And when there is a 5% rate, and in most of the cases, even in inverted duty structure, a portion of input services as well as capitalization is not getting refunded back. Right. So we'll come to that at a separate point of time.
Yeah.
But that has become a very big concern. Second concern is the fact that the government is tightening the normal day, routine day compliances. Right. Just like we were talking about blocking or fixing GSTR 1 or 3B or locking that kind of a mechanism. That will be an impact to an MSME sector as well. And thirdly, slow moving litigation. These are the three main points which are a concern from an industry standpoint.
Okay. Why I discussed this point of categorization and the classification, because yesterday when Prime Minister Modi gifted Melody to Prime Minister Meloni of Italy, there was a big question as what is the GST rate on the toffee and the chocolate. And of course, after GST 2.0, I believe that both toffee and chocolate are 18%, if I'm correct, Hardik? And the second thing is that earlier there used to be cocoa-based classification and non-cocoa-based classification. I still remember there was a sweet which was having one portion as the chocolate and the other portion as the, that what call as mawa. So what was the rate structure for that sweet? That was another categorization and the classification issue. So that is why I thought that I should ask this question, that chocolate and toffee, am I right? It's the same thing, no? Yeah, that's Malabar paratha and popcorn, of course, that the Jaisalmer meeting. In fact, I'm really fortunate to have covered 55 out of 56 GST Council meeting. And the best one was the Jaisalmer meeting, because everything was set aside and people were talking about popcorn. And the popcorn, not just the popcorn, I mean the ordinary popcorn, but the caramel-based popcorn and the salt-based popcorn. And the major question which I was asked by a local channel there, that if I go to PVR, which popcorn I should buy it. So that's a GST for an ordinary person. Now coming to Samik, there is a recent Gujarat High Court ruling, and that is basically about that if your supplier has not paid the tax, you will have to forego your input tax credit. What is the implication of this ruling on the industries?
So, so this is I will say this is a big challenge for industries like us, because 16(2)(c) is giving a rider that the payment of tax has to be done by the supplier, right, to claim the input tax credit. So see, the thing which I don't have a visibility of, how can I have a control on that, and I can bring a control in my own organization and say that you check this points, and then you would be sure of that my ITC will not be challenged. So there is a pressure within the team itself and even from other departments also, that whether I have to do a provision for everything for what I'm, claiming the credit. So, see, this is in Gujarat High Court, and I would say there are, as Mr. Jalan was also saying, Suncraft ruling is there, where it is a positive ruling, again, from on the SSC side, right? So there are divergent rulings now. For few are, I would say, on the government side, few are on the SSC side. So I would say that government should give a visibility, because see, as of now, what happens, once you file your GSTR 1, then you should disclose the same liability in your GST 3B, ideally, right? And as if there is a hard coding on that part also, then this problem goes, right? Then I would always be at peace that my supplier who has shown in GST 1, I can see it in my IMS, and then I'm, and he's also disclosing the same liability in 3B. Then only this problem goes. That is what I feel. But till the time when the government is not giving me a solution to this, they can't, bring such a thing which is prohibiting me from taking a credit.
Okay. Bhupinder, you were just picking up your microphone before I moved to
No, I
Hardik.
thought there will be some questions.
Yeah, yeah.
So whatever I said.
No, I thought that you wanted to add something what Hardik or what Somik was saying, what Hardik was saying, that is why you picked up your microphone. Now my question to you, that from the industry point of view, one of the big concern is the inverted duty structure. I mean, still we are seeing in a sector like textile, in a sector like fertilizer, in a sector like automobile, some of the automobile like tractor, we are still having inverted duty structure. From the industry perspective, how this is affecting your own balance sheet?
I mean, luckily, in the case of Exide, we don't have this.
Company-wise, I'm talking about the overall industry.
As an industry, as I see it, basically, there are two things. One is the blocking of the working capital. As Hardik was saying, that if the product are classifiable under 5%, and services anyway are under 18%, and if the product which industry is buying is also say 18%, so there in many industry there is not so much value addition, right? So there is an accumulation of credit, which is basically is like working capital. At one point of time, I am paying interest to the bank, and other side I am blocking my own money. And whether we like it or not, as per the Indian system, getting refund is not so easy. We can speak a lot of things sitting here and industry, and you are also well aware of the ground realities. And as you said, India is not having one GST. We are having as many states, as many GST. So every state is not so prosperous as, without naming any state. So many states, they are having problem in giving refunds also. So what could be the reason? What they try to do, they try to create fictitious demand. When you go with a refund application, they give you a demand, so that the matter keep on lingering. So this is again, the issue could be that Hardik is selling a product 18%, which I may be using as a 5% industry, but he may be using as 18% industry. So again, it is very difficult to have a category-based kind of a rate. So it is very, very difficult. What could be the, one is basically, money is struck and we don't get any interest. And again, getting that refund itself invites a lot of litigation. And to the point which you asked, I would like to also to add few things. I mean, we are sitting here, we are deliberating, as Mr. Jalan was saying that there would be 2 lakhs appeal will be filed before GSTAT. So sometimes it reminds me whether it's a goods and service, good and simple tax, or whether it is a Gabbar Singh tax, So because I've been following the indirect taxation since very long period, and it has matured over a period of time. One thing strikes me, that few things the parliament is approving, making the law, and we all are expected to follow. So though Shishir, whatever valid point he raised, that 16(2)(c), if a person is not paying the tax, not filing the return, whether am I responsible as a buyer? So this is the law which is made by the parliament, and we all are expected to follow. And now in next 10-20 years, it will reach Supreme Court, and finally it will be decided. So this is as basic as this. Whether industry should face this for 20 years. If I am a businessman or I am a tax head, should we face this for such a long period till the matter reaches the court, Supreme Court, and finally it is decided? Now you were referring Gujarat High Court. It was held that the law is not bad. It is not ultra virus. So, but again, they have kept it open. which means each case will be decided on fact-based. Whether in your case you were genuine, whether I was genuine, again it is subjectivity. Whether you are handsome or not, I mean definitely you are. So this is a subjectivity.
Another compliment from him. Thank you.
So, and one more point, interesting point I would like to bring on this, which you raised and which we are facing. The other person has not paid the tax. You are disallowing the credit to me. That's the law, and I'm fighting it. We all are fighting it. Now, very interesting issue. As you know, Shishir, now IBC has been introduced in India. Many companies are approaching, or bankers are approaching, or financial creditors are approaching, and they are filing insolvency petition. And either through resolution or through liquidation, it is like a washing machine. Every papam is, it is washed away. Now, please answer, if the company, my supplier, has gone through IBC, either he is liquidated or taken away by somebody else with a clean slate, what will happen to me? Government says the successful bidder is not liable. The company, which is taking over this is starting with a clean slate. What will happen to me? I am getting notices from the department that you as a receiver, you as a customer, is supposed to reverse and pay along with interest. I feel that once he is given a, Ganga Snanam, hoke papam sab dhul gaya uska, it should be applied to me also. It's like a deemed payment. You can't treat us differently. Ki one side he is, clean, everything has been washed away, but you are going to recover it from me. What wrong I have done? So there is no clarity on this.
Yeah,
so I think because you are approaching, the council should decide this also. Though they have given a circular, CBSE has issued a circular that once the IBC proceedings are done, that will overrule all other GST law, and government will not go after the company for recovery. But till now, there is no clarification whether the mirror image will apply to the customers also, which is very, very important, because as you know, large companies and small companies with crores of GST dues are going through IBC proceedings.
Yeah, that's a very valid point. I think the IBC, on one hand, we are seeing some improvement in terms of the processes from the company point of view. But for the same kind of company, there are another set of problem, and one problem which you rightly mentioned, that if the bidder, if the company who has acquired another company, he has been given a clean slate, why should not I be given the clean slate? Why should that liability still be on my book? Hardik, I will come to you about one particular issue which I just asked about the inverted duty structure. Now, one problem which government always says that if I completely remove the inverted duty structure, which is somehow it seems very difficult, then I will have to go for another rate restructuring. What is the solution for that?
So single rate is one such solution for it, that everything is taxed at, let's say, one rate, like in the case of Singapore, where everything is at a 7 or 8%.
But that is certainly impractical in India.
In
I mean,
India,
you
absolutely.
cannot have that kind of thing.
No, absolutely. So that is impractical in India because of the fact that, as I said in my last answer as well, that the requirement of each product to each industry, to each income generating business and sensitivities in India to various different things are different. The only answer to this is basically to give away the refunds in a legitimate manner. As of now, there are restrictions which have been put forth for the purpose of input services as well as capital goods, both. So not every input service is refunded back in an inverted duty structure. We are actively advocating this with the central government GST council and even at an higher forum, basically to give a refund of input services as well as capital goods to whatever interactions it has happened. It appears that the government is inclined or going positively towards the purpose of capital goods refund in some of the options which we have given, some 5 or 7 options which we have given in the manner in which the capital goods refund can be given in such scenarios, but it doesn't seem very likely that they are wanting to give the refund of input services, just because of the fact that input service, any invoice can be issued from one person to another person and it will be treated as a service, and for other it will be treated as input service, and it can create an entire new ball game for the government from a fraudulent activities or moving credit from one place to another place perspective. So everybody is at a 5% rate, because those who are at 18 or at a higher rate does not have this particular issue. But anybody who is at a 1% or a 5% is certainly in this particular basket. So around 30% of the goods, the tax paying goods, right, are into this particular basket, and those in those particular industry are facing that. The only answer, according to me, for India kind of an market is predominantly to give away higher refunds, because it will not create a larger working capital bottleneck to them. At the same point of time, it will be seamless in terms of credit, refunds, and everything put together.
Okay. But Hardik, if I understand correctly, please correct me if I'm wrong. When the GST was introduced, and the concept of GST very clearly says that there should not be provision for refund as well as for the cess. That's the provision, and that is why we had compensation cess under a different law, because the GST law per se, when the 13 taxes and 17 cesses were subsumed into GST from July 1, 2017, it was very clearly said that these two things should not be there. Now we have the inverted duty structure. I would just like to give you one example. In 21-22, if I remember correctly, GST Council took a decision about imposing taxes on the textile restructuring the taxes on the textile industry. And the purpose was to remove the inverted duty structure. There were two decisions, one on the leather and the one was on the textile. During that year, there was election in Gujarat. So the entire Surat business lobby, they came to GST Council and they came to Finance Ministry and they said it is not practical. So the textile GST restructuring was deferred. Now the leather has been introduced, but textile has been deferred. Now we are still talking about, in 2026, we are still talking about the inverted duty structure problem for the textile industry, and we are not finding any solution as of now that what should be done, because we have already done the rate restructuring and that problem is still there. So am I right in giving?
No, absolutely. So there, your point is absolutely valid. There are hardly 4 or 5 decisions which were taken in the GST Council meetings but never implemented. Textile was one such, right? It was taken in the GST Council. It was there in the press briefing as well. Right, but
January
never
1,
implemented.
2023. It was to be introduced from January 1, 2023.
Correct. So it was never implemented because of, as you rightly mentioned, a protest which has happened at a very large scale in Surat. Right. I actually come from Ahmedabad. So I know very much in detail about textile
So
and
that
Surat
is why
market.
I asked
and
about you, since I saw that Hardik Shah, somebody from Gujarat, is there.
Yeah.
So he will be more clued to that particular development.
Correct. But at the same point of time, IDS, textile is a very prominent problem across the board. And everybody is reaching out to the government with open hands to say that at least give some relief. It can be whatever, will at least progress from where we are today. And the only solution, and thankfully the government is listening, right? It will take some time, obviously, right? Because as you started with 8 months of GST Council and all, but you yourself have covered 55 GST Council, so you would have seen that basically the progress is there. It may not be as fast as I envisage or as anybody else can envisage, but at the same point of time, it is going into the right direction. We need to be mindful of the fact that GST is only a 9-year-old law, and it is moving in the positive direction. So very soon, all these problems will also move away, and it will be more from a technology or a system or an rule-based thing rather than interpretational-based things, which is presently going on, but it will get removed over a period of time.
Okay. So if anyone from the audience interested in asking a question, not from me, not to me, but these three gentlemen, please. No, I'm finance minister from some other country. The problem is that Bhupendra has made me finance minister of some other country, not from India. Yeah, please go ahead, sir.
So good afternoon, distinguished guests and Mr. Jalan. So my name is Rakesh Goel. So basically, my question is not directed to a particular person in terms of, whether I want to put it to you. but it's more from an advocacy perspective. So obviously, uh, the fact which I want to make is that, there should be a rationalization of penal provisions when, it is clearly established that the person has not collected tax from his customer. I mean, this has been discussed in some form or the other in the previous session as well. But when it is clearly established that the person has not, the supplier has not collected tax from his customer when the original supply had happened, be it a difference of law that the person, the supplier was interpreting the law in some form or manner, and he held it to be at a lower tax rate or not taxable. But once it is established that, the tax has actually not been collected from the customer to the extent which the department is raising a demand for, so there should be some bit of advocacy on that front that, penal provision should be rationalized. Although under section 73, it's a bare minimum of 10%, but I mean, as we know, practically, department is really not, and we have faced this in many central tax departments across various states. The majority of demands are under 74. So the taxpayer is actually not left with any option but to pursue litigation just because of those penal provisions, which is equivalent to the tax amount in most of the cases.
Yeah.
So there should be some advocacy around this front as well.
Yeah, that's a very valid point. And one thing which I think you all will agree with me, that various field formation have their own interpretation of any section, of any law, any rule. They have their own interpretation. One thing which we are finding in, say, West Bengal may not be true in, say, Jharkhand, or may not be true in Bihar. And that is why another problem which the industry is facing is about the AR and the triple AR ruling. I mean, various AR have their own thing. One thing which I still remember, that is about the frams and the papad. And Mr. Harsh Goenka, fortunately he is from West Bengal, when he tweeted, then CBIC came with that. Because Gujarat AR, I still remember that Gujarat AR gave at least 12 rulings on frams. And frams is nothing but TTK brand. It is not a product. It is a brand by TTK. But that papad, that त्रिकोना वाला जो होता है लाल रंग का पीले रंग का, they said that it will attract higher tax, and somebody said no, it will not attract higher tax. And Hardik, please forget this line. Gujarat papad is something which is very close to the heart of the Gujaratis.
No, okay, let me give you the backstory of this as well.
I will just finish it. So that problem was resolved only when Mr. Harsh Goenka tweeted and he said, what is papad? So then CBIC came up with a clarification that papad means something which is a round, which is yellow, which is a combination of this thing. Do you think that the GST Council should talk about papad? Ka composition kya hona chahiye? That is the discussion, or that is the advocacy we are talking about the GST. That should not happen, one. Second thing, which I believe that there should be uniformity in the interpretation of rules and the provisions. Otherwise, you as a business, you as a chartered accountant, everybody will have the same question, boss, ab kya hoga? Right? Hardik, you want to add?
No, so actually, we formed All India Papad Manufacturers Association, right? I was instrumental in getting that formed because, believe it or not, 70% of what you are saying, fryams or the papad, right, is manufactured in Gujarat and served across India. Right, so a few large organizations like TTK and others, and all the smaller players, including the Lijjat Papads of the world, right, who are in a MSME Laghu Udyog kind of a setup, right, they all contributed. We have had series of conversations. Yes, Mr. Harsh Goenka's tweet helped undoubtedly, but we were already pushing that through since a while, because in the earlier regime, it was accepted in excise as papad. In Gujarat itself, we had a DDQ, we call it Determination of Disputed Questions under the VAT regime as papad, but in GST it was not ready to be accepted. Right? It took me 2.5 years to resolve that particular problem, but we successfully resolved it even for a past period, because originally when it came, right, it came prospectively. Then in the subsequent GST Council meeting, we got it clarified on as is where is basis. Right, so as is various basis is a new terminology which is not legal in GST but is used multiple times in GST. So thankfully you brought it up. The only thing which we are still not in a position to resolve is popcorn. Right, it will still come. But should not be the case of so much of discussion because the revenue which gets generated from these products predominantly is not greater than 500 crores per annum for the government of India. So government of India should ideally not be bothered on these such small or petty issues, rather concentrate on much larger revenue generating issues.
And just for the information, Papar attacked zero now. Am I right? Papar attacked 0 duty. There is no duty, so you can have. So you can have as many papad and as many frames during the lunch hour. There is no GST on that. Now, any other question or suggestion from our audience? Yeah, please, on the back side, please. Please give him the microphone. Please take the microphone.
Today, it is almost 8 years that GST has been implemented and almost coming smooth, 9 years running smoothly. But still two basic questions what every business house or organizations is facing regarding the condition of 180 days payment to the supplier. First thing, I have 2 points. Second thing is whether my supplier, हमारा सामने वाले जो सप्लायर है जिससे हम खरीदते हैं वो GST 3B सबमिट किया है कि नहीं, that responsibility is also put on to me being purchaser. These are the very inherent unjustified things continuing on, and I find very few discussions on these two valid issues according to my own perception. What is the basic justification of this? So far, I think it is unnecessary and useless provisions behind this background. Second thing, if that be the case, then when I am selling the goods to my customer, then same thing should be on me also while discharging liabilities, whether I got the payment or not. But that is missing. This is one-sided game. So these particular issues, I am requesting you and all the panelists to take up with the proper forum. So many alterations and circulars, amendment has come up, but regarding these two valid points, I think industry as a whole and the council itself is mum. Why? I do not understand this.
Okay, please have a seat. You want to add something?
Yeah, I think the gentleman has raised two issues. One is with respect to payment within 180 days, and the other was on non-payment of GST by the supplier. See, we have to understand one thing, and you all must follow this, that GST is the combination of different laws. You know, those who are old like me, who have followed the central excise, sales tax, service tax. So GST has taken good and bad things out of all these laws. Now, you will remember that जब service tax introduced हुआ था, it was on payment basis. Please understand, every service provider or every trader or a businessman is not very rich in India. There are people who are doing business with a very small working capital. जो पैसा बेचने से मिलता है, उसी से उसका business चलता है, उसी से घर चलता है. If we are in a accrual-based concept, wherein even though I have not received the money, I am supposed to pay tax, it may not be easy. That is the reason government, जैसे beauty parlor, saloon, so many service industry was introduced in those days. It was on payment basis. So if you get the payment, you have the money also, and you are very pakka that this is your turnover. So you will pay the tax. So I believe 180 days logic, though government, whether they themselves follow this or not, I mean, we are not going to discuss that. But idea is that the business should be encouraged to pay the supplier within time. So that at least, you know, the input as credit will be required to be reversed. So that I think it is a fair point. MSME law is also there, but in GST basically, we are required to reverse it, or we are to pay interest subsequently, you know. So there is some fear. So I think it's a welcome move kind of that people should pay within 180 days. As an industry, we are facing this. I mean, I'm not saying that it is incorrect. Secondly, with respect to non-payment of tax by the supplier. Again, you know, we have already discussed that in length. The problem in India is we have to find out who is the black sheep out of all the ships. You know, and as my friends were discussing about the inverted duty structure, I was just, जब तो घर जाके मेरे दिमाग में वही point घूमेगा, तो I thought of, you know, informing that whether it can end, whether it can end, I think it can never end, because the goods which I am making may be used by 10 industry, and all that industry may be making a product which is attracting different GST rates. So if Shishir is making something which is, say, exempt fully, or he is making which is attracting 5%, somebody is making at 18%, if my truck, if my goods are going, you know how things are in India. If we do some end-use based reduction in rate, then everybody will say that it is being used only for Shishir. So all trucks will go with 0%. So how to control that? Yeah. So we can't say Fevicol used for making chair will attract 5. It is for making sofa, it is 28 or 18. Another interesting issue in Hyderabad, few people have claimed refund. They were making on paper electric vehicles. They are buying goods across India at 28% those days. They are selling electric vehicles at 5%. And because everything was done in such a speed, they were getting refund of the inverted duty structure. So the problem is, if we say that refund is the solution, it should be done at very speedy way, then both sides are, doing things very speedily, and everything is made only on papers. Somebody is making tube wells, buying, bills or invoices, and making tube wells on paper and getting inverted duty structure refund. So our people are very creative also. Yeah, that is another problem. People are very, very creative in India. Jugaad jisko bolte hain. So if you make the things very, very simple, all automated, then things get, automated so fast.
No, so that's a very valid point, that India, what we have seen and what we have observed, that we always call it as कि भारत एक जुगाड़ प्रधान देश है. You think of a law, there will always be somebody who is thinking about how to break that law. And there are certain group of people who are always ready to help that in breaking that law. So any law cannot be 100% perfect. That is a reality. And there will always be some issue here and there. And now Bhupendra has given me the third tag, which is the manufacturer. Earlier he gave me the finance minister, then he called me the handsome person, and now he is calling me the manufacturer. So thank you very much. After this conversation, I will have to find out what kind of person I am. Am I like in this category or that category? Anyway, now coming to Samik, to you, that we have found so many voices on various issues. GST Council, the next meeting of GST Council, that's a 57th GST Council meeting, maybe in, say, I believe in the month of first week of July or last week of June, because you have to give 21 days notice. That's the regulation. And only in the emergency situation that GST Council can be called within 7 days. So if you go by the voices and like advocacy he talked about, or the issues which are raised by gentlemen at the back, what are the two critical issues which you think that the GST Council should take on a priority basis in the 57th meeting?
So, Shishir, I would say one of the things which you asked me, 16.2c, so delinking of that payment thing, that is what one thing I think, and even my friend Bhupendra was also saying, that in one state, they may not be cash rich, they will not give the refund, other state may give, and they will not accept those things, right? So I think delinking of that payment with the 16.2c, that should happen, and so that this kind of litigations doesn't arise. So there would be in one state a Suncraft, in another state a Maruti Enterprise. So this kind of things should stop. Okay. That is one thing I feel. And the other point which I would say is, which I brought in regarding, because that is my point which I brought in.
SEZ.
Yeah. So the refunds for the SEZ entities. That is something that they should, because I know as a policy matter, many organizations and even many different forums are moving towards that policy advocacy. So I feel those are the two changes which I expect.
Okay. Hardik, your take on the two things for the 57th Council?
So 57, let me give it a little holistic or a larger time frame. 2 or 3 things which are important and which should be happening at a larger time frame, may not be immediate. One is to bring ATF and natural gas within the purview of GST. That is critical, because that is relevant at this point of time, considering the geopolitical situations also which is going on. Petrol, diesel, alcohol is unlikely because it gives substantial revenue to the state governments, and the autonomy of the state governments will then be taken over by central government. That's the overall fear. So, but natural gas and ETF at least should be there. That is one. Two, yes, SEZ, EOU, other relevant administrative or procedural hassles should ideally reduce. And three, liberty in the export SEZ and IDS refunds. These are the three, means easiness in doing all these things in terms of refund are the three important things which should ideally be taken care of in a year's time frame.
Okay. And Hardik was very clever in just adding natural gas and the ATF. He didn't talk about the petrol and diesel because that is something which is a practically and politically impossible. And if I still remember, people always say whenever there is a crisis on the petrol and diesel, they say, isko GST mein le aao, isko GST mein le aao. And we in this room, each one of you must be aware that 101st Constitution Amendment Act clearly include petrol, diesel, natural gas, ATF and the crude under the GST, but there is a condition attached to that, that the GST Council will decide the date from which the GST to be applicable on these 5 products. And that is the, what we can say, that is the line which is giving a long rope to all the members of the GST Council. They are not able to decide on the date because everybody is earning a good amount, whether we talk about the central government or whether we talk about the state's government or even the state UT with the legislature. Now, Bhupendra, I'm coming to you. The same question which I asked from Hardik and Somik about the 2 critical things which you believe that the 57 GST Council should take on the priority basis.
I'm not sure about this GSTAT. The date, due date is approaching that within 30th June, a lot of people have to file the appeal. And it's a new thing. I don't know whether GST Council can decide on that kind of an issue which can be extended because I feel as Vivek...
That can be decided by the council.
So if that could be one issue which I feel that the numbers which Vivek showed, ki 4,000 appeal is filed out of 2 lakhs. I don't think so. We will be able to file all those appeals in the short period of time. Second thing, I think council should take up, whether they'll do it or not, that is different. But the point which you're discussing something very interesting that about petroleum product, because I've been following exercise for last 20-25 years. So nothing is impossible in this world, if I want to increase the money which I want to give to my wife and how I want to recover or how she wants to recover. It's all a matter of, earlier when I used to work for a company, after 6:30 or 7, I used to go and then park my vehicle and I used to buy all this onion, tomato, bread, aloo, bread, butter and everything. One gentleman said, अरे अग्रवाल साहब आप रोज आता है शाम को गाड़ी लगाता है और ये सामान खरीद के उधर से उधर से you can give all this money to your wife and she can purchase everything. I said whatever she collects upfront on first or second, this is all tax, and whatever I am spending now, it's all cess. So it's her beauty if she collect money one time, but afterwards she'll send a message to me, bring all this, and I need to pay for that. So same way, if government, if I am the part of the council, or it is very easy. I can bring petroleum and diesel in GST. I will impose the tax which is being imposed now, and I will change the input definition. That input excludes petroleum and diesel. It was in a central excise. You impose tax, you don't give credit, and we will be happy paying 120, saying that now it is under GST. So you get more tax actually. ज़्यादा बाइक पे बात नहीं कर सकते because I am representing a company here. So what I mean to say, people are, I'm getting a lot of WhatsApp. Why this government is not bringing this under GST? The prices will come down by 10 rupees or 20 rupees. I am chartered accountant with 26-year experience, and the BCom graduate is teaching me how to calculate tax on petroleum. With Jai Sri Ram, he's sending me message that why the GST में क्यों नहीं ला रहे इसको? अरे भाई, the tax which is being collected now, it is not going on air. It is being collected by central government and state government. If they change the name, the tax rate remains same or the fixed rate, you continue to pay the same amount. The money is not going to Singapore finance minister, right? And if I restrict the input tax credit, my kitty is safe. So I think I'm more remembering about the papad rather than petroleum,
So one thing I'll add.
Yeah.
So not on this topic. So it's done. You are the Singapore finance minister.
Okay. Thank you. So you want
So just one point which I would like to add is the fact that after doing substantial advocacy on intermediary, that provision has now been removed. Right? Effectively, it will help all GCC and other such related entities because India is on the verge of GCC boom right now. right? And because the intermediary rule is now not there, the ambiguity is removed practically. It will be likely, assuming no fresh litigation comes up, but it is likely to be concluded as export of services refunds for exports are generally issueless unless there is an issue from a documentation or factual position. So those kinds of decision once the government takes, right, is helpful to the overall ecosystem of the industry, because we'll be able to bring in more investments, more employment, and it will generate an overall ecosystem, and it will move the entire economics of the country per se. So one small change from a GST perspective can help an overall ecosystem as well. Simultaneously, once we'll push it, all the other agendas in the rightful manner, in whatever time frame it takes, right, it will be better for the economy at large.
Okay. So I think that much time I had, I was given 40 minutes. I have already exhausted 42 minutes. So I will have to stop it here because I don't want we all to be treated as the villain in between lunch and the you and of course the papad, which are, I believe papad is a part of the lunch, Vivek bhai? It is there now? Good. Okay, so many papad are there, so you don't have to worry about that.
Sir,
so
just a minute.
yeah.
The
Oh,
3B issue, sir, my second point.
3B issue. So can you please repeat it just for the sake of our...
ITC will be restricted if my counterparty, my supplier, my seller does not file the 3B.
3B.
Now the ridiculous point in it, ki when I am getting flow of 2B, I am not aware ki for that particular bill or bills what I am purchasing, whether my supplier has filed 3B or not.
Yeah, I understood. See, I mean, what you said, I think I have replied stating that government wants to restrict those people basically who are fraudulently passing on the input tax credit to other people. They are raising the invoice, they are filing GSTR1, but they are not filing 3B.
GST 3B, yeah.
And it is not possible because if our company is buying something, that 3B will be filed by you as a supplier on 20th. But I will be reconciling and taking credit before 20th, 14th or 15th, once it is, So it will never matches because both are supplier, Now the issue is, I think High Court has also referred this issue to the government, even though they have not held this as ultra vires, they have stated that central government should go through what the hardship which you are feeling. Even High Court has, appraised of that. They said, I think council may discuss even this. But the problem is how to identify which are genuine, which are not genuine. Because all invoices look similar. All transactions happens through bank transactions. All is having address, email ID, phone number, name. So how to distinguish between a genuine supplier and an ingenuine supplier whose intention was not to pay the tax on the day one?
No, sir. 1 minute. It is very easy in present system when I am filing 100 numbers of invoice in GSTR 1 and subsequently I am filing GSTR 3B. So what the system does not take care, ki what are the invoices against which you are filing 3B. Say 100 number of invoice I raised in GSTR 1, tax component is 100 rupees.
Sir, that's what I was trying to explain to you, that if my supplier is filing GSTR 1 on say 11th and he will be filing 3B on 20th of the month.
Right, sir.
So his invoices which he has reported in my name will be reported in my 2B on 14th of the month.
Yes.
So I need to reconcile as a Exide or as a Tata Steel or a Aditya Birla Group or a Reliance with 10,000 1 lakh line items on 14th evening, which are the credit I am supposed to take, right? So I am going to file my 3B on 20th. My supplier is also filing on 20th. So where is the time gap?
No, sir, I am not telling with supplier or purchaser. I am telling the why the government is not taking place in it.
Can we discuss over this issue, because you have a very, very large issue and that's a very important issue, but there are some other issues also which need to be discussed. So please excuse us for that. We can discuss this over the lunch. So please,
Okay.
yeah, thank you very much. So 42 minutes, 44 now. I have exhausted 44 minutes. So I have to stop here. So thank you, Bhupen, thank you, Hardik, and thank you, Samik. And of course, thank you, Vivek Bhai, for inviting us to... Achha, I have one more session. Oh, I'm sorry. I forgot that I have to address one more session. So thank you very much. And I hope you will have a great lunch. Thank you very much. Good afternoon.
We have a pleasant task to perform, so we request you all to please be on the dais. I request the moderator to please present mementos to the panelists on behalf of the Bengal Chamber. To Mr. Shomik Roy. Mr. Hardik Shah. And to Mr. Bhupendra Agarwal. I would also request for a group photo, please, before leaving. I request also Mr. Jalan to please be on the dais for a group photograph. Thank you. Mr. Sishish Sinha, Associate Editor, The Hindu Business Line. Moderator, Mr. Vivek Jalan, Chairperson, National Fiscal Affairs and Taxation Committee of the Bengal Chamber of Commerce and Industry, and Partner Tax Connect Advisory Service LLP. I request the panelists to please join the dais. Mr. Himanshu Patel, Partner, Deloitte Haskins and Sells LLP. Mr. Orijit Chakraborty, Associate Partner, Corporate and International Taxation, KPMG. Mr. Bikash Jain, Associate Partner, PwC.
Very eminent, experts in income tax, which is very much required to understand the nitty-gritties of this Income Tax Act 2025. My job was in the first session was to, start, the discussions and to put food for thought. Now we'd have much more expert discussions on few very, very critical issues. So, we'll start with Shishir ji. Before we come to the other experts, Shishir ji, you not only in indirect taxes, you write on many issues, and direct taxes is also something which you cover. And this Income Tax Act 2025, Income Tax Rules 26, it is a new space. So how is the situation in Delhi and how is the situation pan-India? What are taxpayers saying? Let's have an editor's cut, first cut.
Thank you very much. And if you can allow me to speak in Hindi, that would be really great. I want to speak in Hindi.
Please, yeah.
उसके कारण भी हैं. मैं हमेशा ये कहता हूँ कि अंग्रेजी से मेरे घर का चूल्हा चौका चलता है, दिल की बात कहनी होती है तो हिंदी में बोलता हूँ मैं. तो पहली बार जब विवेक भाई ने मुझे कहा कि आपने कलकत्ता आना है, तो मैंने कहा कि आप सीए के बीच में हमारा रोल क्या है, मैं तो सीए हूँ नहीं. तो कहा नहीं आप आइए ना, आपने कवर किया है, आपने सब कुछ कवर किया, आप आइए. तो मुझे लगता है कि मैं भी सीए हूँ, लेकिन ये सीए नहीं हूं जो इनके यहाँ या आप लोगों की तरह नहीं हूं. मैं एक कम्युनिकेशन एग्रीगेटर हूं मैं, इसलिए मैं अपने आप को सीए कहता हूं. आप सभी चार्टर्ड अकाउंटेंट कहते हैं, मैं अपने आप को कम्युनिकेशन एग्रीगेटर कहता हूं. मेरा काम क्या है? मेरा काम है अलग अलग इंफॉर्मेशंस को न्यूज़ में कन्वर्ट करके आप तक पहुंचाना. और मेरे लिए ये 31st ईयर है इस प्रोफेशन में, और इन 31 सालों में मैंने केवल उस टॉपिक पे लिखा है जिसको सबसे कम लोग पढ़ते हैं, माइक्रो मैक्रो इकोनॉमिक टैक्सेशन. आप किसी भी अखबार में देख लीजिए, सबसे आखिरी पन्ना होता है बिजनेस का, जहां तक पहुंचते पहुंचते आपके हाथ थक जाते हैं. जनरल न्यूज़ चैनल को उठा करके देख लीजिए, किसी में बिजनेस की खबर आती ही नहीं, आती भी है तो पेट्रोल और डीजल के हाहाकार को लेकर के खबर आती है. तो हमारे यहाँ प्रॉब्लम क्या है टैक्सेशन को लेकर के? मैं आपके ओरिजिनल क्वेश्चन पे आता हूँ, डायरेक्ट टैक्स को लेकर के. हमारे यहाँ सबसे बड़ा प्रॉब्लम है कि वी आर लिटरेट बट वी आर फिनेंशियली इलिटरेट. हमारा फिनेंशियल लिटरेसी सिर्फ 27% है, 80% प्लस हम लिटरेसी लेवल देखते हैं. और अगर मैं टैक्स लिटरेसी की बात करूं, इट इज लेस देन 5%. अब ये जो टैक्स लिटरेसी है, यही हमारे लिए सबसे बड़ा प्रॉब्लम है. हम लोग देखिए 1961 के इनकम टैक्स एक्ट को बदले कितने डिकेड्स के बाद, ऑलमोस्ट 6-7 डिकेड्स के बाद हम इनकम टैक्स एक्ट 2025 और इनकम टैक्स रूल 2026 जो कि अप्रैल 1, 2026 से इंप्लीमेंट हुआ। अगर मैं जीएसटी की बात करूं तो जीएसटी को बनने में 17 साल लगे, छोटे मोटे समय नहीं था। पहली बार इसका कंसेप्चुअलाइजेशन 2000 में हुआ था जब विजय केलकर साहब की कमेटी बनी थी और फाइनली वो इंप्लीमेंट हुआ 1 जुलाई 2017 से। तारीख पे तारीख लगती गई, वो बदलता गया। जहां तक सवाल इनकम टैक्स का है, मुझे याद आता है कि 2010 में मिस्टर पी चिदम्बरम वाज द फाइनेंस मिनिस्टर एंड ही प्रेजेंटेड ड्राफ्ट डायरेक्ट टैक्स कोड। और डायरेक्ट अगर ड्राफ्ट डायरेक्ट टैक्स कोड को अगर आप 2010 का उठा के देखें और इनकम टैक्स एक्ट 2025 को देखें तो बहुत सिमिलैरिटी है। इनफैक्ट एक सिमिलैरिटी जो 2025 के पहले ही इंट्रोड्यूस कर दिया गया, दैट वाज द एग्जेम्पशन लेस टैक्स रिजीम व्हिच इज कॉल्ड एज द न्यू टैक्स रिजीम। अब जैसा मैंने आपसे कहा कि हमारे यहाँ एक प्रॉब्लम यह है कि टैक्स लिटरेसी बहुत लो है, बहुत कम लोग टैक्स के बारे में जानते हैं। तो डायरेक्ट टैक्स को लेकर के सबसे बड़ा प्रॉब्लम जो आता है, जो हम लोग एज अ कह सकते हैं कि एक मीडिया पर्सन के नाते हम लोग फेस करते हैं, लोग कहते हैं हमें समझ में नहीं आता, क्रिटिसाइज बहुत ज़्यादा करते हैं कि डायरेक्ट टैक्स में ये प्रॉब्लम है, ये प्रॉब्लम है, इनकम टैक्स में ये प्रॉब्लम है। अब देखिए स्थिति यह है कि आज जब देश में 9.5 करोड़ लोग रिटर्न फाइल करते हैं, हार्डली वी हैव 1.5 करोड़ एक्चुअल टैक्स पेयर। तो अब 1.5 करोड़ टैक्स पेयर्स के बीच में भी ये शिकायत बहुत है कि ये हमारे लिए समझ में नहीं आता। तो दिल्ली का जहां तक मूड का सवाल, आपने जो मूल सवाल पूछा था, मैं दिल्ली की ही बात नहीं करूंगा, मैं ऑल इंडिया की अगर बात करूं तो डायरेक्ट टैक्सेस को लेकर के सबसे बड़ा ये है कि अभी लोगों के अंदर उसके बारे में जानकारी कम है। अभी सीबीडीटी ने एक एक्सरसाइज शुरू किया है जिसको अलग अलग स्टेज पे वो जो है वो उसको पब्लिसाइज कर रहे हैं, न्यू जो इनकम टैक्स लॉ है उसके बारे में लोगों को बताने के लिए। लेकिन सवाल है कि जब टैक्स का बेसिक लोगों को पता नहीं है तो आपके डायरेक्ट टैक्स को लोग कैसे समझेंगे। तो मुझे लगता है कि आज के दिन में सबसे बड़ी हमारी समस्या जो हम लोग फेस करते हैं, लोगों के पास टैक्स की अंडरस्टैंडिंग बहुत कम है और टैक्स के रेगुलेशंस, टैक्स के नोटिफिकेशंस, मैं अभी कह रहा था, अभी बातचीत कर रहा था कि जब कभी भी टैक्स के नोटिफिकेशंस आते हैं वो हमारे लिए एक टॉर्चर का दिन होता है, क्योंकि उसका ट्रेल बिठाना पिछले टैक्स नोटिफिकेशन से मैच कराए। क्योंकि अभी नोटिफिकेशंस क्या आता है, टू बी सब्स्टिट्यूटेड बाय दिस, दैट्स इट, अंडर सब सेक्शन 5 सेक्शन 8 ऑफ ओरिजिनल रूल सो एंड सो। एंड ओरिजिनल रूल कब हुआ था, पता चला कि 1962 का, मैं 1961 एक्ट की बात कर रहा हूं मैं। तो प्रॉब्लम सबसे बड़ी क्या है कि टैक्स को लेकर के जो गवर्नमेंट की तरफ से एक लिटरेसी कैंपेन चलना चाहिए था वो नहीं है, और उसका एंड रिजल्ट ये है कि डायरेक्ट टैक्स को लेकर के या इनडायरेक्ट टैक्स को लेकर हम शिकायतों का अंबार ज्यादा लगाते हैं, सॉल्यूशन के बारे में कम बात करते हैं क्योंकि हमें समझ में नहीं आता है। तो मूड का जहां तक सवाल है, मूड की सबसे बड़ी समस्या यह है कि टैक्स लिटरेसी जब लो है तो आपके गवर्नमेंट के एफर्ट जो है वो फ्रूटिफाई नहीं होते हैं। अभी मैंने एक गवर्नमेंट का प्रोग्राम अटेंड किया था जिसमें डायरेक्ट टैक्स को लेकर के उन्होंने समझाने की कोशिश की थी। यू विल बी सरप्राइज टू नो the people who were sitting on the dais, on the stage, they were talking like a very high technical expert. अब मेरा सबसे सिंपल सा सवाल यह है कि जो हमारा ऑडियंस है, हम उस तक पहुंच ही नहीं पाए, हम उस तक समझा ही नहीं पाए, तो हम उस टैक्स के बारे में हम कैसे उसको बताएंगे कि ये अच्छा है या बुरा है। आप हमें जजमेंट करने का कोई मौका तो दीजिए, हमें जजमेंट करने का आधार तो दीजिए, बेस तो दीजिए, ताकि हम समझा सके लोगों को। देखिए मेरा बैकग्राउंड इकोनॉमिक्स का है तो शायद मेरे लिए आसान हो जाता है थोड़ा, मैं ये नहीं कहता हूँ कि बहुत ज़्यादा होता है, आपकी तरह तो बिल्कुल नहीं होता, आप चार्टर्ड अकाउंटेंट। इनफैक्ट विवेक भाई मेरे बहुत अच्छे, जिनको कहें कि कभी भी कोई ज़रूरत होती है तो मैं इनको सबसे पहले कहता हूँ विवेक भाई समझाओ, मुझे नहीं समझ में आ रहा है। तो आप जैसे मित्रों की बदौलत मुझे मदद मिलती है और हम जो है एक मीडियम के तौर पर मासेस तक पहुँचते हैं। तो मूड में हमारे लिए प्रॉब्लम कहाँ पर आती है कि जितना कन्फ्यूजन है और गवर्नमेंट की तरफ से जो हमें जो मटेरियल दिए जाते हैं वो इतने कॉम्प्लिकेटेड होते हैं कि आपको मैं बता नहीं सकता हूँ। आपको कई बार अगर मैं वो 5 पेजेस आपको भेज दूँ तो आप लोग भी सर फोड़ेंगे कि पता नहीं मुझे किस जन्म के पाप का जो है वो एक ये फल मिल रहा है, किस जन्म के पाप की हमें सजा उठानी पड़े। टैक्स इतना बुरा नहीं है, टैक्स हमें देना है, क्योंकि अगर हम टैक्स नहीं देंगे तो गवर्नमेंट कैसे चलेगी। लेकिन हम समझा नहीं पा रहे हैं कि टैक्स देना आपके लिए क्यों जरूरी है, और यही इस न्यू इनकम टैक्स एक्ट 2025 और न्यू इनकम टैक्स रूल्स के मूड को बिगाड़ने का काम कर रहा है। जीएसटी आज 9 साल होने को आ रहे हैं। हम लोग 1 जुलाई 2017 को, इनफैक्ट 1 जुलाई जो है वो आपका सीए डे भी होता है। तो 1 जुलाई 2017 को जब हम 9th ईयर में 10th ईयर में इंटर करेंगे जीएसटी को, फिर वही समस्या आएगी कि जीएसटी 3.0 में क्या होगा। तो ये मूड स्पॉइल हो गया, ये मूड बिगड़ गया है। क्यों बिगड़ गया है? क्योंकि उसकी समझदारी के लिए जो कोशिश हम लोग उम्मीद कर रहे थे, वो कोशिश में कहीं ना कहीं कमी है। तो विवेक भाई, मूड अच्छा नहीं है।
थैंक यू शिशिर जी। और शायद हम सारे ही लोग यहाँ पे जो बैठे हैं, हमारा जो किचन है वो टैक्स से चलता है, तो शायद जो रिजाइम है, जो सिंपल भी है, उसको थोड़ा कॉम्प्लिकेट करने का काम हम लोग भी करते हैं थोड़ा। सो हम लोग सभी जो हैं, हम लोग भी चेष्टा करते हैं थोड़ा टैक्सेशन समझने का। एंड बट इनकम टैक्स एक्ट 2025 which has come, while it is a fact, I always say that if you want to understand Income Tax Act 1961, then you read the corresponding section of Income Tax Act 2025. So, but there are certain intricacies, even due to the simplification sometimes, the meaning or the interpretation may change in future. And for that, I think one of the most complicated areas, if at all, is transfer pricing. And Himanshu, I'll come to you. What we understand from the various discussions which are happening, there is some change in this associated enterprise, definition in this section 92A. Now it becomes, I think, section 162. So what is that? What are the implications? And again, there is a hierarchy which is given in section 159, which was earlier there also, but possibly in a different form. If you can throw light on that in light of the earlier and future transfer pricing disputes.
Hello. I think Vivek has raised two questions which are completely poles apart. One is North Pole and one is South Pole. And therefore, just bear with me. I'll take some time to explain since you have raised very important questions. So first, if you permit me, I will take the second question first on the treaty interpretation. Now, I'll try to make my best to make it as simple and dispel my friend's concern that Income Tax Act is, and we may try to make it complicated. So if we look at treaty interpretation, right, many of us as chartered accountants, as tax function within the organization, make payment to non-residents. And then the question comes on how it is, the subject payment is taxable under the applicable double taxation avoidance agreement. Now, if you look at the current 1961 Act, and I will go with the flow which Vivek has rightly mentioned to say what the 1961 Act lays down, and then what's the change to the 2025. Now, if you look at 1961, we all know that the settled principle is that under section 90 subsection 2, the provisions of the double taxation avoidance agreement is supreme. So if there is a conflict between the provisions of the double taxation avoidance agreement and the act, the DTA shall prevail. Now this is subject to one caveat where general anti-avoidance rules apply. So where GAR applies, then you go by the Income Tax Act, then treaty supremacy is limited by GAR. This we are fairly comfortable with the existing law. There is one more provision under the current law, section 90, which says that if there is any term which is used in the agreement and it is defined in the agreement, then you go by that agreement definition. So let's say, for example, you are making a payment of interest or royalty to a non-resident. There is a definition of interest and royalty under the 1961 and 2025 Act. You apply that, and then you go to the corresponding applicable treaty, apply that definition, and if the treaty definition is more beneficial, you go by that definition, right?
A common example is when you make technical services payment to a country like USA or UK, you have a restricted definition of fees for included services under those agreements, whereby certain technical payments may not be subject to tax in India. Now, this is the established position. However, over a period of time, there has been various complications as to how certain things are to be interpreted, where a particular expression is neither defined in the agreement or in the act. So I'll draw a very simple flowchart for you. There are 4-step rule under the 2025 Act, under section 159 subsection 7, which clearly lays down how a particular expression or a term which is used in the agreement but not defined in the agreement, how we'll interpret. So rule number 1, if a particular expression is defined in the agreement, agreement is supreme, go by the agreement. Rule number 2, if the term is not defined in the agreement, then you go back to the Income Tax Act. If the term is defined under the Income Tax Act, then you go by that definition. So an example would be the term liable to tax. We all know liable to tax is pretty much used in all the treaties under Article 4, but it is not defined under the treaty in a clear manner. So under the Act, you go, under the 1961 Act, you go by 229A, and under the 2025 Act, you go by section 2 subsection 66 liable to tax definition. So that's the second rule. Now what happens in a scenario where a term is used in the agreement, but it is neither defined in the agreement nor in the Act? So rule 3 says that it has to be laid down in a manner under any notification which is issued by the Government of India. Now there is only one notification as on today, to the best of my recollection, which was issued in 2008 defining the term may be taxed. May be taxed was defined in one of the notifications. So first, agreement, not in the agreement, go by the Act, not there in the agreement or the Act, go by the notification. Now what happens, and this piece, where it is neither in the agreement, nor in the Act, nor in the notification, this is the new clause C under 159(7) which has been added, and very, very important, and unfortunately it is not very happily drafted, but I'll try to 1 minute simplify for you. It says that if a term is used in the agreement, not defined in the agreement, not defined under the law, Income Tax Act, not defined under the notification, then you refer to any other act of the central government relating to taxes. That's the first principle. So I have to either go to CGST or I have to go to customs or similar other act which deals with taxes. Now the word used here is act. Now the question is whether if a term is not defined in the act, let's say for example customs, but it is issued under a notification under the customs, can I refer to that? Act means act. Can I refer to a definition under the subordinated legislation is an open question. Now suppose even after this I don't get an answer, a term which I don't find an answer to any of the other fiscal statute, then it says that you can refer to any other law for the time being in force. So first limb says act, the second limb says law, and law can include act, circulars, notifications, everything. So there is a subtle difference between when you make a reference to other fiscal statutes, where you have to necessarily refer to the main act, but in case of any other law, you have to refer to all the supporting legislation. An example, the Supreme Court case in the case of engineering analysis dealing with payment of software, where the term royalty was interpreted under the treaty. The word copyright had to be interpreted, and a reference was made to Indian Copyright Act to say whether a shrink wrap software or the rights which is given under the use of software amounts to transfer of the copyright or the transfer of the right in a copyright. So that's an example. So these are the 4 steps which are involved in the treaty interpretation. First 3 are pretty simple. The 4th additional rule which is introduced in the 2025 Act is something which we have to navigate as the situation emerges. Have I been able to make myself clear so far as the 4-step rule is concerned? I'll just stop here, Vivek, before going to transfer pricing.
Yeah, so I think you have spelt it out, very, very nicely in the, hierarchical manner. But this 4th, which you say 159(7)(c), this is the most critical. Now for reimbursements, right, we have a term, say in GST, pure agent. That is equivalent to reimbursement. So you feel that if it is used, the word pure agent is used, one has to refer to GST, CGST Act, right?
So I mean, I
And
may be
that
only
brings-
aware for CGST, it says any other act. So we have to look at all the fiscal statutes. Maybe a chat GPT or a Claude may help if there is similar word which is defined in any other statute possibly.
Claude without hallucinations.
Yeah, of course.
Right, yeah. So I think that is well explained. And do you want to take this associated enterprises or we'll come back?
Or maybe I think it was
Yeah,
a
let us
lengthy,
take,
yeah,
it was a
let's-
very, longish, it will take some time to digest. So let the audience digest and we'll come to something which I think all of us face. We discussed it in the first session. Also, I'll come to you, Arijit. And one thing which has reasonably been simplified is TDS under this new Income Tax Act 2025. And we have discussed it at length, one section for 71 sections, etc., etc. So what is your take on these new TDS provisions and what are the issues which may arise going forward, which trade needs to be wary of?
Sure. So as we know that in the new act, there has not been any substantive change. So it's more of a structural change in most of the part of the Income Tax Act 2025. Now, as far as the TDS is concerned, basically the rates, etc., the sections have now been tabulated to make it more simpler. Earlier there were so many sections. Now everything has been clubbed into 11 sections. There are 4 or 5 tables through which we can refer to the tax rates applicable, whether it's a resident, payment to a resident, or whether it is a payment to non-resident. So overall, and there are footnotes below the table. So in a way, when we were reading it, sometimes it becomes a little confusing because again the footnotes refers to serial numbers in the tables. So, and in a way I felt that the earlier version was better since we are more used to it. But again, I would say TDS would be a new challenge in my view, considering so many tables which have come in section 393 to 394. Now, what they have done well is captured all the definition in one particular section. And in a way, we can say it will be easier to read, obviously, but very difficult to navigate from one table to other, from one notes to the other. From a, I would say, rationalization, I think they have done, and it has come through the finance bill only, that they have streamlined the TCS return filing deadlines. Now they have been aligned with the TDS return filing deadline. Earlier, the March end provisions for TCS had to be paid on 7th of April, while the TDS payments were due on 30th of April. From next year, it has been aligned to 30th of April. So that's a welcome move. And they have increased TCS on some of the items like scraps, the liquors, the coal and iron ore sale from 1% to 2%. But at the same time, for the LRS schemes, they have reduced the TCS rates from say 5 or 20% to 2%. So these are the broad changes as far as the domestic TDS are concerned. There were certain expectations from the industry, one of which was whether issuance of TDS certificates are still required, because everything is currently appearing in Form 26AS. Still, there is a penal provision for not issuing TDS certificates and giving it to your vendors. That is one. I think there was no clarity on this. Another important practical challenge that everybody will face once they file the Q1 TDS return is if there are any unconsumed challan as per the old act, whether it can be used in the current law. So that's, we will only come to know when we file the TDS returns for the current financial year. Otherwise, I guess it's more or less same as far as the TDS provisions are concerned.
Right. Thanks for clarifying this, Arijit. In fact, in the morning we were speaking about TDS very briefly, and in the lunch session one of the audience, Pawanji, was asking me, I mean, because I went very fast. Possibly, there may have been a confusion. We have only represented to the CBDT that this year-end provisions, payment through challan, that may be made only under one section 393, and then it may be allowed to be appropriated table-wise. But as of now, there is no change in position. Even the new challans, I think, they have to be made the table-wise, serial number-wise. You see what I saw. But Arijit, you have picked up a very important issue that whether if any excess payment is there in the earlier regime, whether you can use it or consume it in the new act, that needs to be seen when the TDS returns are filed. Which brings me to Bikash. Bikash, I think, this is a transitional thing which Arijit has spoken about in the TDS space, right? But we know transitional provisions 536, that is the, I think, one of the most important provisions which would be applicable in this tax year 26-27. So a few issues and pointers which industry needs to be aware of, and in this year on the transitional provisions issue.
Very good afternoon, everyone. So very important question, Vivek. I think with respect to the transitional provisions which have been mentioned in section 536 of the new Income Tax Act 2025. Now, effectively speaking, as on 1 April 2026, we are on two railroad. One, we need to deal with the 1961 Act as well, though it is repealed. For years before tax year 26-27, and from tax year 26-27, the new Act 2025 is effective. Now, what does this mean to the normal taxpayers? So, any scrutiny assessments, any reassessments, and or any rectifications that is to do with assessment year 26-27 or before will continue to be done in the old Income Tax Act 1961. Anything to do with tax year 26-27 and going forward will have to be done under the new Income Tax Act. So I mean, just to simply put, don't throw away the 1961 Act from your office table. It is very, very much relevant. All the litigations and everything still needs to be done under that Act. Now, secondly, now what happens to the approvals, the notifications, the circulars and all that has been issued under the 1961 Act? This section clearly specifies that the rights, responsibilities, liabilities and all, everything, including the obligations and all, will continue to be there in the 2025 Act as well. So few approvals and all that you have got for your trust or anything, that continues to be applicable under the 2025 Act as well. Now, secondly, there is some bit of ambiguity as to what happens to some of the disallowances that you have taken under 40 small a. Non-deposit or non-deduction of TDS, but then subsequently you deduct and deposit as well. Or 43B like items, wherein though since you have not paid it till financial year 25-26, but paid subsequent to financial year 25-26 and all. Though the law is not very clear here, but the go-to view is that it should be allowed on the payment basis. So on an overall basis, it seems like the transitional provisions are very well drafted. All the circulars, notifications, everything will be taken care of by the 2025 Act. Your assessments and all which has been taken place, any appeals, etc. and all, the past matters will continue to be in the 1961 Act. And anything to do with tax year 26-27 will be under the 2025 Act. Just one last thing. Even if you log into the income tax portal, this navigation has been very swiftly and very exceptionally well maintained as well. So you will find that maybe you need to respond to a notice which has been issued for a tax year, for an assessment year 25-26, that has to be done under the 1961 Act. But suppose if you need to pay the advance taxes on 15th of June, then that navigation, that will be under the new Income Tax Act 2025. So all this navigation and all has been properly documented or properly captured in the tool as well. Thank you.
Yeah, So the takeaway is you have to have two books, right? 1961 book and 2025 book. But you picked up an important point, Bikash, regarding this 43B, 40A, etc. Uh, but tell me this, there is an amendment in this budget. In fact, in the first session, we were discussing this under this 536(2)H. Whether that amendment has taken care of this deductibility, where earlier it was only for specified violations. Now they are saying for any reason.
Specifics is not there. As I said that the go-to view is that there should not be any challenge. I mentioned
That should be eligible, right, right. So we'll come back to you, Himanshu, again, and you know, as Shishir ji has said, that we take care of so many things. So पहले transfer international taxation, फिर TDS, फिर transitional provisions, अब फिर से हम आते हैं on this international taxation. And I think whoever is dealing with any M&E, you know that associated enterprise definition, that itself to identify whether a particular enterprise is an associated enterprise or not, that is a challenge. Now I think Himanshu, after this new section 162, which is the new section for 92A, somehow I feel that with this amendment, it will be more difficult to understand. Your views on that? Or has it been simplified?
Hello, yeah. So I think this is one area which thankfully things have appeared to be little simplified. So again, I'll go by the normal thought process of our brain, that is from 1961 Act to 2025 Act. Now, if you look at the current definition of associated enterprise, and before I make that statement, 60% of the global trade, as we know, around the world happens between related parties. 60% of the global trade. That's the information which is available in the press. And therefore, this importance of transfer pricing in a cross-border situation. Now, associated enterprise is a term which is used when there is a cross-border transaction between related parties. And under the 1961 Act, you had this definition of associated enterprise under 92 capital A. And if you look at 92 capital A, there are two broad buckets. The first broad bucket lays down the general principles of management, capital, and control test. So if one enterprise is having directly or indirectly a participation in the management, capital, or control of the other enterprise, then the two enterprises are said to be associated enterprise. And any cross-border transaction between these two enterprises qualifies for transfer pricing compliance. Now there was a second box of rules which listed down 13 deeming situations where the two enterprises were deemed to be associated enterprises. So let's say, for example, if one enterprise has given more than 50%, 51% of the loan to another enterprise, then by virtue of giving 51% loan, it becomes related party, right? Another example is if one enterprise underwrites or guarantees more than 10% of the borrowings. Another situation is where 90% of the raw material dependency is on one of the parties. Another situation is where the entire business of one enterprise depends upon the patent know-how of the other enterprise, which typically happens in a royalty franchisee kind of a situation. So therefore, the debate which happened under the 1961 Act was whether these 13 situations, even if I fall under these 13 deeming situations, whether I still need to go to the first box of management, capital, and control and satisfy both of them to qualify for associated enterprise, or only falling under the deeming provision is itself, or only falling under the management, capital, control, or MCC test would qualify. Simply put, whether both the boxes have to be ticked or only one of them is sufficient. And here is where the judiciary was a bit divided. One line of thought process, I mean, there are, I don't want to again, bore the audience with the technical citations, but one school of view very clearly said that looking at the composition of the shareholding, looking at the composition of the board of directors, looking at the composition of KMPs in the companies, you can determine whether one enterprise is effectively participating in the management capital or control of the other enterprise. And that itself is sufficient. And cases have gone to the tribunal and the high courts. The other situation, as I said, was they had looked at the deeming provisions itself and said that if you are not satisfying, let's say instead of 51%, I have only borrowed up to 50% or 49%. Then I get out. I don't go back to the management capital control test. So therefore, that's another line of judgments which are available under the 61 Act. Now what the 162 of the 2025 Act does, it simplifies this. It actually consolidates both the clauses. So effectively now, I don't have to independently test management capital control and the deeming fictions separately. The way it is now drafted, the definition of associated enterprise, whether I satisfy management capital control test or I satisfy any of the deeming clauses, I will qualify, or both the parties will qualify to be associated enterprise. So I think, simply put, the entire litigation of whether cumulatively I have to satisfy the definition or exclusively one of the boxes is now put to rest, hopefully. And then you just go by the clauses. If any of the clause you put a tick, then you qualify as associated enterprises under 162.
Right. So Himanshu thinks it's become simpler. Let's see about the authorities, how they kind of interpret it, and now, hopefully, they will consider where there is no indirect control, then they'll not put everything under that management, because by and large, even if you send few emails up and down, the way it is interpreted ki bhaiya ye to email itna to evidences hai, so you are being controlled. So which brings us to you, Arijit. Globally, what is happening, I think there is a lot of unrest even in India after this Tiger Global judgment, and MNEs, everybody is, possibly they are realigning their position to this Tiger Global judgment. So, number one, in case of an MNE where you have multi-country, locations, what are the precautions to take after Tiger Global? And more generally, for all of us, two things. This new Form 15 CACB, which becomes 145, 146, what are the precautions to take? And whether this new Form 10F, which is the new Form 41, whether that becomes mandatory in addition to the TRC or not after Tiger Global.
Sure. I think we have to link all this discussion, and in a way I would say after the Tiger Global judgment, which I am sure all of you must be aware of what was the, but for the completeness of the discussion, I will just mention the facts, what happened in Tiger Global, that there was sale of shares by a Mauritian entity for of the shares of a Singapore entity, and the Singapore entity derived its value from India. So it was a case of indirect transfer. The transferor, Mauritius entity, claimed that capital gain transaction to be exempt from tax by relying on the India-Mauritius Treaty. Now, Supreme Court, the matter traveled from advanced ruling to High Court and then reached to Supreme Court. The Honorable Supreme Court again gave certain observations, and those observations will have huge ramifications, not only to the non-residents, but also to the resident payers making payments outside India. I will discuss how it is relevant. Now, the Honorable Supreme Court, first of all, invoked general anti-avoidance rules while interpreting the, on the facts of the case, while interpreting the treaty, and mentioned that the company was, the Mauritius entity was formed mainly to take tax treaty benefit. The Supreme Court also observed that even if there is a TRC, the tax residency certificate of the Mauritius entity, Still, that is not a conclusive document to grant you a tax treaty benefit. Now, going by these two observation, I think there was a lot of panic that was there among the non-residents. First, because of invoking GAR at the Supreme Court stage, which is generally, we know that GAR has to be invoked at the AO level and then it travels upwards. But it had been invoked for the first time at the Supreme Court stage. And the grandfathering which was there in the domestic provision, that any investments which were acquired before 1st April 2017 were outside the ambit of GAR, that was also nullified in that judgment. Thankfully, Government of India, the Ministry of Finance came out with a notification on 31st of March, again reinstating clarifying that the GAR provisions will not apply to investments which are acquired before 1st April 2017. So that's a welcome move on the part of the government. Now, that doesn't mean the ramification of the Supreme Court judgment is over, because there are other observations like on the TRC, which is not the only document that needs to be considered for granting treaty benefit. The problem lies there. Why? Because going forward, any transaction where countries like Mauritius or any Singapore or any other country which have favorable tax treaty provisions on capital gains, dividend or interest, this will invite attention of the income tax department. Why? Because these countries have favorable tax treaty provisions, and always, since it has been held that TRC is not the only document to be seen to test that tax residency. So benefit of treaty may be denied because one of the main condition to get the tax treaty benefit is that there has to be a tax residency certificate. So whenever any resident Indian makes any payment to a non-resident, to give them a favorable position as per the tax treaty, there has to be a TRC, which is called a tax residency certificate. Now, if that document is not to be relied, and there has to be, and whoever is making the payment, or even I will link it to the accounting certificates in form 15 CB also. So as an accountant, when I am issuing the certificate stating that this remittance will be taxed at this rate as per this tax treaty provision, then I am relying on the TRC provided by the non-resident. And if somebody says that TRC, you cannot rely blanketly on that TRC, then there is a problem. So as an accountant, and I will just link it to form 146, which is form 15 CB. So as an accountant, how do I ensure that the TRC is correct, or whoever I am making the payment is the beneficial recipient of the income? So there, I guess, this judgment has caused a lot of problem. Going forward, I guess the changes that have been made in the Act, 2025 Act, is also in relation to the Form 10F. Now earlier, it was not mandatory to file Form 10F, right? Because the section itself stated that if whatever information is required is there in the TRC, then you may ignore, you may not file Form 10F. Now, that exemption is not there in the current Income Tax Act. So it means that Form 10F is a mandatory requirement. The section is silent on the fact whether we need to file the Form 10F at the time of making the remittance, or when it has to be filed to take whether while taking the treaty benefit we have to file Form 10F. But again, through an FAQ, CBDT has clarified that in order to take tax treaty benefit, you have to file Form 10F, and you can file it only once. So this is again the second problem, which I will discuss now. Earlier, Form 10F could be filed any number of times. Now, suppose a situation, I am doing a transaction today. First condition, in order to apply the tax treaty benefit, I would require a TRC, and I have to electronically file the Form 10F into the portal. Now, in many jurisdictions we have seen, the TRC is always issued after the end of the year. Now, as we said today, I don't have a TRC, so I cannot file a Form 10F. Then, am I eligible to take the tax treaty benefit? So there lies the question, and we expect that there should be some clarification in those scenarios whether I can rely on the past year's TRC to carry on the transaction and take the tax treaty benefit, or I will go to the domestic law if I see the tax exposure is huge rather than becoming an assessee in default. So broadly, I think from the, if I quickly summarize, from the Taggle Global judgment, the beneficial test and the TRC related observation, that has caused a lot of issues to in the minds of the taxpayer. Even if we look at the Form 146, which was earlier a 3-pager form, is now a 5-pager form, with a lot of details relating to the non-resident, like the tax identification number. In case you have a TRC, you have to quote the TRC number. And if in case you are not having a TRC, you have to mention that you don't have a TRC. It is not stopping you from giving a tax treaty benefit, but obviously this information is going to the income tax office that you have applied the tax treaty provision without a TRC. Secondly, what was absent in Form 146 earlier, 15 CB earlier, which is a current 146, that there was no verification. Now the accountant is certifying that whatever is mentioned in the form, whether it is pertaining to the resident or the non-resident, including their place of business, everything is true and correct. So that's a very important change, I would say, which has come in the current 146 form. And one has to be very mindful when we issue this certificate. And I'm not very sure as a accountant, how will I verify the place of business, the addresses, the genuineness of the TRC, which they are providing, which earlier I was relying mainly on management representation.
That remains an issue. So actually Shishir ji has a flight to catch, and we'll just offer him the memento, but we'll continue. I'll hold you back for another 5 minutes. We'll continue this after felicitating Shishir ji.
I request our chairperson to please present a memento on behalf of the chamber. I would request sir to do one more honor to us. Sir, I would request to please present a memento on our behalf to Mr. Jalan.
I also.
One more botheration, sir, for a group photograph with all the panelists.
This is advance.
One.
But GST is applicable on advance also. Thank you. So yeah, but Arijit, just one question, one shot, 30 seconds. ये सब 15 CACB करेंगे क्या? What to do?
I think we can only exercise as much as caution as much as possible to ensure that we have all the documents basis which we are issuing the certificates.
This is true consultant language. So yeah, but there are no straight answers.
Domestic law.
I understand, but Vikash, I'll come to you. Now, to follow from Orijit's previous discussion, on this TDS, I think on the low TDS deduction certificate, many of us are taking that deduction certificate has also changed, and there are many other changes like consumption statement, etc., which has come online. So what is your take on the precautions which industry need to take on the LTDS space in the new act?
Obviously, there has been, as we said in the first part of the discussion, that there's been quite a lot of changes, at least when you look into the new forms, etc. and all. And the intent, I mean, the intent of the 2025 Act, and if you see the budget speech of the finance minister, she was very clear that the intent of this provision of the new Income Tax Act 2025 is to make it more lucid, simple, and for easy understanding. And the main purpose is to reduce the litigation as well as provide more tax certainty. I mean, this was one of the ethos. And obviously, when you see the assessments happening under the 1961 Act and all the appeals and all, we all know that there is much room for improvement here. There are cases wherein we find that for 8 to 10 years, the cases are not being disposed of. We are finding that the assessments are being made without proper so-cause notice, or when a so-cause notice is coming on issue A, but the item that gets disallowed is on account of issue B. Now, similar is the case when you see the TDS aspects and all. Now, on lower withholding tax certificate, one important change that has happened recently is that even before the beginning of the financial year, you can approach the TDS officer for the lower withholding tax certificate. So you can approach the TDS officer, say, even if your next financial year starts from 1 April 2026, but you can approach the TDS officer for the lower withholding tax certificate even from the month of February or maybe early March. So this is one very important change that has happened, that you need not wait to file the application mid of 15th of April and then the officer takes a couple of months of time. So you can start the process even before the financial year kicks in. So this is very, very positive. The second important change that happened, and a very welcome change, there have been cases, but in case of few taxpayers, but in the number of deductors runs into more than hundreds. And to provide the exact details as to how much of money I would receive from those deductors was a difficult task. And also to identify those deductors. I may have a client from, say, item 1 to item 100, but maybe in the next financial year, I don't know whether the same item 1 to item 100 would be my clients. There could be change. Secondly, I am also not aware of as to what is the quantum of money the payers would give me. If someone gave me, suppose, 2 lakhs, it may be the case that in the next financial year, given the visibility, or maybe the visibility may come after 6 months as well to the new financial year, that he may end up giving me 10 lakhs of rupees. But how do I approach the assessing officer to seek the lower withholding tax certificate? Because as on 1 April or maybe before March, I only have the visibility of, say, 2 lakhs of rupees. Now, the important change that has come is that you can seek a blanket withholding tax certificate now, if the number of payers are more than 100. Now, meaning thereby that they will only mention the quantum, the aggregate quantum, and the rate. So which may be applicable for all the 100 parties and all, and you accordingly disperse those certificates to the payers. So meaning thereby that it is a very simple process, even if your client name is not between 1 to 100, but say the client name is 101, even he can use that certificate and apply a lower withholding tax rate while disbursing the amount to you. Now, there were certain challenges with respect to the same, because the name of the client was not coming in those certificates. It was a master certificate. So there was certain reluctance on the side of some big clients as to why do we give the lower withholding tax benefit since our name is not appearing. So that has been overcome now, and there is a new child certificate concept that has been brought in. So when you apply for the lower withholding tax certificate, you will be given a master certificate, and with your login details, when you key in those master certificate details, for a particular TAN of the client, you may obtain a child certificate that will bear the name of the client. And then if you share that with the client, with the amount you feel like, suppose if you have got a withholding tax certificate for 100, and if you think that 3 would be allocated to this client, feel free to allocate your number. So this is indeed very helpful, and this is one important change that has come under the very recently under the new Income Tax Act 2025, and I think it would be of immense helpful for the taxpayers wherein it is relevant. I think from TDS perspective, all other changes remains quite same, and Arijit discussed about few rate changes and all, but on a very high level basis, it's just the format or tabular presentation of the sections that we all need to be equipped. At the first glance, it seems like it is more complicated, but I think as we move forward, we may find it more simpler as well. Because if today, if anybody asks you a question that if you need to make a payment for professional services, suppose as at 31 March 2026, I'm sure that every hand would raise up here and say that it is section 194J in which you need to deduct the TDS, if it concerns financial year 25-26. Now, if the same ditto question I ask now, I'm afraid that very few hands will raise up, because we know that in the 1961 Act, there were 69 sections under the TDS, but now it is only 3. So you also, it is not only 194J that you can mention or only 393(1), but you also need to remember table serial number of section 393(1). I think we have still not reached that stage, and hopefully in the by next year when Vivek invites us all, we are prepared for that as well. That's all. Thank you.
Hopefully, we'll all be ready by then. Okay, so questions from audience. I think anybody? Or all are reading the new Income Tax Act still? Oh, yeah, or too heavy, after lunch. Okay, so I think there are no questions. So everybody has understood everything which we discussed. To that extent, I think we should have a huge round of applause for the panelists. Thank you.
Thank you. I request our chairperson to please present mementos on behalf of the Bengal Chamber to the panelists on the dais. To Mr. Himanshu Patil. To Mr. Arijit Chakraborty. And to Mr. Vikas Kumar Jain. Thank you all for joining us, the panelists. Now we will proceed towards the next session. Now we will be having a special session on GST year-end finalization and audit readiness for the financial year 25-26. The session will be presented by CA Ishan Tulsian, partner, R. Tulsian and Company LLP Chartered Accountants.
Hello. Hello. Good afternoon. Is my voice audible? Yes. Thank you, everyone. I would like to extend my heartfelt gratitude to Bengal Chamber of Commerce and Industry, to Vivek Jalanji, the chairperson of Fiscal Committee and Taxation Committee here at BCCI. Also to the entire BCCI team for having me here to discuss a very important topic today, which is the year-end finalization and audit readiness from the GST point of view for financial year 25-26. Usually I've made a very exhaustive presentation of close to 200 slides. I'll share that with the BCCI team. They'll share it with you. So usually I have a 2-hour session, 2.5-hour session. I'll try to summarize all of that, touch important, important vulnerable or focus areas in this 40-45 minute session. Okay, we may take question and answer later, in the last 5 to 10 minutes. Okay, without further ado, I would like to begin. So year-end review for financial year 25-26. Now, first of all, what do we see as accountants, chartered accountants, tax team, year of companies? There are two screens, right? What do we see? We need to do first output tax liability or outward supplies reconciliation. We are aware of that, right? Now, what types of reconciliations we need to ensure as an accountant or as a tax team or expert of our company, today standing on 21st of May, we may be having tax audits, statutory audits, ongoing now, or maybe happening a bit later. Perhaps then later, in the month of October and November, we'll be having our last October GSTR 3B and 1 filing. Then we will be having our annual GST returns. Before that, we need to touch base on all these points. Okay. So first, let us understand book versus GSTR 3B and GSTR 1. We are aware of this. Right? Nowadays we use softwares, right? KDK software, ClearTax software. We use Excel sheets also. That is outward supplies reconciliation or output tax liability reconciliation, but what we've reported in our GSTR 1 versus GSTR 3B and versus our books of accounts, right? In case if there is any discrepancy, which we can see here, what is the last date to make a rectification of such discrepancy? Can anyone tell me from the crowd for 25-26? 30th of November, very good. 30th of November 2026. So we still have how many months of GSTR 1 and 3B return? 6-7 months left, right? So we should be adept with this reconciliation. In fact, this should already have been done before we would have filed our March GSTR 3B and 1. Now let's go to the other reconciliation, that is e-way bill reconciliation. What is e-way bill reconciliation? We may be aware of this kind of a discrepancy notice. This is an attachment to ASMT 10. Has anyone heard of ASMT 10? Section 61, scrutiny of notices, GST. This is a live for a client. This is a client notice, an attachment to ASMT 10. What does it say? This is mathematical differences. They are saying what is the outward output tax liability as per our e-way bill data. What is our e-way bill data? We know e-way bill portal. Whenever we have to above certain thresholds, if we are making outward supplies of goods, we need to generate a way bill, right? So this way bill data is readily available to the department, to us. We need to either download all of that data from a Waybill portal. See, this is a notice wherein what is mentioned? Output tax liability as per Waybill data. If you were to see, IGST is 35,83,489. What have you paid in your GSTR 3B? 35,32,254. As per the department, for this particular financial year, you have underpaid output tax liability to the extent of 51,026.26. This I am not saying. This you have not prepared now. This the department is preparing 2-3 years later, after the year closure. Now what do you have to do? Why to wait until 2-3 years later? Why not such a reconciliation now? So what do? We make a reconciliation statement. It's as simple as that. What is the reconciliation statement? Reaching from point A to point B. What is point A? Output tax liability as per Waybill on top. Output tax liability as per 3B at the bottom. In between, reconciliations we need to make. Is there any Waybill on supply of service? Of course not. It's intangible. So we are going to add it to the e-way bill output tax liability because that sale is available in our GSTR 3B. But it's not available in our Waybill portal, right? What is the second? What possibly can be? Any sales which we have made for which the invoice value is under 1 lakh, interest rate, 50,000 interest rate, right? So we are going to make this reconciliation statement when? 2-3 years later, when the notice comes out. No, today is what I'm saying. This is a second reconciliation, extremely important. What is the third reconciliation? E-invoice reconciliation. What is e-invoice reconciliation? Are we aware that we need to create e-invoice if our business has annual aggregate turnover, means export, exempt, domestic, everything together, more than 5 crores in any of the preceding financial years, starting from 17-18 till now. In case if we don't do that, what happens? What happens? Is there any penalty on us as suppliers? Yes, there's a penalty. What's the penalty? Under Rule 48, Sub-Rule 5, 10,000 rupees or 100% of the tax in our sale invoice, per invoice. And what is the second ramification? Your recipient, your buyer, will he get the credit? Is it a valid invoice? No, he won't. So there is double whammy. Now what are you going to do standing today? We are going to download our e-invoice data from where? GSTR 1 dashboard. When we go to GSTR 1 on our GST portal, there is e-invoice data. We can download that, right? Download that. Ensure there is a unique IRN 64-digit alphanumeric number and QR code for each invoice, right? And ensure that each and every invoice has an e-invoice. Now, can anyone tell me the 30-day limit for e-invoice, which has started from April 25? For businesses having more than 5 crores or 10 crores turnover, what? 5 or 10? 5 crores is obligation to create e-invoice. But within 30 days, it's still 10 CR, right? So if your annual aggregate turnover is more than 10 CR, within 30 days from the date of invoice, you have to create e-invoice. If you don't do so, what will happen? You will have to nullify that invoice, create it, later on, right? And you would have to notify the department because there would be a difference in your invoice number. E-way bill is tagged with some other invoice which you have nullified now, right? So these invoices, these reconciliations you would require to do. What is the next reconciliation? We were just talking about Income Tax Act, we were talking about Form 26AS, Annual Information Statement, Tax Information Statement, AIS, TIS. Is there any integration of sales, output tax liability, purchases, input tax credit between Income Tax Department and GST Department? Is there integration? Yes. That's why we keep receiving notices from the Income Tax Department in case if there is any fraud or fake invoice case, right? So what's happening? We need to make a reconciliation or ensure that the turnover, which is mentioned in our AI, this is an AIS statement of a client of ours, wherein the turnover is mentioned as 5 crore 32 lakhs 57,491. This is as per GSTR 1 or 3B? As per 3B. This needs to match with what? Your statement, GSTR 3B statement, which you have filed in your GSTR 3B return for 25-26. If this does not match, there may be notices from both the sides. What's the next reconciliation? GSTR 1 versus 3B versus GSTR 7. Can anyone tell me what is GSTR 7? Do we file it or government departments file it? Government departments, very good. If we are government contractors, if our taxable value is more than 2.5 lakh rupees, what happens? That the government, before making the payment, deducts 2% TDS under section 51. What do? They need to file GSTR 7 within the 10th of the next month. And this appears, then what happens? We need to accept this TDS, right? TDS credit on our GST portal. Then an automated GSTR 7A TDS statement is generated. What is the reconciliation which we need to do? Consider the invoices of 26-27. My invoice, I am the government contractor to the government. Government will deduct TDS 2% and will, for instance, upload it in 26-27. When have you accepted it? 26-27. So prima facie, when in your electronic cash ledger, the 2% will reflect in 26-27. Prima facie, it will look like a sale from you in 26-27. If a notice comes, so you need to be in a position to prove to the department that, sir, this sale is not of 26-27. I've accepted the TDS in 26-27. Sale is of 25-26. So you need to ensure that the outward sale from the government contractor to the government has been reported in GSTR 1 and 3B in the correct year, even though the acceptance of the TDS credit may be in the subsequent year. This reconciliation needs to be done. Also, we need to ensure many times across forums when we talk, one government department I have billed, another government department has deducted my TDS, third government department has deposited it in GSTR 7. Has anyone faced any such issue? Many people do so. So what happens? There is no reconciliation difference of your sale, right? Because you are getting the electronic, the 2% credit in your electronic cash ledger, but your form GSTR 7A, your TDS statement will have the GSTN of the deductor to be some other person, some other government department, which is different from the recipient on your sale bill. So that reconciliation you need to do today. Goods in transit. What do we need to do? Goods in transit, can we claim input tax credit on goods in transit? What is goods in transit? Has it reached our principal or additional places of business? No. Can we claim it? Like for example, every month our purchase bill from the 25th of the month, for example, 25th of May to 31st of May, goods actually reach on 4th of June. Can I claim it in the input tax credit in May or in June? In June, right? Section 16, subsection 2, clause B. So what is happening? These are some audit observations of certain clients of ours, wherein it is mentioned that the goods started here. The goods, the purchase invoice date is later half of the your month, which is from 24th onwards. The goods actually received or the e-way bill expiry was in the next month. Now what happens when the goods are in transit? So in case if you don't have your consignment note, you don't have your GRN, goods receipt note, you don't have your delivery challans, you don't have your store register, you don't have any evidence that the goods have actually received in the month of the purchase bill. So later on, 2-3 years later, what happens? The department catches you and issues a particular audit observation like this. So what is the crux of the matter? That today, for all the invoices from the later half of the month, your purchase invoices, 20th to 30th, kindly ensure you have the weighbridge, your slips, you have your consignment notes, delivery challans, material receipt note, good receipt note, proper documentation in your store register to ensure and prove to the department later on that these goods which may have generated from later part of the month have actually reached in that month. In case not, then the predicament will be this: 1 month interest for early claiming of input tax credit. I should have claimed it in June, I claimed it in May. So the department, what is the maximum exposure? 1 month early claiming interest, input tax credit, right? Now, another point or audit observation here, what is there? That the truck or the vehicle number has not crossed a particular toll. As per their intelligence, they've tracked. It's coming, the goods are coming from, for example, Jharkhand. But few tolls, it has not crossed. They have the intelligence. And they say that kindly prove to us. What, when? 3 years later, 4 years later. Do we keep documents? We should keep documents, right? In GST, up to when? 6 years, right? Or from the end of the particular due date of the financial, your GST and 9/9C, or 1 year after the closure of the particular case. So 3-4 years later, when the audit happens, what do we need to prove to the department? That the goods actually received? As I mentioned, these section 16 subsection 2 clause B, this is the most litigated point for your GST, GStat, commissioner at the commissioner appeals level also, they are not, giving relief for these kind of cases that the goods have actually not received, or the supplier is fake, or due to some reason the invoice is fake. So here, what do we need to do? We need to have vehicle logs. We need to have e-way bills. What is vehicle logs? We may even go on to extend to download the RC status or certificate from Parivahan website of the truck which is impugned and saying it does not exist or does not have a route permit. We need to have e-way bills. We need to have weighbridge certificates to ensure that the supplier has actually weighed the goods from there and he sent it here. Before we take it in our godown, there should be another weighment certificate. Don't tear it. Kata slip needs to be there. There needs to be freight payments if we are making payment to the transporter. So they need to be there. These are all circumstantial evidences which we need to keep in case if any dispute comes later that some vehicle did not cross this toll, or some supplier has retrospectively cancelled his GSTN. We are seeing, right, our suppliers retrospectively their GSTN is being cancelled. So in that particular case, they are saying kindly reverse all the input tax credit against all the purchases made from the supplier from the beginning of time. So we need to prove that the goods have actually received us. It does not matter if he is never existent. We should have the documents and data. So here we should also have the bank statements, right? The bank transactions making the payment to the supplier, to the transporter. Also, if we have bought goods, we have manufactured it, we need to have manufacturing entries. You need to have inventory log. If we are selling it as a trader, we need to have consequential data for the outward also, right? So all of these things are very important. Today, not during the litigation time, today we should ensure that all of these documentation is there. Our internal controls are robust to the extent that we have from the point of PO till the point of receipt of goods from our, receipt of money from our customers. We should have each and every trail. If you are a manufacturer or a merchant trader, does not matter, right? Now, next reconciliation, physical stock versus book stocks. Unfortunately, has anyone experienced any INS 01 inspection at their business premises? Means GST inspection. Anti-evasion or DGGI comes in, they say that, oh, we have got intelligence that you have purchased goods from some supplier who is fake or who's a fraud. Or if they come and they do stock counting. What is stock counting? Here. This is a release letter of seized goods from a client of ours, wherein the DGGR and the anti-evasion, they came in and they started doing stock counting of the raw materials, finished goods, as on that date of the inspection, 18th of March 2025. And what did they start doing? They started doing this. That goods or finished goods or raw material as per your books of accounts versus what is there physically available. If there is a difference, if you were to see what I've marked here, the first column here, number of goods as per books, it's 49, 41 plus 8. And what is the number of finished goods which are found? 51. So this means manufacturing entries to the extent of 2 finished goods has not been passed as on the date of the inspection. Can it lead to a problem for you? Yes, it can lead to confiscation in case if they have information prior hand that you have secreted some place, some information or some goods basically. So what is the crux here? Today, standing as an accountant, we need to ensure that our physical stocks of raw materials, WIP, finished goods, all of that is matched with our book stock, at least as on the end of the financial year. On every day, or at least once in 2 days, we should have the proper internal control to update our books of accounts, maybe Tally, SAP, or whatever that is, with our stocks which are there in our production floor or whatever we bought. Otherwise, they can confiscate it. Okay, advance, receipt and adjusted. This is also one important point which we should all focus. As Vivek ji had mentioned about something about advance and GST. Are we aware that is there any GST applicability on advance received against supply of goods? No. This has been removed from 15th of November 2017, notification 66 2017, right? Now, we need to pay GST against advance, for advance against the supply of services. We are aware of that, right? But so many businesses I see, when we do audit, we see there is a mistake. What's happening when you receive advance of 20,000 plus GST in the month of May, for instance? Many people, what is happening during audits later on, 2-3 years later, the department is taking the bank statement. They are seeing supply ocha in the particular ledger of the customer, the date of supply or the invoice date is June. Acha, but some amount related to this particular customer has come in the month of March or May. So what is that? That is advance and against supply of services. So what happens? The department asks the assessee to pay the difference of interest of 1 month, means from May to June, and they ask them because this particular amount was later paid in the month of June, the advance portion, because the entire invoice value had been raised in the month of June. But the interest portion is still there. What I'm trying to say, in case if you've received an advance of 20,000 plus GST in the month of May, but you've done service and raised the invoice in the month of June, what are you going to do? Ideally, is everyone doing this? 20,000 we need to report where? In our table? In GSTR 1 where? In table 11A as unadjusted advance. And we need to report the advance amount in our GSTR 3B, right? Table 3.1A as normal, outward supply. Then next month when I issue the invoice of 1 lakh, do I pay tax again on entire 1 lakh or just on 80,000? In 80,000, right? So in GSTR 3B, I will report 80,000 only. Many people are reporting entire 1 lakh. So that's why they are paying GST on the advance portion twice. Or many people, 90% of the people, they're not paying GST early on advance receipt. So there will be an exposure of 1 month of interest or 2 months of interest. This is very important. Okay, now in case, we need to also see, in case if our supplier mistakenly mentions incorrect place of supply in his GSTR 1. My supplier of goods is in Karnataka, he sent goods to West Bengal. What is the place of supply for this transaction? West Bengal, destination of goods. Unfortunately, everything is correct. Invoice is correct, IGST has been collected. In his invoice, place of supply is mentioned as West Bengal. But while filing GSTR 1, he mentions place of supply as Karnataka. What happens? This place of supply, incorrect place of supply, gets auto-populated in our GSTR 2B as Karnataka. And what is mentioned there? It is mentioned place of supply outside the state, right? So ITC becomes ineligible. So today as accountants, as tax team members, we need to open our GSTR 2B, GSTR 2A, and we need to see all such place of supplies, ensure vouching, proper vouching is done of the correct place of supply with the invoice. Otherwise, this may be a problem later on. Okay, now when we are doing reconciliation of sales, many times we are paying IGST when CGST, SGST is to be paid, or we are paying CGST, SGST when IGST is to be paid, right? Vice versa. So in that case, what's happening? Let's see this particular example. I was to pay tax under RCM for IGST because this amount is being shown in my GSTR 2A, but I have not paid this. Under IGST, I paid 30,000 erroneously under CGST and SGST in my GSTR 3B. Now what happens? I have not done reconciliation. This has not been checked. If I check, then what is the last date that I can make this correction? That is 30th of November, right? But this is missed. What happens after 2-3 years? The department says, sir, you have not paid IGST to the extent of 60,000. Kindly pay that. So I can still pay IGST of 60,000 even later. and I can claim a refund of 30,000 CGST, SGST, which I have paid erroneously, incorrectly, right? When can I, what is the time limit for filing this refund? 2 years from the date of correct payment of tax. Do I need to pay any interest? No. Interest is exempt here. There is interest exemption under section 77, under section 19, respectively, of CGST and SGST Act, right? Read with circular 165. Refund is circular 135, right? So we need to see this today in our reconciliation statement of outward supplies, that if there is any problem, why to go for refund and pay and claim and all that? Kindly rectify it under in your GSTR 3B and GSTR 1 before 30th of November. These are some reasons why reconciliation differences happen for outward supplies. Now, for fixed asset sale, do we have to pay charge GST or do some input tax credit calculation for fixed asset sale under GST? Yes or no? Yes. So now, for example, this is today standing. I have my pro forma balance sheet. I see in the disposal column, I have few sales. What do? I either see what is on the transaction value, what is the output tax liability of 18% or 5%, that amount, or what is the second amount? Reversal of input tax credit as per this particular rule. There are two rules. Rule 40 sub rule 2, rule 44 sub rule 6. One rule says for every quarter, I'm going to take 5 percentage points, used of input tax credit. And the other one says I will count it monthly. Let's take this example. I have purchased goods on what? 1st of July 17. When have I sold it? 10th of May 19. How many years have I used? 1 year, 10 months, 10 days. As per rule number 40 sub rule 2. How many quarters are there? Can anyone tell me? How many quarters are there? Part of the quarter is also a quarter. 1 year, 10 months, 10 days. 1 year, 4 quarter, 10 months. How many? Right? So 8 quarters. Now, what are they saying? 8 quarters into 5%. That is 40% is used. Fine. What is the input tax credit? 36,000 when we had purchased. Now, how much do we have to reverse? 60%, remaining 60%. That is the unused portion. So, 36,000, 60% is 22,050. What's the other rule? It takes monthly. How many months? 1 year, 10 months, 10 days is 23 months. I've used 37 months, not used. The useful life of asset is 5 years. We are aware, right? Under GST. So 37 months pro rata of input tax credit, 36,000. I need to reverse today. Higher of the two. What is higher of the two? Higher of, if I've sold it today, I've sold it at 22,050 output tax liability on the transaction value. So output tax liability on the transaction value or input tax credit computation year, whichever is higher. Right? This is very important. So when we see on the credit side of our PL, profit on the sale of fixed asset. Debit side, we see loss on the sale of fixed asset. We need to not just rely on the financial estimates or the financial calculations. We need to recompute under the valuation rules under GST. Motor vehicle sales. Are we aware of this? Is it the same? No, it's the margin method. Very easy. What is the margin method? I'm selling it at 6 lakhs, second-hand car. My WDV under Income Tax Act, not Companies Act, Income Tax Act, as per book is 4 lakhs. 2 lakh margin, profit. I will pay 18%. That is what is my transaction value? 2 lakhs, 18%. Now, if you have a Mercedes or a Santro, what is the percentage? 18%. Earlier, there was a difference, 12% and 18. Last year, January, this got changed, right? Now, if you are selling the car below the WDV, as per Income Tax Act, that's a loss. So, as per margin method, no GST. You need to see this, all these computations today, right? Now, this only happens when you have not claimed the input tax credit under the erstwhile Act Central Excise or GST. If you have claimed, then it will be under the normal method. Right? Indirect incomes. Here, in case if you are a proprietor, you are having some rental incomes. It comes in your savings bank account. It's not a part of your business. But is GST applicable? Yes. Is it a part of your audited turnover? No. So I need to see in all my bank accounts, savings bank account, my business bank account, whatever earnings I am having, the nature of it. If it is applicable to GST, this will come as a part of our GST turnover. So this is also very important. Then credits on the expenditure side. Some very smart accountants till date, what do they do? They sell goods, they have packaging charges, loading, unloading, freight charges. All those are collections as a part of assessable value, right? What do? They take those other ancillary receipts and they set it off against the expense in the debit side. They don't show it as your top line income earning, but that is incorrect to the extent if it is not a part of your GST turnover. So you need to see that as well. Here, like what we mentioned. Job working, are we aware of this? If the inputs have not returned back within 1 year, or capital goods have not returned back within 3 years. So it is a deemed sale from the date of sending the goods to the job worker. So in that context, this is a real life audit observation wherein there was no ITC 04. Are we aware of ITC 04? Yes, it's a form wherein we mentioned the details of delivery challan out, delivery challan in, right? There was no job worker register. There was no delivery challans in and out. So what happened? All the input tax credit claimed in respect of all these job working invoices, they were all asked to be reversed along with applicable interest. Flip side, what can they say? You've sent the goods 1.5 years earlier. You've got it within 2 days, but where is the proof? Give me the proof. No, sir, I don't have IT04. Okay. I don't have your job worker register. Okay. I don't have delivery challans also. I've thrown it. Will they believe after 2-3 years that the goods have actually been received back? No. There'll be a double whammy. You won't be able to get the input tax credit on the job working invoices, as well as you may have to you may have to pay the output tax liability on deemed sales along with interest. These are real life notices. After 22nd of September, what's the residual job working rate? Can anyone tell me? Is it still 12% or 18%? 18%. Have we checked after 22nd September, is my job worker charging me 18 or still 12? There are many people, they are still charging 12, we don't know about it. And on the flip side, let's see this notice. Before 22nd of September, the audit department caught there are many job workers, they should be charging how much? 12%, but they were charging 18%. And I am claiming 18% as input. Return back 6%. This is a big problem. So you need to know the cutoff and the rates before and after 22nd of September. These are your ITC 04. Okay, these are certain, methods, or I would say, categories of reconciliation. You can see when the slide comes to you. Now, for input tax credit, if you were to see for input tax credit, can we claim input in our GSTR 3B more than what it is in GSTR 2B? Of course not, it's illegal now. From 1st of January 2022, right? Whatever is there in our GSTR 2B, that only we can claim, right? So that we need to see a reconciliation of input tax credit as per our GSTR 2B versus our GSTR 3B, right? Now, in case if there is an ineligible input tax credit, car, motor car, vehicle repair, where do we report? We claim it in 4A5, auto-populated from 2B. But do we need to reverse it? Where? 4B? 1. That's the permanent reversal, right? Have we done all of that? We need to see that. Okay, ITC reversal as per Rule 37. Are we aware of Rule 37? What is Rule 37? Can anyone tell me? 180 days, anything clicks in your mind? Exactly. There are 3 instances. I'll show you 3 different notices. First notice, belated payment. This is a real life client notice. Person had to pay in 2021. What is the rule? 6 months from the date of the invoice, if you've not made the payment, reverse the input tax credit temporarily in the next GSTR 3B return and reclaim it once you make the payment of the value of supply along with the tax. Is there any time limit for this reclaiming? Can anyone tell me? No, of course not, any time. Rule 37, sub rule 4, right? So here what is happening? This is belated payment. What's the liability? Interest. Can they ask us to reverse the input tax credit? No, because we've already made the payment, but belated after 2 years. So we need to make the payment of interest. That is first notice. Second notice, I've not made the payment at all. Disputed creditors. Aging analysis I see as an auditor that payment has not been made as on 31st of March 2026 for more than 6 months. What do I advise, or what do you advise to your company or management? Kindly do reverse this temporarily and pay the interest if applicable. Third, written off, remission of liability. If I've written off sundry creditors, it's another income item. Do I need to still pay or reverse input tax credit? Yes, because I have still violated Rule 37 or second proviso to section 16 subsection 2. That I have not paid at all only. 180 days so is obviously, it's a different matter altogether. Rule 37A, are we aware of this? It's very important. Rule 37A, our supplier has not filed his GSTR 3B. Now this has been curtailed to a large extent. If some supplier does not file his 3B For 6 months, he's gone. For 2 months, he cannot issue his way bills, right? So if any supplier has not filed his 3B, means he's not paid tax to the government. Is that a violation on your part? Yes, because you violated section 16 subsection 2 clause C. You cannot claim your input tax credit. But government allows you to claim input tax credit up to a certain extent. What does that mean? If I have a purchase bill of April 2025. Till what time can I claim, hypothetically, till what time can I claim this input tax credit before reversal? Can anyone answer this? No. I have paid to the supplier. Supplier has stuffed it in his bank account and he's not paid it to the government. So the last date before the government asks you for reversal is next year, 30th of September. The government asks you to go to your GSTR 2A, column number 18, to see as per filter whether supplier has filed his 3B or not. If it's no, what do? You again check it in GSTR 2B for September 2026, table 5, part A. Here you see they have mentioned all of those input tax credit ineligible vis-a-vis suppliers who have not filed their 3B. This only comes in September return. So today we need to still see as auditors, as tax experts, or as chartered accountants that how many suppliers have not filed their 3B. In case if I figure out up to 30th of September that these many people have not filed their GST or 3B, my suppliers, then what do? Within 30th November, I reverse that input tax credit permanently or temporarily? Temporarily, very good, in table 4B2. Can I reclaim this after 30th November? Yes, I can reclaim this once the supplier files his GSTR 3B. But this needs to be checked. And mind it, if we miss this, there is no relief now because there is Rule 37A and there is Section 41 which has come. So it's become the act, right? Are we aware of this electronic credit reversal and reclaim statement? Are we aware of this at all? This new GSTR 3B format. Everything comes in my 4A5, then I need to reverse permanently in 4A1, 4B1 and temporarily in 4B2. Temporarily, I don't have the invoice, goods have not reached me. What? 180 days I have not made the payment, supplier has not filed his 3B, right? So temporarily, if I have not got the invoice, I am temporarily reversing it. But when I reclaim it, where do I reclaim it? In table 41, 45, we know that, right? So due to this mechanism, we have the electronic credit reversal and reclaim statement. Can this be negative? What does negative mean? Negative electronic credit reversal reclaim statement means? Can anyone tell me? Means, here, let's see this slide. This is a negative amount. What does negative amount mean? I am parking certain input tax credit temporarily in my table 4B2 because everything is coming in my table 4A5 from my 2B, right? Now, goods have not reached me in the month of May. So I put that particular input tax rate where? In table 4A5. So I put 100 rupees as in table 4B2. In table 4B2, I put 100 rupees temporarily reversed, parked it. My opening balance is, for example, 100 rupees. What is opening balance of electronic credit reversal reclaim statement? Means if I have reversed something earlier for which I have not reclaimed yet, right? If I have reversed earlier but I have not reclaimed yet. So opening balance is 100 and in this current month I have reversed temporarily 200. Means 200 रुपया का input tax credit का worth माल मेरे पास में गोडाउन में पहुंचा नहीं मई के महीने में और पहले में 100 रुपया मेरा और ऑलरेडी खाता में पड़ा हुआ है temporarily. So 300 rupees is my temporary reversal of input tax credit. How much can I reclaim at any point in time? Up to 300 or above 300 also? Up to 300. This is electronic credit reversal reclaim statement. If you reclaim in table 4D1 and 4A5 more than 300, the statement becomes negative. Simple concept, right? Can this be filed now if it is negative? Can GSTR 3B be filed if your electronic credit reversal reclaim statement is negative? I'm talking about today's time. Can anyone reply? It can be filed with a warning. It's not a hard stop validation right now. Why? Because it may come in the future. What will be the warning? The warning will be here. ITC reclaimed by you in 4D1 is more than ITC which is available in 4B2 plus the opening balance. But you can still file. Do we need to rectify this? Yes. This advisory came in January 2026. Very important in the next few months. We may not be able to file our GSTR 3B in case if our electronic credit reversal reclaim statement has a negative balance, which means if we have reversed 100 but we are reclaiming more than 100. So then what happens? If we don't file 3B for 2 months, what happens? Can we generate e-way bills? No, our business will stop. So from the point of our business stopping till the point of our accounts, this is a very short way. This is very extremely important. This is the most important part of my presentation. Electronic credit reversal reclaim statement as on today in the month of May for 25-26 up to filing of your March return in the month of your April, or April return in the month of May. You need to see if it is negative. What do? Let's take this example. Ideal situation. What is opening balance should be 10, but mine is minus 15. This means Purana Pap. In the earlier months, I have reclaimed 25 in excess of what is available in my 4B2. So do I need to rectify this? Yes, I need to rectify this. How do I rectify this? Today I report 25, I reverse it further in 4B2. Right? So minus 25, it should be 10, it is minus 15. So minus 25 of my opening balance, negative balance of electronic credit means I have reclaimed in 4D1 in earlier months more than what was the opening balance in 4B2 and the 4B2 of all the months up to this month. Simple, right? So this 25 I need to reclaim where? In 4B2. Can you see 4B2 it's 15 for this month. I need to put 25 plus 15, 40. If I put 40 here, what will be the amount in 4C? Everyone knows 4C is the amount which hits our electronic credit ledger, is what we claim. Will it take a downward turn? Yes. If 14 I'm reversing temporarily in this month to rectify Purana Pap, so in 4C, what will hit my electronic credit ledger will be 15 less of input, right? So what will 4C be eventually? It will be 45 minus 25 means 20, means eventually only 20 input tax credit will be credited. But what will happen? In 4B2 if I have 40, now let's back calculate. 4B2 40 minus 15 of opening balance, it comes to how much? 40 minus 15? 25. And 20 I have reclaimed correctly in the month. What is the closing balance? 5. So electronic credit reversal reclaim statement has become positive. And it is correct. So what does this mean? This means in the moving months, you will have to pay out of your pocket if you don't have enough input tax credit. यहाँ पर तो बच गए 45 था 45 था ये तो 45 नहीं होता 0 होता. I would have to pay out of my pocket 25 cash. This is extremely important. Similarly for RCM statement also. What is RCM statement? I paid tax under RCM. I paid tax under RCM in table 3.1D. But I paid only, for example, 10. I've claimed in 482, 483, 100. So there is a negative of 90. So today what do I need to do? To proceed further with filing of 3B, I need to either reduce my input tax credit claiming to the extent of 90 or pay tax under RCM to the extent of 90 more, right? These things we need to see. There are many other slides also. You know, you can see rule 4243, which is reversal of input tax credit on common credit when you are having exempt supply as well as your taxable supplies. Due to paucity of time, we may not be able to go through each and every slides, but the presentation would be there with you. In case with your business income, in case if you are selling securities, so 1% of your entire sale would be considered as exempt supply, to the extent used for reversal of input tax credit under 4243. Very important. We need to have an annual true up. Every month we are computing the common credit for reversal if we are having exempt supply as well as taxable supply, but annually we need to true up. If annual reversal, annual exempt ratio is more, I need to reverse more along with interest. Very important. These are block credits. Okay, are we aware of new discounts? Circular 252, 251, you can go through this. This has come out recently only, that in case if you're just giving a normal discount, so there is no credit note which needs to be issued by the manufacturer, or there is no invoice which needs to be issued by the dealer. But if it's a payment made towards any planned advertisement activity, branding, co-branding, then there is a service element from the dealer, right? There is no input tax reversal in case of financial credit notes. All these things have been clarified. RCM, new intermediary rule. Are we aware of this? New intermediary rule. Let's see this example I put for you. From 30th of March, what's happening? Any intermediary service or any foreign commission agent, if you're taking any service आप यहाँ से दुबई में माल भेज रहे हो, पोर्ट में दुबई में you have hired someone who is going to do the intermediary service, माल clear कराने etc. You pay commission per whatever unit. So now what's happening? He's an intermediary, foreign intermediary. Place or supply for intermediary services, section 13 subsection 8 clause B of IGST Act, that has been removed and the default provision has come in. So service recipient will be the place of location. So I am the service recipient in Bengal. So place of supply in Bengal, foreign supplier, recipient in India. It's an import of service under section 2 clause 11 IGST Act. We need to pay RCM. We need to pay RCM and issue a self-invoice within 30 days. This is very important. And flip side, if we are intermediaries, so if we are giving services in relation to export of goods, then place of supply is not the location of the service provider anymore. It's the service recipient outside. It's an export of services. So you can go through all of these things. There are several other slides also, but of course we cannot cover all of these things. But I've tried to put in a lot of other real life notices, and I've tried to put in other specific points which need to be focused during finalization now or discussion with your auditors, or if you are a professional, you guys can go through each and every part of this. Rule 86B, corporate guarantee and all of those things. So thank you for a very patient hearing. The floor is open for questions. In case if anyone has questions, can ask me a few questions, or we can take it later also, one-on-one. So this is my contact detail. You can connect with me otherwise also, after the session, or in case if you have any queries in the future also, please do connect with me. Thank you so much for a very patient hearing. Thank you for being such a wonderful audience. Thank you so much.
Thank you, Mr. Tulsian. I request Mr. Shubroto De, Managing Partner, De Boshan Associates, and member of the Managing Committee of the Bengal Chamber of Commerce and Industry, to please be on the dais and present a memento on behalf of the Bengal Chamber. We will now move towards our next technical session on income tax. Issues in income tax 2025, preparation of taxpayers for implementation of new income tax rules forms. I request our next speaker, Mr. Ayush Goel, Partner, BAS and Company LLP Chartered Accountants, to please be on the dais and take the session forward.
So first of all, a very warm good evening to everyone. First of all, I'd like to thank Bengal Chamber for having me here, and also I'd like to thank Ishan because he has made my work a lot easier after having spoken so much, because now I assume that you need some time to first absorb all of what has been said by him before we move to direct taxes. So let's take a pause. Let's understand what we are now trying to understand. See, the topic which has been given for the day, or rather which is the buzzword for the last few months in the entire country per se, is Income Tax Act 2025, right? And associated with it is Income Tax Rules 2026. And obviously the forms which come along with such rules. So now let's understand as a business, what are the issues or what are the challenges or what are the necessary steps which we need to keep in mind. Because see, as we are standing here, it's already 50 days past the implementation date, right? So these acts were implemented from anyone? 1st of April 2026. And that obviously means the assessment year, right? No. Tax year. So first and the foremost change which you need to inculcate in yourself is absorb the feeling that something is no more and something is born newly. The concept of the tax year replacing the two jargons which we all have been using, whether we are a professional, whether we are a business person, whether we are an accountant or for any that matter, is assessment year and the previous year. So we have been accustomed to that. And trust me, why I'm saying accustomed to that, because in these 50 days, not only you, even us, when we are speaking to someone or when we are addressing it to someone, it automatically comes out in the form of an assessment year or a tax year, or a financial year rather, or a previous year. So that is the first step towards the adoption of the new Income Tax Act 2025, is the concept of tax year. If I have to say, tax year is nothing but the year in which you are earning the income, for which the Income Tax Act itself is applicable. Correct? I'm not giving you a legal definition because I assume you need to understand the overall applicability and not the legal jargons. So I'm using it for a working environment, that it basically means the year of income which we refer to for the purpose of paying taxes or filing of returns or whatever it may be. Correct? Second important thing, Income Tax Act is 2025 and Income Tax Rules is 2026. So only in my previous session, which was 2 days earlier, there was a question raised to me that sir, rules तो 2026 में आएंगे, यानी जो इनकम टैक्स एक्ट 2025 में आया था, अगर वो 26 में इंप्लीमेंट हो रहा है, so income tax rules which is coming in 2026 are being implemented from next year. So is this understanding correct or wrong? Again, I am putting this pertinent question. Income Tax Act being passed in 2025 was made applicable from 1st April 2026. Income tax rules being passed in 2026 is being made applicable from 1st April 2027. Is it correct or is it wrong? Answer is it is wrong, obviously. But then comes the next question. There are a lot of forms which are associated with the new rules, but shall be applicable only in the filing for the next year, or rather filing in the next financial year, pertaining to the current tax year. Say for example, let us take the simplest of forms, which is a tax audit form. What is the tax audit form which we have been using since today, till today? 3CA, 3CB and 3CD. What will be the form which will be filing in this period of today onwards till September? The new form for everyone to know is form 26. Correct? So, अब जो आप form file करेंगे, what will be that form? Will it be form 26 or will it be 3CA, 3CB, 3CD? Why? अभी तो हमने, we all discussed that new rules have been implemented. With new rules comes the new forms. With new form is 26, then why 3CA, 3CB, 3CD? Yes. It is because that form which will be filing is pertaining to assessment year 26-27, which falls under the Income Tax Act 1961. Correct? And for that very reason, anything dealing with Income Tax Act 1961 shall be read in consolidation with Income Tax Rules 1962. And for that reason, the old form will continue till the time it is being filed for assessment year 26-27. And once we shift our working from assessment year 26-27 to tax year 26-27, see, year is same, only the word, the prefix of assessment year changes to tax year, but that changes the entire year itself. Correct? So once we do that, any example of a form which we need to file now and file under the new ITR rules? Very simple, any form which you do probably daily or frequently. Sir, if you are dealing with foreign payments, 15 CACB. If you are dealing with, obviously most of us will be dealing with tax payment, TDS returns, the erstwhile 24Q, 26Q. Correct? So all of this will now be filed in the new forms. We'll be discussing the forms in overview, obviously. But this is the first challenge. You need to understand. Where is the, acha, let me correctly take you to a particular section. Acha, a lot of people come back to me and ask, sir, how do we actually understand which section number has become which section number, or which form has become which form? So is there a particular place where we can get a hold of all those things? You need to go nowhere else and just visit the income tax website. See, the entire comparison tool is given here. First is utility to check provisions of Income Tax Act 1961 vis-a-vis Income Tax Act 2025. Then in rules also there are, sure. I think this was only linked. रुके मैं कर दे रहा हूँ. आ गया ना? ठीक है. So see, if you can see there, utility to check provisions of Income Tax Act 1961 vis-a-vis Income Tax Act 2025, and then when you go to the rule section, there are two utilities. Prima facie it looks same, but if you read it out, utility to check provisions of Income Tax Rules 1962 vis-a-vis Rules 26 and forms under Income Tax Rules 1962 vis-a-vis Income Tax Rules 2026. Just a moment. See, I'll show you here. Supposedly we move here, right? Say a form which we are discussing, say 15 CA, right? So automatically it furnishes the new form number. What is that form number? 145. Is it the same form number for 15 CA CB, or is it a separate form number for 15 CA and CB? Correct? So anyway, you can click on this form and it will directly show you the new form as well. Another good feature in this particular thing is this. Supposedly we talk about the Income Tax Act. Acha, anyone knows what is section 63 of the Act? Sir, again a section which you will or which you rather have been using it quite frequently. Tax audit. See, if you put section number here, which is 44 AB 63. Why is it referring 58 as well? Because 58 refers to 44 AD, ADA and things like that. So because that has also been referred to in 44 AB as well. So here corresponding sections, all the sections which refers to here is being shown here. So supposedly you click view on parallel reading. See, there is an option. See the beauty. 44 AB and 63 open simultaneously. So from a user perspective, this is a very good tool which we need to use, or rather start using to be able to understand what is the difference. And why I have opened this is to basically show the difference between the two acts. Why I have chosen this section only to show you this parallel reading is to basically show you a difference between the two acts. So see, in a general parlance, whenever we have been hearing about the new Income Tax Act 2025, we have been made to understand that there are no major changes apart from three things. One is restructuring, one is rephrasing the words, and one is putting the formulas. And one more thing, basically resizing, if I have to say removal of redundant provisions and everything. Apart from that, there has been no major changes. Leave aside the changes which has been introduced by Finance Act 2026, because that has been introduced in both the acts simultaneously wherever applicable. But apart from that, there was no change. But see, here only I will show a change. Read this point if you can read it out. Anyone, or shall I read it out? If the person, I'm talking about the new act, Income Tax Act 2025. If the person is carrying on business or profession, referred to in section 58 or 61. What is 58 or 61? 44 AD ADA. Okay? And the profit and gains from such business or profession are claimed to be lower than the deemed profits as referred to in the said section. The point of emphasis is on the words business or profession. Correct? Now let's read 44AB clause D. Carrying on the profession shall, if the profit or gains from the profession or are deemed to be the profit or gains of such profession under 44 ADA and have claimed such income to be less than the profit and gains deemed to be such profit and gains of his profession, etc., etc. Again, the point of emphasis is only presence of word profession. Are you able to get the point? So this might seem as a very typographical kind of a change, but it is not. It has an impact. What is the impact? Let us understand in form of an example. So understand with an example that supposedly there is a person with a turnover of say 80 lakh rupees. Right? I think all of you have a pen and paper, so if you want you can write it down as well. They have a turnover of 80 lakh rupees with a profit of say 4 lakh rupees. I am talking about a business. Turnover of 80 lakh rupees with a profit of say 4 lakh rupees. Whether or not they are required to get their books of accounts audited under the old law, that is the Income Tax Act 1961, and would your answer change if we are referring to Income Tax Act 2025? Simple question. Everyone was able to understand the question? Anyone who needs a repeat for the question? Fine. So I am expecting a good answer because I have already shown you something here. So I am expecting a good answer with a good reasoning. Let us take a moment or two. Maybe I will have a sip of water so that you can have your answers ready. And understand, see, I know this is the last session for the day, but trust me, I will make sure that with this example you will understand this difference throughout the time this difference is being kept between the two acts. I was about to say throughout your lifetime, then I was made to correct myself that probably next year hearing this they might change the old act as well. Tell me anyone, so we'll not spend a lot of time on this. Anyone would like to just put in some light or some thoughts on it? Right or wrong doesn't matter. We all are right, we all are wrong. Yes sir, please. You can sit and tell, we all will be able to hear. Audit is not required.
New Act of 2025 where profession is mentioned. So professions refer 75 lakhs turnover. Against that you have to get it audited, and if it is less than that, then it's
So I'm
50%.
talking about business, profession nahi hai example,
Yeah, yeah.
business hai. So what sir has said is correct. I'll rephrase it, what sir has exactly said. In the old act, see there are 5 particular provisions in 44AB under which the accounts can be audited. In either of the 5 points, this provision is not considered. It was only for profession that such point is applicable under 44AB clause D. However, while redrafting it into 63 of the new act, it has been changed from profession to business and profession. So then in the profession, because it is an eligible assessee under say 58 or the erstwhile 44 AD, and because it is showing profits less than 6 or 8%. So 6% comes to 4 lakh 80 and 8% comes to 6 lakh 40. Our example, it was 4 lakhs. So it was less than 6 or 8%. So in that case, the audit will be required under the new law. But under the old law, that is 1961, because of absence of such provision for business and only applicability of such provision for profession, such audit was not required. So these are some inherent changes which, so the point of telling you this change was, whenever you read a provision of the new act, for a certain period, make it a habit to have a point-wise understanding or comparison with the old act. Because there might be some inherent points which may or may not differ the entire scenario between the two acts. This being a classic example. This point, I have, at least to my limited knowledge, have not seen this appearing in any of the FAQs or discussions which has happened post the implementation of Income Tax Act 2025. To my limited understanding and to my limited knowledge. May or may not have happened, but to my knowledge it has not come. But this is a key and a vital point. Correct? The other key issues which may or may not arise, obviously the light of the future will tell us, is the subjective applicability of settled case laws in the earlier regime of Income Tax Act 1961. A lot of points, a lot of acts, interpretation have been done and have been settled in the old act terminology. But since the terminology or since the manner of phrasing of the words has changed considerably in the new act, so it might lead to a fresh litigation just to prove the old point again. So where any of the business scenarios amongst all of us is prone to such points being explained in the specific business case scenarios, may have to cater to it once again in the new act. So that is one thing for which you need to be ready and need to be well prepared. Secondly. Third, and the very important thing which I will show you now, it's not opening, maybe net is not. Any idea what is section 247 in the new act? Are you able to see? Search and seizure. See, the purpose, I'll share the background with you. So, in earlier, if I have to say search and seizure provisions, there were provisions regarding the normal books of accounts, probably tally software, accounting software and things like that. Now an additional thing which has been incorporated and which is subjected to be analyzed and acted upon during the search and seizure procedure is digital spaces. What do we mean by digital spaces? Digital spaces is your cloud system, cloud softwares, means your Facebook account, means your Twitter account, means your LinkedIn, means anything which is there in a digital era. And trust me, if at least if the provisions have to be read lyrically, if they feel, the officers feel that it might lead them to unearthing any additional undisclosed income, they have or they can, with approval, forced entry into such digital spaces. They can break open passwords. They have been authorized, obviously with approvals, to do that. So then comes the question of the data privacy. So this again, what we have been made to understand in various discussions post the Income Tax Act 2025 is that this will only be used judicially and without entering the personal privacy space of any of the clients or the business or the person being searched upon. But how judicially will it be used is only dependent on the cases which we will observe in the coming future. But this is something, so you need to have proper rationalizing of passwords, because I've seen people whose Facebook passwords and whose probably bank passwords are the same. Because you may or may not need to give your password of a, I'm using the word Facebook, but it can be any account to your authorized officer. So that might lead to other circumstances as well. I'm just being a devil's advocate and telling you. So these are the things you need to be well aware of. You need to know your rights and duties. You need to understand where to put a line, what to show, what not to show, and how to actually present before them, because they have a right to access to your digital spaces now. Right? Apart from that, the good things which has been done is obviously a rearrangement. Like if I have to talk about a specific chapter of, say, charitable trust. So earlier charitable trust provisions were spread across the entire act, ranging from section 11, 12, 12A, AB, 13, then to 80G, then to 115 TD, etc., things like that. So it were placed over all the other things. So now what has happened is that it has been consolidated and put under one chapter. So that makes your referencing and your reading easy. Like section 10. There was a very famous subsection to that. Anyone? Most used subsection of section 10? No, 1023C. Which has n number of provisos, n number of explanations and things like that. And section 10 itself used to run into pages. Now what has been done? Section 10 has been entirely shifted into tabular formats, or which is called schedules. Schedule 2 to Schedule 7 now talks about all kinds of exempt incomes. So it has been categorized into various tables and has been put accordingly. So that again makes the referencing easy. But with every pro comes a con. So this table thing when is maybe a boon as far as this exempt income is concerned, but becomes a curse as far as TDS is concerned. Because आप लोग को अब तक याद हो गया था 194C, 194J, है ना, 194H, सब कुछ याद हो गया था. बट अगर मैं आपको अब बोलूं कि सेक्शन 393 टेबल 1 क्लॉज 6 सब क्लॉज 2 क्या है? अरे सर एक को तो याद था. बट सी जहां पे आपको 194J बोलना होता था, अब आपको क्या बोलना पड़ा? 393 टेबल 1 क्लॉज नंबर 6 सब क्लॉज 2, whatever you term it. So अच्छा, ये दिक्कत यहां नहीं है, ये दिक्कत आपके चलान पेमेंट में भी आ रही है. If any one of you have practically, so भैया was party to it, हम लोग last time भी discuss कर रहे थे, and भैया was the pioneer in discussing that at least the challan payment should be streamlined. So obviously भैया raised it at a very right forum as well, so kudos to भैया for that. Apart from that, so these are the challenges which you will also face. Like 393 table 1 point number 1 becomes your commission and brokerage, right? So these kind of references, also understand this reference is not only limited to your TDS return filing, it will also show in the 26 AS accordingly. पहला बात तो 26 AS का फॉर्म नंबर क्या हो गया सर? 160, करेक्ट. दो अब सर हम भी वापस ना 2-3 बार रेफर कर लेते हैं. वैसे 169 नहीं है सर, नहीं रुकिए. And I have no hard feelings in accepting कि even we are not well aware. Just a moment, let us see from here only. क्यों इसमें नहीं दिखा रहा है, which I know. Just a moment. यहीं पे आपका ये काम आता है, utility to check old forms. चलिए, तो in the meantime ये आ रहा है, तो आपके वो सारे जगहों पे, इनफैक्ट आपके ITR में भी जब आप TDS शेड्यूल भरेंगे, तो वहां पे भी वो वैसे ही रिफ्लेक्ट करेगा. ठीक है, तो that is another one important thing. So these are the things which we need to understand about the act. Now talking about the, अच्छा, one more thing which we need to understand about the act, which is a very good change. Let us go back here, I'll be able to show you. There is a concept which has been introduced called interpretation sections. Anyone having any idea what is that, if someone has gone through the act itself? What are these interpretation sections? Supposedly, let us talk about 194J. See, there is a section which is coming called 402. We all know the TDS section now is 393. But there is an additional section called 402. What is this section? Understand. And that understanding will be framed from the first few words. For the purpose of this chapter, understand, there are various chapters under the Income Tax Act, like there might be a particular chapter regarding charitable trust, Acha, for that matter, earlier there were educational institutions, charitable trust, medical institutions, etc. Now it has been coined into a single word, which is non-profit organizations. Correct? So there, like I was speaking, there were various chapters to it. Like there is a chapter on income, say exempt income, there is a chapter on say modes of computation, then there is a chapter on say charitable trust, there is a chapter on TDS, TCS, etc. So after every chapter, or rather most of the chapters where it was required, an interpretation section has been introduced. This interpretation section contains explanation in the form of definitions, which is relevant only for that particular chapter. Mind it. The applicability of this interpretation provision is only for that particular chapter. Now, as a matter of habit, what you need to do, supposedly you need to find a definition of any word used in section 393. Then it falls under a particular chapter. Check the interpretation provision of that particular chapter. If it is explained there, then that is the applicable understanding. If not, then go to the general explanations of section 2. The definitions, the general definitions of section 2. And if not in 2, then to the other acts. Clear? Understand how this pattern now will flow? Earlier what used to happen, we used to directly either refer to the explanations in that particular act or in that particular section, or the either ways used to go to section 2. Now for easier interpretation, any definition which is required to be explained for a particular chapter has been incorporated in the form of an interpretation section at the end of that particular chapter itself. Clear? Great. So these were the few things which I wanted to share about the Income Tax Act. Now talking about the rules. What has changed in the rules? In the rules, again, the methodology, the terminology and the essence remains the same, which was in Income Tax Rules 1962. But probably what has changed is the fact that a lot of procedural requirements which were earlier part of the act itself, making the act bulky, has now been shifted to the rules. Because ideally also the procedure are deemed to be contained in the rules. The act talks about the provisions and the applicability and the law per se. But its procedural following is to be read in the rules. But because of the rampant amendments which have been done in the past, some of those procedures were incorporated in the act itself. Now it has been shifted to the rules. Obviously, a lot of redundant rules have been done away with. A lot of rules which were relating to a particular action point has been merged and things like that. So rationalizing provisions have been done for the rules as well. Important thing is the forms, as we have discussed. A lot of changes has been done in the forms. There were over 390 forms. Now it has been summarized to 190. Like we discussed, 26 AS, 3CA, 3CB, 3CD, 15 CA, CB, everything has changed. Few of them have been merged, like 3CA, 3CB, 3CD, have been merged into Form 26. So Form 26 basically now has 4 parts. First being 3CA, erstwhile 3CA, second part B being the erstwhile 3CB, part C and D being the erstwhile part A and B of 3CD. Correct? So that's how the forms have been changed. Now, as a method of practice, what you need to do in your, and which I assume most of you have done, is to change your general ledgers and everything as far as the TDS term rates are concerned, or wherever you have referred to a particular TDS section and things like that. So that needs to be changed in correspondence to section 393 of the new act. For act, the changes or the things to remember we have already discussed. For forms, you need to understand for which year are we filing that form. Acha, this section 536, let me discuss about that as well. This again is very important. Let it come, we will discuss that. Any idea what is this 536 section? Repeals and savings. So this particular section shall be your Bible for the next few transitional years, as far as your refunds, as far as your interest, and as far as your pending litigations and fresh litigations are concerned. Let me take you to the point C and D. The provisions of the Repealed Income Tax Act shall continue to apply to any proceeding pending on the date of commencement of this act, and to any proceedings initiated on or after 1st April 2026, including notices, assessment, reassessment, recomputation, rectification, penalty, reference, revision, appeals, in respect of any tax year beginning before 1st April 2026. And such proceedings shall be carried out as per the procedure specified in the Repealed Income Tax Act. That means, supposedly for assessment year 26-27, even if a new notice has to be issued today under say section 148, then the old law will prevail and the old law will be followed. Are you able to understand? Till the time we are dealing with any procedural requirements, any assessments, appeals, up till assessment year 26-27, it will be done under the Income Tax Act 1961 and not Income Tax Act 2025. And then there are obviously other points that the repealed act will not seize your rights as for refunds or interest or your liability towards demand, interest and things like that. So section 536 basically forms then the Bible as a business house, that if you have any pending refunds or pending litigations or a fresh litigation being initiated, then under what process or procedure it will be initiated. So we have talked about the forms, we have talked about the rules, we have talked about the act. So this is what I had to share as far as the preparedness is concerned. Obviously, I am not going into the greater details of specific section-wise discussion, because then that is a separate discussion altogether. So any of you who has faced a practical difficulty in these 50 days of implementation, or would like to raise a query or discuss something, so then the house is open until the time we have the permission. Anyone would like to share, or obviously it may or may not be a question. It can be a simple sharing of your experience as well, which can be beneficial for the wider audience here. One experience we can share, or rather I'll share, as a consultant, what is happening with most of us is that even if we are giving consultancy today, the client and us both are comfortable in the fact that we refer to the old sections, we refer to the old provisions, we make them explain accordingly, and then probably introduce them to the corresponding new section and the wordings thereupon, maybe in the form of a written reply or in the form of a written opinion. But in terms of expression, still that has to take its own sweet time to actually go into the new era. There has been circumstances when Income Tax Department has issued certain notices under the new act, and the client become very threatened by those notices and comes back to us, ki, what is this section 246? It's nothing but 131. But the client is not accustomed, so he gets scared. So that comfort with the new act is still in an ongoing process and will happen in its due course. So if you are in that process, trust that it is the common for all the business houses. We are still engaging with a lot of business houses in getting their processes and accounts streamlined as per the new act. And obviously also making them have certain training sessions with respect to their particular organizational specific requirements under the old versus the new act. Because that needs to be done at the organizational level. Otherwise, this shift from old act to the new act, where not only the section numbers but also the wordings and the understanding of the formulas and the schedules have changed. So that needs to be properly passed on to the people who are actually carrying the activities on a day-to-day basis. Right? So that was my experience. Apart from that, anyone would like to share anything? Then thank you so much for having me. Hope I had been able to add some value to your experience of the act, the new act. And trust me, learning is a process, so it will take its own time. Thank you so much. Thank you.
Yes, Jalanji, very good evening and thanks for this session, and very good evening to all. Do not know whether I have very simple three questions. I don't know whether these are specifically related to the whole session, because I am from customs background and I'm heading the EXIM division of Skipper Limited. So
Sorry?
EXIM division of Skipper Limited. EXIM.
Okay. Okay.
So I've got three small questions. I'm simplifying this to take a shorter time. First is that regarding advance authorization, we filed an advance authorization license, and there was a portion of some fabrication under advance authorization license, export under advance authorization, and then some portion of that under drawback. So mistakenly,
Under?
some portion under advance license,
Huh.
some portion, under scheme 3, and some portion under scheme 19. So mistakenly, some of the portion of scheme 3 has been put as, taken out from the drawback. That means we have overshoot the export obligation. What was to be exported, showing the advance license, we mistakenly did this. Now we, as a result, we missed some drawback section. So is there any way, to retrieve this drawback?
This is a very specific. You
Specific
took
question.
advance authorization.
Yes.
And in the shipping bill, did you mention that
Actually,
drawback?
we had to export 100 tons. I'm just simplifying it. I had to export 100 tons, showing that license. So against advance license, I won't claim any drawback on road table, nothing. And mistakenly, I exported 120 tons. So 20 tons export, I missed the drawback.
And
that
you
was
missed
a
the
mistake.
So why don't you go for an amendment under section 149?
That is the problem. Is there any provision? Because there are two sections we all know that the Ministry of Commerce and Ministry of Finance. Ministry of Commerce deals with the DGFT, and then we have to go to PRC, Process Relaxation Committee. And first we have to go to the Ministry of Finance, Customs. Customs is not, entertaining me. So is there any other way?
Why not?
Because those shipping bills which I am talking about, these drawback and rot tape needs individual amendment. But during these days, after 2015, I have seen that customs are disallowing any amendment request, individual amendment request. There would be an amendment certificate. So that is my question.
I am replying one by one.
Yes.
First of all, how long, when did this happen? Had this happened after 2025?
No, this is
No.
actually.
So then 18A is not applicable. So you have only two options. One, either go for reassessment or you go for 149 amendment, right? You can go for section
Amendment
149
certificate
amendment.
is possible, but that
Ah.
amendment certificate would not serve the purpose because drawback committee would be disavowing this because the individual amendment would be required. That is the problem.
Individual as it, there is only one shipping bill, right?
No, there are multiple shipping bills.
Then why it will be not possible, 149?
Because customs
you,
would give me.
you exported you exported instead of 100 tons export obligation, you did 120, but balance 20 you could not tick that drawback, right?
Yes.
Thing in the shipping bill.
Actually, that 20 ton means the proportionate export. Means for exporting that
In
20
some of the
tons
shipping
import
bills, it is a
portion.
proportionate,
Yes,
right?
yeah.
So go for that individual. If it is not possible, then you have to go for bill of entry reassessment, shipping bill reassessment. Either 149, but I would say try 149. Have you tried 149?
No, actually, that is what I intended to raise this question in front of Mr. Srinivas Iyer, but he left in the first session. So, is there any option? Because the individual assessment would not be possible.
See, 140.
I have received this from customers.
No, you can try 149. Go to the officer because and 149 is now there is no automated system, right? 149 has to be done manually only. So you go for the bill of the shipping bill. This thing amendment under section 149, and if the officer does not do, then you go to the chief commissioner. Mr. Shravan Kumar couldn't come here because he has just taken charge. Maybe the top officials might be able to have. If not, you have only one option to appeal against the rejected order.
Okay.
That is my.
Okay.
Any other question?
I had one more, but I'm just allowing others to,
Yeah. Anybody else? I think we have come to the end of a very long session. CCT has called up. He has sought apology that he's preparing for a lot of meetings because he's just taken charge. He called up and he has offered to come next time, but this time he could not come. So thank you again very much for everybody for joining. Ayush, Ishan, and all other speakers for taking the sessions. Thank you, everybody. And a special round of applause for our secretariat, Shorbani, Shumona, Ohendrila, right? Acha, there in this GST those stall, you have some books on artificial intelligence. So they are complimentary. So they are complimentary also. Applicable only to those who have stayed till the end. Okay, so kindly collect that, and all the PPTs will be shared with all the participants. Thank you very much. Thank you.
Thank you. I now request Chairperson to please present a memento to Mr. Ayush Goel. Thank you all for joining. Please visit the GST Do stall and the Taxman stall before leaving. They are here throughout the day with us.